the forgotten one is up 1.5 points. But as you alluded to, the crude oil markets are the most interesting thing here in terms of what is selling off aggressively. Crude oil, the front contract is down 7%, but I think more telling, the backwardation in the crude oil markets is getting zapped out of here.
Yeah.
We no longer have a steep backwardation, 78.90 in the front, 76.90 the next contract. So that has been cut in half. We had like a 4 or 5 point backwardation that's sustained for the last couple of weeks. But with this sell-off today, we are seeing that backwardation get more flat. So that tells me if this continues, that is kind of the cue for things calming down.
Yeah,
overseas.
it's looking like that so far. I know. I think the last headline that I had seen around oil was, I believe Trump pulling out some of the U.S. troops from Bahrain, and I think it was Kuwait. I think that was like one of the last headlines that I had seen, but I don't know how that's going to affect the overall market. But to the point that you just made there, it's looking like that backwardation is finally getting zapped out of there. Because it was pretty steep at one point, just about like 7 days ago. I think that backwardation was pretty steep. So definitely dwindling out.
Yeah. We do have some more earnings this week, a handful of them actually. Not as many big names as a lot of your Mag 7 stocks reported last week, but that doesn't mean there's not some fun on the horizon. So you got, Palantir after the close today. That'll be a big one that we can take a look at. You got Pfizer, Caterpillar, McDonald's, AMD, SpaceX tomorrow, Lilly, Shopify, Uber, Disney, SanDisk, Western Digital on Wednesday. That'll be crazy. AppLovin, also another fun one. And then Thursday, DraftKings, Airbnb, Celsius, love that. Datadog on Thursday. And then Friday pre-market, you got Wendy's, Oklo, Mr. Energy. So kind of a mixed bag, which I think will be interesting because we've seen the sector rotations in these markets. And this is kind of your big sector rotation week in terms of earnings.
Yeah, it is. I think it's going to be about 20% of the S&P 500 is going to be reporting earnings this week, if I'm not mistaken. Looking forward to SpaceX. I think you mentioned SpaceX there. Yeah, I'm definitely looking forward to that. I still got the original position on from the IPO week. Maybe about 15, 20 days left. So maybe we can get out of a hole on that one. But looking forward to the volatility.
Yeah, this thing has been sliding aggressively.
It's been the same story every day, it feels.
Yeah. The only thing I have on is that longer term Super Bowl position. But I did put on a ton of stuff, bullish positions in the Mag 7s last week, Apple, Amazon, Meta, Microsoft. So that should be a nice open, at least for now. And then some crude oil positions coming in too. The Iron Condor, I've got 70-90 short strikes, 14 days out. That's up 50%. So I can close that one into this slide here. And then this straddle I've got on, just been rolling up and out. And now we are in the money on the put side, which is a lot more feasible in terms of trying to avoid a big rip higher.
Yeah. So when you say up and out, you're rolling the strike a little bit and you're adding a little bit of time to the contracts.
Yep.
Okay.
Yeah. And the nice thing when we were in that steep backwardation is when you rolled out in time, you were also rolling to a lower price. You didn't really have to.
Because it's cheaper in the back months.
Yeah.
I see.
So you didn't have to manipulate the strikes, but I still did just to follow the current price of it. But
yeah.
What do we got today on deck?
We got a pretty fun schedule for today. So we're going to be looking at, hold on, let's see if we can get this right here. There we go. So we got our morning movers, right? We just went over our morning movers today. And then we got Gus coming in at 8 today, which is going to be great. Curious to see what he's going to be whipping up. I know he has some of the most interesting insights, when it comes down to some of these market movers and what these companies are doing. And then we got Liz coming in at 8:15 today. And then we got the opening bell coming at you at 8:30. So just a little bit less than an hour, we're going to be getting into that. And then after that, we got 9 o'clock. We got Dr. Jim himself inside the trade. Going to be breaking down the anatomy of these trades a little bit more. Then we got 9:20. We got Tim Knight coming in. 9:30 is going to be Julia, of course, with the Tasty Research team. And then 10 o'clock, we're going to have Confirm and Send with Chris and Liz. Great duo, fun personalities. And then at 11:30, we're going to have Trade of the Days starting out with Gus. Then we're going to be passing it to Mike over here. And then we're going to be passing it to myself at 12 o'clock. Then at 12:15, we got a guest of the day, right? We got a couple guests on the day and a couple of them right here.
Yeah. Kevin with the last trade of the day. And then we've got Amit Kukreja at 11 a.m. and Kevin again for that trade of the day. And then we're bringing on Jem Karsan. He's been on a couple of times. We just had him on last week, I believe. Everything's blending together. But he's going to be a more consistent contributor to the Tasty world with Tasty Crumbs Mondays at 3 o'clock Central. So that'll be fun.
Yeah, no, I tuned into what you guys were getting into from last week, so curious to see what Chris has to say. I know he's speaking a lot about momentum and things like that. It was an interesting perspective, so curious to see what he has to say on a regular basis.
Well, speaking of, we do have Chris Vecchio on the line. Why don't we bring him in?
Yeah.
See how he's doing this morning. Chris, happy Monday.
Hello, gentlemen.
Howdy doody.
Good morning.
How are we doing today? Yeah, pretty good.
Yeah. Crude oil
I'm
down,
looking. I
market
cleared.
up.
I unloaded a lot of my risk on Friday. We spent last call on Friday being basically like a therapy session with TP. TP, what do I do with this position? Do I take it off? Do I put it back on? So this is a good chance with the earnings that are due up over the next 48 hours to kind of take a fresh look at things, reload the book. I know Palantir today is probably the only name that people are going to draw some interest to. Vertex Pharmaceuticals, VRTX, pops up on a scan of mine as well. But yeah, the next few days are certainly going to be interesting as we get Fed speakers back online and we get ready for non-farm payrolls at the end of the week.
Mm-hmm. Yeah, Palantir's up 3 points pre-market, but they do have a sizable implied volatility for earnings. 14 points for the week on $123 stock. That is over 10% of the notional value, which is always a big earnings implied volatility, but that's also a big ratio when you compare the 4-day to the 18-day or even the 46-day. 14-point implied move today, only a 19-point implied move for September. So huge implied volatility relative to time in the weekly cycle. So we should expect to see some movement on Palantir.
Yeah, I mean, I'm looking forward to it. No, go ahead, Chris.
No, go ahead, Errol.
No, I mean, I just haven't heard too much about Palantir after Michael Burry was unloading at a lot of his positions, and I know they've been taking a beating lately. So, again, earnings season is kind of nice to see a re-spark into some of these names. So we'll keep an eye out for it.
Yeah, I mean, Palantir fundamentally is a software platform, right? And so last quarter it had, 85% revenue growth, and the stock still got ultimately punished over the next few weeks.
Yeah.
So like so many of those other companies, it's a different question than the hyperscalers, which is like, you guys are spending all this money on building these data centers. Are you making any money on this along the way? Palantir is a little bit different. It's more about whether they can see that their enterprise growth, business to business, is growing, and that the demand on the government side is substantial, which for those that are following it closely, it does seem like Palantir has had a fairly significant role in the war in Iran, for what it's worth. But you have this is a high multiple software company still. And so unless it's a really clean read, you probably get some issues here. I would track the broader software space generally, though, which is having a nice rebound. And even pre-market here today, something like ServiceNow, for example, NOW, that's back up to 115 pre-market. It closed at 111.26 on Friday. So software is having a little bit of a nice bounce here pre-market, just as the semiconductors are starting to come off a touch.
Yeah, I took a look at all the Mag 7s. Every single one of them is up pre-market pretty sizably. But yeah, Micron down 35 points pre-market, SanDisk down 50 points pre-market. So the classic rotation that we've seen time and time again. But crude oil backwardation is almost non-existent. What do you make of this market?
Well, I'm still long a put spread in crude that's expiring in 14 days, the 98.97 that I put on several weeks ago when crude was breaking down, and then I got greedy, so I didn't take it off when it started rallying from 70. So with today's move, I think I can finally take this off. Oh, $19.81. Not bad. Here's the thing. It's a 95-cent credit still. So do I want to take this off? No, because I could probably juice it for a little bit more. What I did at the end of last week, though, with TP, we did this last night on First Call. One of the checklists that you go through is, would you put the position back on? And one of the math questions that you ask yourself is like, if I were to go back to the market, if I'm short of put spread, like I was short of put spread in crude last night that we took off on First Call at 63.62. And it's like, would I put this back on as crude oil's collapsing? Well, I look, it's a dollar-wide strike. The credit received was 3 cents to put the trade back on. No, I don't need to grind this down from 3 cents to a penny. So the trade was taken off. I think that's really where I'm at today. I did sell some iron condors last week, which, the market bounced. It's coming back in a little bit. That's fine. The oil volatility coming in is perhaps the biggest noteworthy move here. Week over week, for example, crude oil vols down 15.6% right now. So yes, there's a big directional move to the downside, and if you're leaning short deltas here, you're probably doing well. If you were short a call spread, if you were long puts, today's a very good day for you. But the broader picture here is still one of a lot of churn and a lot of chop. Mike, I don't know if you guys have noticed this, but yes, the curve may be backwardating, but the floor is also rising as you go to those back month contracts. So it's not a typical tasty trade, but one thing that we've been playing with here is going all the way out to the November 17th expiry and selling the put spreads below 70 when we get dips in the market. So right now, CLU6, for example, is sitting down 6.73%. CLZ6, on the other hand, that's only off by 3.55%. So it's no longer 9 months between March and December, right? We're talking about something that's 4 months away at this point in time. So December is going to be a little bit more sensitive to some of these supply risks moving forward. But the fact of the matter is that when you're looking at the curve, the sensitivity is really at the front end. And when oil calms down, it's calming down to a higher low, a higher floor than it was previously. And that makes a good deal of sense, given what we know what's going on in the Middle East.
Yeah. Yeah, it's been an interesting slide, somewhat of a predictable slide. I didn't think we would get up to the levels we saw in the first go around with the 15-point backwardation, and now we're seeing this thing slide back down. But yeah, I think it's a situation that you have to continue to monitor. Nothing is ever done, it feels like, over there. So it could be a scenario where if we drop back down to 70 or sub 70, like that's when we're getting back in a bullish sense. So.
Color me skeptical on a deal coming together before midterms. If you're Iran and you want to extract the most amount of pain from President Trump in the United States right now, you grind this out for a few more months. We're running out of missiles. The Wall Street Journal just had a report over the weekend showing our missile inventories. It's like, we're running out.
Not great.
That's it. No, not great.
Not
like
great.
We won't have any more for anything.
And what's interesting too is like USO. We haven't talked about this too much recently, but USO is really the beneficiary of backwardation if you're playing it to the upside. So if you see this crude oil curve flatten out, which is exactly what we're seeing with the lack of backwardation here in these near-term cycles, USO is going to start to drag down because there's not that backwardation to keep it propped up. You saw this go from 68 to 150 during the first war introduction. And then you saw it slide as crude oil flattened out. And then once it got down to here at like 100, we actually put on a call diagonal spread here, playing for a re-backwardation in that market. And that's exactly what happened. But this is, down 10 points right now with today's move. So just keep that in mind. If you're playing for a flattening of the curve and a depressed price in crude oil, USO is going to really benefit from a bearish position standpoint. And then if you're playing it from the opposite side of things, if we see crude oil flatten out and the backwardation get out of there, but we see that price stay depressed and you're playing for a rise back to 100 and a reintroduction of backwardation, that's when USO can really pop. And you saw this thing go from 100 to 150 in just a couple of weeks when we saw exactly that happen. So just keep that in mind. If you're playing that curve movement, you can really use USO as a nice vehicle for that.
Yeah, and USO specifically, because it holds futures contracts. What it's doing here when the curve is in backwardation, it's generating positive roll yield. So let's say at the start of a given trading month, USO buys oil at $77 a barrel, and it rises to 80. And that's now the spot price. And at the next month, they're able to roll forward. They want to keep their position, of course, because it's an oil fund. So now they have to go out and they have to buy more oil. They have to roll out their position. Now they're going out and oil is now $75 the next month. So they're able to take the capital, they're able to buy the same amount of oil for less money, and then they're able to capture the difference here. So the USO return is insulated, so to speak, during periods like this. If backwardation remains, right, USO could see smaller dips than oil itself, because that's how ultimately this fund is able to make money, right? It's one of the benefits of holding USO versus just oil futures themselves.
Yep. Yeah, USO is basically a parallel to playing VIX to the upside when VIX futures are going nuts. Like, it's a very similar thing when you look at the makeup of these funds. So USO specifically can be ebbing and flowing with that crude oil curve for sure.
Yeah, and then like the other side of that coin, though, Mike, is that if President Trump and the Ayatollah get together for a handshake and to declare peace in the region, right, and the curve goes into a contango, so where the front month is lower than the next month's out, USO then has negative roll yield, and so every time they have to roll forward their position, they're selling a lower price contract and they're buying into a higher priced one. So USO is good when the market's backwardating. When it's not backwardating, it's not something I even. Yeah,
that's for sure. Yeah, but yeah, great breakdown there, and that's how you can trade this thing. If you're looking to trade that curve, it's an interesting product for sure.
And that shape of the curve is why USO has different returns than oil itself during various periods of time. Just put a cherry on top.
Yep, 100%. E-minis are up 45, Nasdaq's up 60. Interesting morning so far, that is for sure. But yeah, going back to the earnings watch list here. If you sort by earnings date, you've got some that are reporting after the close today. Like we mentioned, Palantir will be interesting. Tyson Foods. Like this is an interesting week because you have so many different companies reporting. Where last week it felt like really tech heavy.
It's all the big names.
Yeah.
You know.
I just need 20. I just need 35 more points than he has here. I had a spectacular top tick on ES on July 6th. The market peaked at 76.02 that day. I got long at basically 76.01. And I've been holding this thing the whole time. Let me tell you, not been fun. 3 days ago, I was sitting here like, what am I going to do?
Yeah.
Now, 35 points. Okay, we can work with I may just take this off here, right?
Yeah.
No, but like this is... I mentioned this with TP last week. I have this mantra in my head. Maybe it's because of big lifelong Knicks, Mets, Jets fan. It's better to be lucky than good because my teams were never good. And so last week when we had this big rebound, if it was Leopold Aschenbrenner's fund that blew up or whatever we want to call it, the Citadel rate hike note that spurred the selling and then the dramatic rebound, I happen to think it was Leo because everything in his 13F was up double digits and then some. And it wasn't just the semi stuff last week, but I digress. That was a gift. I had some positions, Western Digital, name something, saved effectively. And when you find yourself in a situation where, like I was in, where, as Liz would say, you're at max loss in a short put spread, might as well Thelma and Louise that thing. And all of a sudden you're past 21 days to expiration and the market pops and you can get back out at break even, take the money and run. Clear your risk off the table. So my plan for MES, as much as I'd like to continue to hold this thing, my first inclination is when we get back to 7,600, really take a look at the market. How's volatility behaving? Do I really want to continue to hold this thing moving forward? And to that point, MES U6 expires in 45 days, so I don't really have like a gun to my head, so to speak, about making that decision today. But now that I have a chance to reset, pretty lucky, 250 point bounce from the lows, let's reset and take a deep breath and see if there's better places to allocate the capital moving forward. I know that when I get out, this thing is going to rip to new highs. So
yeah,
it's part of my consideration.
Sometimes those are the trades that feel the best, that come back to break even whenever you're down. Sometimes they feel a little bit better than the trades that work out right away. So, I hear you on that one, Chris.
Do you know how good I felt last week when Corning, GLW, bounced back? It's great. Why is my emotional state tied to Corning at all?
Great question.
It shouldn't be. It's not. I got to go talk to someone about that.
Well, Liz and Jamal kept talking about this and how this was like the ticker to trade back in the day. And I was like, are they trying to like rope me into trading this thing?
Definitely is what
But
they're trying to get more liquidity.
Luckily, I did not.
Yeah.
But no.
I have the Teams messages to some of our former colleagues here last year, imploring them to get in on Corning. Listen, I'm a New Yorker.
Nice.
I'm a little bit of a shill for New York companies here. Corning's a great New York institution.
Love it. So we got Palantir earnings after the close. We talked about it a little bit. Are you trading this thing directly, or are you going to trade it kind of more passively through some other indices?
No, one of the things I did over the weekend, and I try to do this over the course of every month and every quarter, I spend a little bit of time each month and then a little bit more time substantially at the end of every quarter where I review my activity and I see what's been working well for me and what hasn't been. And last week I was kind of cluing in on this idea that when you're looking at how the earnings are shaking out, it feels like if you are related to AI, you're blowing out your move up or down. And if you're not related to AI, you're staying within your move up or down. So it could be inside and up, inside and down, but you're really not breaking out of the confines of the expected move here. And I've seen that myself personally when I'm doing these directionally neutral, let's sell some volatility around earnings. Because of that dynamic, what's been really working for me over the past few weeks has been things that are not AI related. So my primary consideration is actually to stay away from something like Palantir and poke around in some of the names where I've had some success recently, including Merck, for example. MRK was a trade that we took off at the end of last week. This thing has been a nice little steady grind higher to the upside here since the end of April, beginning of May. I still think it has room to run, and it's had this very rhythmic cadence where it's taking 2 or 3 steps forward and then pulling back for a week or two into its 1 month average, its a 50-day average, and we just had that at the end of last week. So I was in a position, I need to roll this forward. I want to get back in. It's not just for the earnings, but generally speaking, it's to play this thing to keep moving to the upside. I need to find the strikes that I like, but I'm currently looking around 18 days because the technical level I like is that 50-day moving average, which is around 123.80. And so if I can go down to the expected move at 18 days, I can go $1 wide at 121, 122, and I could start to poke around down there. And I'm finding 22 cents, 26 cents. The 122, 124 spread is 47 cents wide. So not quite ideal, but we're starting to get into that territory here. So that's really what I'm thinking. Can I find enough duration where I can operate around that 120-ish level where I can take some risk? Maybe it's the August 4th, maybe it's not. But Merck is up there. I'm looking at Gilead. I'm looking at Pfizer this morning as well, some of these non-AI names. Pfizer, again, not a super sexy name, not a lot of volatility on the board. So whether or not there's actually something that can be done is a different story. But I'm not going to just chase names that have not been working out for me. I'm going to stay away from that stuff. And even if it turns, Mike, Errol, right? Let's say this week Palantir is an inside move and I'm wrong. I'll be totally comfortable with that because I'm trying to stop doing something that hasn't been helping. And that's the point of doing these recursive feedback reviews on your trading strategies.
Yeah, and one more for you there, Chris. I know it's been a few weeks since SpaceX has finally IPO'd, and we have their earnings coming around this week. I mean, how are you perceiving their earnings as it to be one of their first ones, especially given, the day-to-day slide that it's been on the last few weeks? I mean, what do investors expect on something like this?
So lockup expirations end later on this week. So today's August 3rd. The lockup expirations come out on Thursday. That's going to increase approximately 20 to 30% of the float, which is going to bring the total float available in SpaceX to roughly 40% by December 26th.
So increasing the supply as we're already on its butt.
Correct. So, look, I would point out that SpaceX has a large short interest right now. We were talking about this yesterday with Gus on First Call. This is not a bet against Elon per se. And I know some people take issue with that language. Who's betting against Elon? Nothing. You can't bet against Elon. It's not the point. There have been episodes in the past when institutions have piled in short against Tesla. They weren't right, but it doesn't mean that didn't happen. And then ultimately on the other side of that short covering, there was a massive rip in Tesla to the upside. So this isn't a bet against Elon because Tesla's short float is right now 2.5%. When you look at the short interest in SpaceX, it's sitting closer to 25%. And perhaps a lot of this has to do with all these shares that are due to be unlocked moving forward. However, I did say something on air last night that I do want to check because one of our astute listeners chimed in here, Richard Haas. He pointed out that, why could SpaceX be going down? Why is there such significant short interest? I floated the idea, and I didn't double check this at the time. Maybe it's folks trying to hedge off their existing positions. If you're an insider right now, SpaceX lockup agreement is actually quite comprehensive, having read into this last night, because we try to stick to the facts around here. We try to make informed decisions. It does prohibit selling, lending, and the pledging of locked shares, along with transfers for their specific economic consequences. And the language in the lockup agreement includes short sales, puts, calls, collars, forwards, swaps, and any other derivative, included cash settled instruments. So trying to hedge off your risk as an insider, as an institution or an employee through a private bank is not allowed. So that is not true what I said. I just want to clarify that. My misunderstanding here. I went right to the SEC to dig that information up. So what does this mean? It's probably just a bunch of people then just leaning short against Tesla because you have all these shares that are coming out of lockup, and it's going to dilute the market, plain and simple. Now, the market knows this is coming, guys, right? I mean, Errol, we've known that this 20 to 30% float was coming on August 6th for weeks, months. We've also known that about 40% of the float's going to be available by December. So this is not like a surprise. we're getting hit with this. The market's been pricing this in for some time now. But that's why the earnings really do matter here, because SpaceX finds itself more on the hyperscaler side of this conversation. They're doing a lot of capital expenditures right now. Their space program, all that stuff, while it's revenue positive, it's being undermined by their cash flows out the door because of the capital expenditures. So let's see if they can instill some discipline there. If there's any bit of good news, they don't dip into negative free cash flow, something like along those lines, the tinder is there to get a really big move in SpaceX to the upside. So I'm not treating this like a typical tasty trade. You see that long mile I walked to get to this point in time? I am only interested in looking at this for something zany, like a Wall Street bets type of move where you could see a squeeze to the upside. And if I can find a way to structure a cheap, like a 125, 130 long call spread here for 4 days to expiration, risking $80 to make 420, that's an Elon number. So why wouldn't we do that?
I like it. I like it. Yeah, I think this is going to be a wild earnings report and really a wild week for SpaceX. I think the entire globe thinks this thing's going to crush after that release of shares, but just because that is the fact, maybe you see it rip 20%.
Yeah,
it's just
that's the market for
yeah.
you sometimes, right?
But this is a 17.5 point implied move on a $100 stock now. So this is the biggest implied volatility I've seen so far for earnings, at least that I can remember. And this is going to be one that everyone is paying attention to. So
Everyone.
it's going to be wild. It's going to be absolutely wild. Well, Chris, appreciate your time. We'll see you a little bit later. And happy trading on this fine Monday morning.
Happy August.
We're under flood watch. I don't know what you're talking about. Fine Monday. I'll see you later.
Sounds good. E-mini is up 45, Nasdaq's up 60. Join us on the YouTube chat if you haven't already. We're streaming live there, and you can throw in your trade ideas, questions along the right-hand side chat, and we'll get to them throughout the morning. But we're going to take a quick 90-second break. You're watching Tasty Live.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Tasty Trade has crypto, and you can trade with 0 commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
What's up, Tasty Nation? Welcome back to the show. We got E-minis and Nasdaq up. Almost all the Mag 7 stocks are up. I think all of them are actually up, if I'm not mistaken. But we got crude oil sliding. We got the backwardation getting zapped out of that market as well. But I'm joined here by E and, of course, Gus It's the young guys and then me. How you doing this morning?
Morning.
What's going on? Good morning. Yeah, doing well. We're so back, right? We're saved.
I think
and
so.
We're just going to go to the moon forever now.
Feels like it.
And my SPX Iron Condors are going to lose, but that's okay because we're going to go to the moon on everything else. Yeah, certainly the way things seem. And yeah, got some fun stories to kick off the week for us here today. And one thing I am not going to say this entire time is the word earnings. I have other things to discuss.
Nice.
First and foremost, you kind of already alluded to it. I won't beat the crap out of this because you're going to hear the word oil a million times today on the Tasty Live Network. But obviously, oil collapsing as it looks like we are nearing a resolution in Iran. But I did want to talk about this just to highlight the fact that, as I've said 100 times over the past couple of weeks, yesterday on First Call with Chris, we have to acknowledge the fact that these headlines are fake out headlines a lot of the time. So I wanted to take a moment and read the social media exchange, because that's how our world leaders do things now, between Trump and the head of Iran on this whole situation. So Trump makes a Truth Social post. He says, quote, "We've just been attacked by Iran and other we've just been asked by Iran and other Middle Eastern countries to hold off on any attack in the perimeters of a deal that has been agreed to." He went on to say that the deal would include the, quote, "immediate, complete, and total," all caps, "opening of the Strait of Hormuz," end all caps, and an end to Iran's nuclear threat. Obviously very bullish towards the war ending there. Iran's response, they say, "Although the enemy's recent statements are part of a psychological and cognitive warfare campaign, we consider every threat to be real and take it seriously." Does that sound like they think this thing is over right now? Should we all just be writing this off like a foregone conclusion that this whole thing is over? I don't know. So just floating that, you got to be so careful in this headline-driven market.
This could be almost like a movie. like those headlines going back and forth, and just the context to that. It could literally be a plot in the movie. So it's kind of funny.
Trump is like, "Oh, we dunked on him. It's over. Bye, bye, bye." And they're like, "The enemy's recent statements are misleading." It's it's scary stuff. So I don't know. Just wanted to acknowledge that. Be careful levering up on oil shorts today. In the first underlying story of today, we have AstraZeneca and Bristol Myers Squibb discussing a potential merger. This is very interesting because it would be the largest merger in history by a wide margin. Previous largest merger was valued, it's a Vodafone, I forget who they merged with in Europe, valued at $180 billion.
Oh, wow.
This merger would be valued at $400 billion.
Good Lord.
So we're more than double the next largest merger that we have on the board here. AstraZeneca, obviously UK-based, Bristol Myers Squibb, US-based. They're direct competitors with one another, and this would allow them to not have to compete with one another anymore. Both tradable on the US market, AZN and BMY. Perhaps most interesting is that these are moving in exactly opposite directions pre-market today. BMY set to open up about 5%, AstraZeneca set to open down about 4%. So people much more enthused about the prospects for the US side of this deal than the UK side.
Craziness. Yeah. Why not just throw some billions at this thing?
Might as well,
What could go wrong?
Yeah, they're like, "Hey man, we're hurting each other. We could just collude and not have to hurt each other anymore." So yeah, would be the largest merger in history if it goes through. We are far from that though. They're in talks right now. Nothing formal has even been submitted. You need regulatory approval. I'm sure the antitrust litigators in both countries are going to have their fair share of issues with this deal. So nothing confirmed, but yes, would create the world's fourth largest drug maker by market cap. And if that doesn't tell you how big Eli Lilly, Pfizer, and Moderna are, I don't know what will. These two giant companies could do a $400 billion merger, and that would just make them the fourth largest drug maker in the world.
Yeah, and I think if you haven't been a part of a acquisition or merger in the markets, you can always look at the options, because the options will tell you how far along the deal is. So right now, AZN down a little bit, but let's just say this was a done deal and this deal was going through at a certain price. If you go to any of these options expirations, you would see zero bids across the board. Like you would go to a 300-day cycle and you'd see zero bid across the board. So this is obviously Monday after a weekend, so it wouldn't update just yet. But just keep that in mind. If you're ever wondering how close a merger or acquisition is to actually happening with a specific product, you can go to that product that would eventually be delisted and look at their options. And if there's zero bid at the money and all the expirations, it's telling you that the market has concluded that that's going to go through.
Yes, yeah, great lesson there. You always bring that up with and that includes acquisitions as well, not just mergers. It's a great vehicle to figure out what the efficient market is telling you here. Next story on the docket, Alibaba. We are back to talking about Alibaba, and we're back to talking about my acute pronunciation of their Gen 3.8 AI model. This is the newest version of this model that they've just rolled out. They are saying, ready for this loaded statement, competitive with Anthropic's Fable 5 in some tasks.
In some tasks, that's very vague, right?
Yeah.
Okay.
Yeah. Specifically, it was cognition or something. It's cognition and let's see. It's deliverables are comparable, sometimes better scores than Fable 5, ranked second only to Fable 5 in the vision arena, fifth in the text arena behind scattered AI models. This is only the second largest AI model in the history of China here in terms of parameters. Moonshot AI, their model Kimi K3 is a 2.8 trillion parameter model. This one's only 2.4. It has 1 million tokens of memory capacity, so it can handle thousands and thousands of pages at the same time. China just taking another swing, trying to stay on an equal playing field in the AI game here. Yeah. Alibaba share is set to open a little bit higher as a result.
Trying to stay competitive, it looks like. Everybody's trying to get a leg in this race, no matter what it looks like. So, I mean, I'm always curious. What is it, Chen?
Yeah,
Chen.
I believe.
Okay.
I've worked on this a lot. There is nothing wrong, I've discovered, with especially domestically saying Quen. There's lots of people just going for that pronunciation, throwing everything out the window. My belief is that I think the correct Chinese pronunciation of this is Chen.
One of my neighbors I met yesterday is from China. He barely even speaks English, but he speaks Mandarin, and then I forget the dialect that he also speaks. So I'll get his take. Circle back around.
Get a primary source and let us know.
I will.
Pronunciation.
I will.
It is important. Yeah, pronunciation. I went on a date once, and the girl said Raymond. It's called ramen. Raymond.
I've heard that before.
In my mind, I was like, "This is the last time I'm ever going to see this."
It's a red flag.
I've heard that a fair number of times. Growing up in Cincinnati, people would definitely say ramen noodles.
Interesting.
I struggle with like a pin that you put right here. That is a lapel?
Yeah.
Yeah, lapel. I was rocking with that for a long time. Time. Here we go. Here we go. Schwinn. Okay, yeah, there you go.
Bike.
See, but yeah, people do say Quen in English.
Can I get a pronunciation to the pronunciation, please?
Close to Sherwin. Is that accurate? I don't believe that's. I don't know. That's a good comparison.
Well,
Twin.
Yeah. If you, this is a big rabbit hole we go up. But if you listen to, I think it's Mandarin. It's it's like a sure, like Schwinn.
Sure.
You know what I'm saying?
Okay, I see that.
But I don't know. I mean, we're trying.
My basis is always just that I know QI is chi is how you say that, and if you start there, work out to all the other Q words, you can do a pretty good approximation. Last deal I have on the docket for today, last topic I have on the docket for today also pertains to China. This is a slightly older news, but now that there's more discussion about it, we kind of are seeing shifting sentiment. But last week, there was a report from the Wall Street Journal that Tesla is going to offload their China business. They would spin off, sale, close, whatever they have to do to get rid of their China business. Tesla has just outwardly they have accepted to comment and have denied that this is a thing they are thinking about doing. However, if they ever did want to do a merger with SpaceX, it would be necessary from a regulatory perspective for them to offload the China business. That would probably not be great for investors in a world where they do have to offload the China business, because they would be looking at either parting it out or just letting some of the value slip away. For instance, if a BYD wanted to buy Tesla's Chinese automotive business, they're not going to be interested in humanoid robots. They might not be interested in robotaxis. They might not be interested in Megapack. So you'd be talking about trying to package those up and sell them off to other suitors. Just doesn't seem like they would be able to extract proper fair value for their entire line of products if they were to have to do a sale in China. So again, unclear. Tesla straight up says this is not happening, but the Wall Street Journal, obviously a fairly reputable source. I don't think they would publish something without hearing it from somebody that they think at least knows something. And like I said, regulatory reasons, if they want to do the SpaceX merger, they're going to need to get rid of this Chinese portion of Tesla.
Yeah, Tesla trading at big lows here. I haven't seen these levels since last year around the same time. So they got some work to do. It's going to be interesting to see if Tesla moves at all on the SpaceX IPO, or not the IPO, the earnings report today or tomorrow.
Yeah, it will be interesting. I was just having an interesting conversation with Chris yesterday on First Call about, like, is this Elon fanboy money thing real? Like, is that actually a real substantiated thing that's actually moving the needle? People rotating their money from one to the other, or SpaceX and Tesla being competing, and the Elon fanboys got to compete with what they do with their money? I don't really think so. I think it's probably like 1 or 2% of the float is people that fit that description. I don't know that it could be tangible, but I also just pulling numbers out of my rear end right now. So I could very well be incorrect.
Yeah, Tesla's up a little bit pre-market here. SpaceX sliding a bit, but this is going to be a wild earnings report tomorrow after the close. 17-point implied move for SpaceX on a $100 stock. That's gigantic. Tesla had a hard time with their earnings report, as you can see by this gap down and continuation last week. So craziness across the board.
Yeah.
Craziness across the board. Are you trading crude oil at all?
I am not. Well, I have some existing shorts from months ago that are pretty much dead, but I got like 160 days left.
We've got a pretty big gap
I
down
would
over the
need
weekend.
nothing crazy, just like 4 more of what happened today, and I'd be in a good spot.
Okay.
You never know, though.
I think it's possible.
That could happen. That could happen. This has to be real. This has to be real. Iran is out here saying, I don't know why they're so excited over there. There's a long way to go.
It's a pipe down.
Trump is like complete and total reopening. We're gonna sell oil bigly. So yeah, we'll see how things pan out there. But yeah, just some pre-existing shorts. Not looking to step in front of it right now. I still feel like this is a bigger decision point than we're giving it credit for.
Yeah, for sure. Well, either way, plenty to trade this week. Plenty to talk about with SpaceX earnings, Palantir earnings, and then a handful of other non-tech related companies.
Yeah, I'm excited about Alibaba. I haven't looked at some of the Chinese names in a while, so it'd be nice to see some
Tune into Morning Movers tomorrow to listen to me clown on Alex Karp no matter what happens on that earnings call. I take any opportunity. Hate that guy.
Hey, you're to hear first. Tune in. Can't miss it. Well, Gus, appreciate your time. See you a little bit later.
Always happy to join.
Absolutely. E-minis up 43, NASDAQ up 44. Kind of an interesting day here. Mag 7's up, crude oil down. Is this the beginning of the new rally to new highs? We will see. But we're going to take a quick 90-second break. We'll see you on the other side of it. You're watching Tasty Live.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Investors Business Daily raves about us. Stockbrokers.com says we're best in class for futures trading, and Broker Chooser thinks we're pretty great too. So what else can we say other than trade like a trader? Tasty Trade. Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than trade like a trader? Tasty Trade. Make your move.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
What's up, Tasty Nation? Welcome back to the show. Join us on the YouTube chat if you haven't already. We're streaming live on the Tasty Live channel. My name is Mike. I'm here with E. We got Liz Deerking on the line. And Liz, I have not placed an SPX Global Trading Hours trade yet. It feels like we're just going to chop around here.
You know what, Mike? I looked this morning and I couldn't get the credit I was looking for. So I don't want to put anything on without a credit. And I couldn't get myself far enough away with the credit that I wanted. Now, that being said, I do want to jump into SPX, but I like to say things live on air because then it has to happen. Can we put a segment together with Gus just reading tweets with voices?
Yes, you can do that.
It was so funny.
Yeah,
he did such a good job. So super producers, that's what I'm looking for. I want him reading market tweets with voices. So if we could have that, that would be great.
The Trump voice was pretty good.
Yeah.
I know, he did a good job.
Solid.
Yeah, he always brings the heat. He's got all the info you need. But yeah.
It reminds me of, I forget what late night show it was, where they'll bring on famous people and they have to deadpan read the mean things that people say about them in tweets. It's hilarious.
I think it's called mean tweets. I think it's what it's called. But I remember that. Some of them would like break down and be like, I can't do this anymore.
I know.
So good.
Pretty cool.
But yeah.
Okay, but back to the SPX, I couldn't find the credit. So I looked at my downside broken wing butterflies, and to get to the expected move, even breaking the wing by $10, I was getting 20 cents. Usually I'll get around $1.
Yeah. 42-point implied move for the rest of the day. So I'm surprised that we can't get these premiums that we want here. But we're up 45 points. We haven't really moved all too much. So maybe it's a matter of just the lack of movement resulting in a non-fill. But we're going to open here.
You know what? I think you're right, because I actually restarted my machine twice because it didn't look like we were moving.
Really? Yeah.
Yeah.
Just,
I mean, we've
just
just
ticking
been
around.
sitting here. Yeah.
Yeah, I think, it just feels like one of those days. I feel like we had a really good pulse on the market last week where we were like, ooh, this is going to rally from here. We're going to sell off from these highs. And we kind of nailed it in terms of the directional moves, but this just feels like a day where we'll just be up 50 like the whole day. That's where I'm at. What about you?
Okay, and you know what I just heard? I heard a low-key brag about your NASDAQ SPX butterflies.
I forgot about that. Yeah, that was insane.
Way to kind of talk about it without talking about it. We got it, Mike.
Yeah, that was definitely the best butterfly trade I've had ever.
What were you doing? Was that the one where you needed it to pull back at the end of last week? I forget what the price point was, but the one you and Jamal were referencing.
Yeah. So it was 7,400 on Friday. It was 7,400 and 28,000 on NDX. So NDX was a $4,100 winner. That was crazy. But if you look at the 1 minute chart, you can see on Friday. So what was that? Yeah, the 31st. Let's see if we can find it. Yeah. Okay. Here you go. Here's the trading session. So it was like we needed this thing to sell off to 28,000, and it did for like a second. Mm-hmm. And I closed. When did I close this? At 9:15 a.m.
You closed it early, and then Jamal said he was going to hold on, and I was laughing because the market rallied. I was kind of watching.
Yeah, I was like, listen, you got to take something out of this thing. It was trading for like a third of the max profit on the day of expiration at the pin. Mm-hmm. So it's like that just goes to show you're not going to get max profit out of these things unless you literally pin it at expiration, like at the end of the day.
Yeah.
At the very, very end of the day, yeah.
But yeah, it was a magical and I literally I remember this. I got off the show, I made breakfast real quick. We had like 15 minutes of a break, and I came back and it was right at the short strikes. And I was like, I gotta pull this right now.
Just that window to take it back off. I love that.
Yeah. But it was crazy. It was magical.
Nice.
There is no better feeling. There is no better feeling than getting a butterfly.
Liz,
but speaking of overnight moves, though, we're not doing much. I mean, I guess oil is the story again. Oil is the story du jour. You guys did a great segment on USO this morning. I thought that was excellent because, USO can benefit or can be a benefit or a detriment with the drag, depending.
Yeah. And that's just one of those products you have to understand that it is at the mercy of the crude oil futures. And that's why it's benefited so much with backwardation in this market. Like crude oil has had backwardation this entire year. It's just a matter of like how much backwardation are we talking?
Right.
And the steeper that is, the more USO will have a propensity to pop, just like the VIX when the markets are going crazy.
Yes. Well, and that's why the two big products that I know that technically have a drag when it's normal markets is going to be your UVXY and USO.
Hmm. Yep. And that's why if you zoom out on UVXY, the split adjusted price of 260,000 down to 23. Like, there you go. It's insane because these products continue to drag as volatility futures are in contango. That's where we're at right now. And just for these products to stay alive, you have to split or do a reverse split and bring the price back up before it drags down again.
And this is an interesting one because a lot of people think it's cheap way to inventory volatility, and it is not, because it only goes up on a percentage basis. So as it goes down, the percentage, if it's going to pop, the percentage is going to be smaller. So even on larger moves, you need violent moves, boom, 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 for USO to go up.
Yeah, that's why I really like SVXY, because SVXY is the exact opposite, where when you get big vol pops, you'll see SVXY crumble, but SVXY is a short volatility product. So when you get the backwardation volatility products going to flat, going to contango, and the VIX futures back in the teens, that's when you get this rally from the lows back up. So if you ever see the VIX pop to 30, 40, 50, you'll be looking at, I will be placing bullish trades in SVXY. But I think long term, if you just buy shares at a digestible level where you can afford all the variance and just afford whatever you're trying to buy, like you got to be able to, if this thing goes from 40 to 30, like you have to be able to hold that. But over time, as markets calm down, as volatility starts to crush again, this will go back up to the upside. And that's exactly what we're seeing today.
So you know how we said USO and UVXY is a drag? Is this a pull?
Yeah, it's a drift. Yeah.
It's a drift. There you go. That's the word I'm looking for.
Yep. Because this is an inverse volatility fund, but it's the same thing. It uses near-term VIX futures. So as long as you're in contango and as long as nothing crazy happens, this thing just drifts higher slowly but surely.
Nice.
Yeah. And this was, so here's March. Here's the war lows in the market. End of March, we were trading at 43. Now it's trading at 58. And the markets haven't really moved. So that's why this is an interesting product. The markets have recovered, of course, but it's not a 50% recovery like this.
Yeah.
So this is a nice product if you're looking to get long volatility, get short volatility at the highs of volatility's peak. This is a way you can do it with shares.
Yeah.
Do they have options?
Yeah. Yep. Yeah, they have options, but it's not necessarily the best market. Like these are pretty wide sometimes.
Yeah.
And on the upside, there's not much activity here.
Liz, I know we had a pretty crazy week last week with a lot of Mag 7 earnings. Is there anything you're keeping an eye on this week, getting into this earnings week?
I am locked and loaded in PLTR.
PLTR, Palantir. It's the name of the game.
Yes. So I've been a long time trader of PLTR because when my son was in 8th grade, and he's in college right now, when my son was in 8th grade, his one of his little buddies came up to me and said, what do you think about Palantir? And since then I've always had it in my account just in case he asks me again.
There you go.
Yeah. So I mean, and it's been pretty good. Like I like PLTR. It's got a decent expected move, $14 on a $125 stock. So that's a decent volatility, right?
Yeah.
So now I waited, so I have shares of Palantir. And so I usually sell strangles around my shares. I have naked long right now because I wanted to wait until the eve of earnings to sell my strangles around it.
Yeah, I like that. And the nice thing about that is it's basically a covered strangle if you want to look it up for more info on it. But you have no upside risk, and then your put gives you the ability to get more shares with a lower basis if you wanted to take those shares.
Well, nobody wants to take those shares, Mike.
Yeah,
if I have to take those shares,
you have to take the shares. You can.
Yes.
But the undefined nature of the strangle without the shares still gives you the flexibility to manipulate it however you want to. And you can double your premium because you have the put and the call. So covered strangles are super flexible and nice trades for sure. And especially if you're selling the 4-day with the intention of rolling it into the 11-day or the 18-day or the 46-day afterwards, you'll still be able to collect a lot of premium because these back months are still in the 60s. So this isn't a product that's going to go to like 30% IV. You will have elevated IV in here even after earnings.
And just because this is what we do for a living is just talk about synthetics. People have asked me over the years because sometimes I'll hold stock, sometimes I'm doing the covered strangle using both puts. So if you sell, I'm just gonna make these numbers up right now, but say open up the 4-day if you don't mind. Mm-hmm. And if you don't have the stock and you want to do a covered strangle, go to the expected move to the downside for the put.
Mm-hmm.
Sell, there you go. You're getting some premium for it. 110, then go all the way up to the expected move on the call side and just sell the put. Sell the 137 put.
Yeah.
There's your covered strangle. Synthetically, it's the same thing as what I have right now, right? Because I know that in the money put is essentially the same thing as if I was long the stock and sold that call against it. People over the years have asked me how to synthetically create this position, and you actually use less capital because a put holds up less than what owning the stock would be.
For sure.
So synthetics 101.
I like it. Yeah, I think this is a really interesting way to do it too. And yeah, you basically have the 137 in the money put, you're selling that intrinsic value and a little bit of extrinsic, and then the pure extrinsic on the downside. Same risk profile.
Yeah. But doesn't it feel like, feel safer if you have the stock and selling the call and the other put? It just does. So you would go in. So somebody's like, would you put this trade on? And I was like, I have the stock. So I understand what it is, but some people are like, ooh, that's crazy. You're selling both sides. I was like, I have no risk to the upside.
Like, look at this curve.
I like this crazy. That's too crazy for me. No, it's no, I like this. And yeah, you're picking up almost $800 of extrinsic value with this setup here, synthetic. And this is the 4-day cycle again. So you're getting all this extrinsic value by Friday. And if you held this and we just got some chop in the middle, you could buy it back, roll it out to August monthly or September monthly and pick up a lot more premium.
And there is a chance that PLTR goes down $14 too. So guess what? I'm going to be the proud owner of more shares, dollar cost averaging, and it'll be fine.
Yeah. And you can dollar cost average and then keep selling premium in an aggressive way, because this is just a high IV product that just gives you a ton of premium relative to notional.
And so, Errol, I never really get to talk to you about this. Are you playing a lot of earnings?
Not too much, honestly. The last earnings trade that I did was Google. I think that one was just a couple weeks ago. I'm really looking forward to SpaceX. I mean, SpaceX has been pretty much dead, just kind of continuously making these lows. So I'm hoping for a little bit of a pop there. So not necessarily trading SpaceX earnings, but I got a little exposure to it. I'm looking forward to see how Palantir plays out, though. Like, there's a lot of names that I think are going to be exciting to at least watch on the sidelines. So that's kind of where I'm at, Liz.
And total side note, you are killing it at the SIBO.
Oh, I appreciate it. Yeah, I mean, I'm trying to take after, you and Mike and you guys over there, because you guys make it look really easy. And I just got to let everybody know it's not as easy as these guys make it look. They just have a lot of experience.
You get distracted pretty easy, right? Because there's lots of yelling around you.
Very much so. And you're not really sure how your volume level is relative to what's going through to the mic. It gets a little bit louder in the background. So I think you get used to it after some time, but it's not as easy as you guys make it look when you hop up on there. But it's been good. It's been really fun, and it's pretty nice to be around some of the older guys out there too.
Yeah,
just ask them a lot of questions.
It's funny. Someone in the YouTube chat was like, "That can't be real. They can't be on the floor." And then Jamal was like, he grabbed someone and was like, "Take my hand real quick." And then they're like, "Okay, there you go.
It's real. Yeah, it's real."
But yeah, it can be super loud in there, which is always fun.
Yeah.
NASDAQ
we
sold off.
We would get the comments. Those girls are at a mall. I was like, we're not at a mall.
That's crazy.
Mall of SPX trading.
That's
sure.
hilarious. Yeah. No, I see NASDAQ selling off here a little bit. You were mentioning.
Yeah, we got 30 seconds before the equity markets open, and the NASDAQ just gave up all of its gains.
Yeah.
We are down from the recent levels. This is a 1-minute chart here. Craziness.
What has turned in the NASDAQ? What's the leader in the clubhouse to the downside right now?
That's a good question.
All the Mag 7s were up this morning. Let's take a look and see what has made the... Oh.
There it is. E-minis selling off too, only up 30. NASDAQ chopping around here. Got a whippy market right now, but we had all the Mag 7 stocks up. So I think it's really just these chip stocks. SanDisk and MU are in the top 5 of sellers here. Seagate leading the way to the downside. Now ARM, Astrolabs. So Micron, SanDisk, Seagate, WDC, all these chip stocks down 5% or more. And then you go to the upside and you've got Microsoft, you've got Amazon, you've got Google, all up 3%-ish. So it's a weird day here.
Yeah. Closing this Micron position, getting out of that because things change really quickly in some of those names.
Yep.
And we were talking about this, Errol. We were talking about you on I forget what show it was, but you talk in NASDAQ terms. So your generation talks in NASDAQ.
Right.
We talk in SPOOs, and people older than me are the Dow.
So I'm curious, have you noticed something similar within your daughter and her friends and her peers? Do you know what they kind of look at? What do they look at in the market?
So the problem is no one else looks but my kids, because none of them have
Of
kids.
course, yeah.
So because of who I am, they know where the SPOOs are and they know what the VIX is. Those are the two things they've learned since they were about 4.
Okay.
So they could
4 years old.
They could take my phone and I could say, where are the SPOOs? And she could look it up and tell me where the SPOOs were and where the VIX was.
There you go. That's how you know they were raised right. Yeah.
Yeah.
Incredible. I love it. Always have the pulse on the market.
None of their friends, I wish their friends were getting more into it. My son's friends love sports gambling. So he's the only options trader and the rest of them are sports gambling.
Huh.
Oh,
Okay.
they'll be into options soon enough.
Yeah.
There's a strong parallel there. Strong parallel.
Mike Gill like this. So he joined a fraternity and one of the older actives was like, wait, your mom's Liz Deerking? Are you related to Liz Deerking is what they asked him. And he's like, I am. So I brought him down a bunch of swag the last time I went down.
Oh, it's hilarious. That's dope. I love it. Yeah, it's impressive how many younger people are getting into this space.
Yeah.
Earlier.
I could imagine how Liz is the coolest mom on the block, though. Like, imagine, you see your mom up there and she knows the ins and outs of options. Like, it's nobody's business. That's hilarious.
But Errol, I mean, on the floor, you're on the floor. Those SPX 0 DTE options have taken over. They're about 50, maybe even more of the volume.
Yeah, the volume is nuts. It's nuts.
Yeah.
Yeah.
Yes. And I think that's what younger people like. I'm putting words in, I'm not putting words in your mouth, but the instant gratification, that's kind of what turns them on to the markets.
100%.
Because they can understand the instant gratification.
They don't even mind taking losses. They just hate, quote unquote, wasting time. Yeah, they don't mind taking losses. Yeah, they just want to get to the outcome quickly and then go on about their day. So I hear you.
It is interesting. But yeah, SPX 0 days and weeklies have taken over the space for sure, especially with the removal of the pattern day trading rule. That has created a lot more activity as well.
Oh yeah,
which has been a long time coming for sure.
Yeah. I mean, the kids didn't even know there was a pattern day trading rule.
No.
I mean, now we're aging ourselves because they didn't even know it existed.
Yeah. Which is good because now we can just let it go with the rest of everything else that's feels archaic. But
I'm so glad it's gone.
Yeah.
I've gotten a strike or two.
I'm sure.
Oh, you have.
Maybe that's why you're just slinging NASDAQ futures here. Like, this is so funny to pull up. You're like, what's Errol trading today? Oh, it's the micro NASDAQ.
No. You got to scroll to the top. Look at the very top. That's
a little Apple
and MCO. We got a little bit of oil.
Nice.
Yeah, we're diversifying the portfolio.
Okay, so you're a scalper.
A little bit, so yeah, I guess
just a little bit.
Just a wee bit.
Just a little bit. Yeah. But no, good stuff. We got everything selling off here, other than the Mag 7 stocks. You can see it on my portfolio here. Amazon's up 11 points. Apple just ticked red, unfortunately, for the Apple Bulls. Meta, though, up 13 points. Microsoft's up 20 points right now. You love to see it. Almost back at 500. Glen, our boy Glen's going to be very upset. I told him, I'm like, you got to get in Microsoft. Don't close it. Don't close it. Don't close it. And he closed it. And now we're up 150 points.
This is insane. I mean, that's an insane move in Microsoft. I don't know how other way to put it.
Nutty.
Yeah.
But this is even more insane. Japanese yen. Look at this move. This is the 1 minute. We gotta look at the 1 day. Here you go. Look at this rip.
That's insane. Do you guys trade any Forex, or is it something you kind of use as like a proxy?
We trade it.
Forex. I trade options, and I have traded Forex before, but I would prefer to use options in 6J. I just trade from straight, right? So I know what I know. I'm really good at options trading, and giving me a new trick is not easy. I love what I like what I like.
Yeah.
Yeah, and the nice thing about the Tasty platform is that, like, I have no idea what these numbers translate to in terms of ticks and the notional size of it, but I always like to say, like, if you're confused on a futures product that you don't know the notional, just go to the nearest expiration, sell an at the money put. You can see, okay, this is an $80,000 product.
Mm-hmm.
Okay.
This is a $500 option. These like 0.00040. But if you set up a spread, you can, the spreads are the same as equity markets. If you're just trading a vertical spread here, where you can see what your max profit is, where your max loss is, where your break even is. And nothing else really changes. Like, when you are filled on this trade, you won't see it in these ticks here. You'll see it in the actual dollar value. So if I sold this put spread, I would see my max profit or credit received of 287, and it would tick around just like anything else in the portfolio. But that's what I like to do. Like,
the only caveat with this is that the max loss could be different than your max loss. It could be less or it could be more, right? So, or your buying power effect. I'm sorry, not your max loss.
Yep.
Your buying power effect could be different because you're using futures options because it uses span margining. But other than that, it's done for you. You're right, Mike. Everything's done for you.
Yep. But yeah, the nice thing about 6J, and we've been trading these options too, is that there's usually 2 expirations in between the next contract. So you can see the last price tells you there's a new contract as you look through these futures options. So I've been trading this with like calendar spreads and diagonals, where I'm long the 32-day, short the 4-day, or long the 95, short the 67, because you know that they both settle to the same contract. This one, these two options expiration settles to the U. So you can get nice exposure there. And you can see I've been doing this pretty consistently with calendar spreads at 65 or small diagonal spreads, 66, 67, and stuff like that. So interesting stuff for sure.
We the market just ripped right back up.
Yeah. Nothing
Mike, you got to keep talking. Errol and I are going to sit quietly and let you
do whatever you can do.
Market go higher. Market go. Look at this thing. What is this?
Yeah, I mean, that's an aggressive first print of
what are we doing?
First day of August.
Yeah, Mike.
Well, this is where Errol, I think we have Chris Vecchio on for 10 minutes and we're going to shake him down to find out what happened with the yen again.
Yeah, we got to.
Yeah, I think there was an intervention, a yen-intervention from the U.S. side.
Yen-intervention.
That's what Gus was saying, that the U.S. has said we're gonna intervene and prop up the Japanese yen. I don't know what that means or how they execute that, but I think that was the headline.
Wow.
Crazy.
Pretty straightforward headline.
Yeah. we're gonna pump this thing to the moon.
No reading in between the lines.
Signing off here. But yeah, these NASDAQ markets flopping around. Crazy.
Yeah, I mean, we ripped right back. But once again, we're right back to exactly where we were. We were between 44 and 47 in this booze all morning long.
Well, this is like, let me remind you, we actually haven't gone anywhere.
If you stepped away and got some coffee, you have seen nothing.
Nothing.
You missed this.
And only because I don't get to talk to Errol that much. Errol, do you, as a trader, do you lean long or short? When you're scalping, are you long side or short side?
I lean short side, sometimes to my detriment. It's just, I have the inclination to get short, yeah. Definitely.
But that doesn't necessarily mean that you're short for life. You're just looking for a pop down. If you're a scalper, you're not necessarily saying, I'm shorting this market. You just think at some point you're going to get a little bit of a down.
100%. I might be bullish by the end of the week. So it is kind of that, it is kind of that thing. But I will say, like, you know, having that kind of bias makes you miss out on some of the most insane, you know, bull runs. I mean, I know I missed out on Micron, SanDisk, the overall market whenever we're rallying. So it's not that I'm necessarily taking losses on the way up. Sometimes I just won't have a position because I didn't get the opportunity to get short, and then I'll see it run without me. So that's kind of been the story.
Who have you always leaned bearish?
Yes, just because I started off my first 3 years of trading just shorting overpriced small caps that were pretty, you know, crappy companies. So I'd be patient, wait for them to get extremely overextended using some statistics, and then I'd get short. And that was kind of my first introduction into trading in the market the first 3 years. So I think that's why I've gravitated towards selling things. But that's why also selling premium was really attractive, because I was like, wow, volatility tends to collapse or tends to contract. So that was an attractive idea, 100%.
I like it.
Yeah.
I like to hear where people get. I always say this, I don't care how people find the market, right? So I love, and trading is not a zero-sum game. Everyone can make money, right? And so even if you lean bearish and I lean bullish, which I do lean a little bit more bullish these days, everyone can make money because we're not saying it for life. We're just saying for a short period of time, if we get them what we're looking for, we're going to close that trade.
Yeah, 100%.
And I think that's interesting because it's like, if I'm a long-term trader or if I'm like a 3-6 month trader, I'm going to be bullish.
Right.
I'm going to be looking for dips to buy.
Absolutely.
But if I'm trying to intraday scalp, there's a lot of reasons to be on the short side because escalator up, elevator down is especially true in the intraday sessions or the sessions where you get those big wipeouts in the market. It's like, it's harder for I would say, to put it in a different way, it's easier for me to envision the NASDAQ being up 50 to being down 200, or the E-minis being up 50 to being down 50 versus the E-minis going from starting the day up 50 to being up 150. Yeah. Like, what's the catalyst for it to triple in the gains? It just feels, it feels like it's less probable, even though you have, you know, equivalent probabilities right now that we would have those same moves. But from a mental standpoint, like if I'm going to bet on the E-minis being down 100 points from here versus being up 100 points from here, I'm just like, why would they rally continuously even more than they already are? Especially with, you look at the net change in the NASDAQ and Amazon, Microsoft, Google, Meta are in the top 10. So
Yeah.
for me, it's like if I were to see something slide and really accelerate to the downside, like that, I can envision more probable.
I mean, you had that short butterfly, or that butterfly that was positioned to the downside.
Yeah.
And I mean, you were able to take it off for that very small window, and we kind of recovered from there. But that sell-off was kind of quick.
Yeah. Oh yeah.
But
it was a complete reversal, and that's kind of the human nature aspect of this thing too. Like we're up right now, but if we started to slide and slide and slide, like I would just be like, this is going red. Like this market's going red.
Yeah.
And who do you, every time somebody comes on, who's the person that comes on and you short the NASDAQ?
Kevin Davitt.
Yeah, there you go.
He works at the NASDAQ, but it's not
That's crazy.
yeah, it's not necessarily being like, hey, Kevin, we're shorting this product because, that's how we feel. It's really more like, how can we utilize this product? Because the NDX is what we talk about all the time, but NDX is a really big product. So I have to be defined risk, but I'm also like, hey, I'm bullish these individual components in a lot of my positions. So what's the best way, or what's a really efficient way to trade and hedge a lot of downside move in those components that I'm bullish on? And it's a NDX butterfly. And we just happen to, it's funny though, because every time he comes on, I believe he's coming on tomorrow, if I heard that correctly. But like I'll throw this on and then we'll have a $200 winner. Then he'll come on again and be like, hey, we did it. We got one. And then another one, 800. This was the one, another 0 day where market slid down. We opened down 2%. And this was an $800 winner. And I was like, hey, we did it again, Kevin. And now he's going to lose his mind when I tell him I pinned a 0 day $4,100 hedge winner. So
you got to transition to full-time NASDAQ now after that.
Well, I've already got the schedule on. Anytime he comes on, I open it. And then the day before, a couple days before he comes on, I close it.
He's going to love that one. Yeah.
Oh, he's going to be so proud of you for that.
Oh yeah, crazy revenue.
Is NDX liquid enough? I know SPX has lots of players in the game, but NDX is so big. Are those options liquid? Pretty much, right?
Yeah. I mean, the bid-ask spreads are wide. Yeah. Bid-ask spreads are wide. And we just stick with the round numbers. Like you can see the market goes to these round numbers. So like 28,000, you have significantly more open interest than some of these other strikes. So, but yeah, I've had no problem getting in for around mid-price pretty quickly.
Very good.
Yeah.
I like it.
Yeah, craziness. But Liz, we'll catch you a little bit later today. Appreciate your time.
Thanks, Liz.
Sounds good. Thanks, guys. Happy trading.
Adios.
See you later.
Likewise. E-minis up 43, NASDAQ up 33. We're seeing NASDAQ just chop around like crazy. But the Mag 7 stocks are all ripping higher. Again, Microsoft, Meta, Amazon, Apple. I think Apple's actually flat, but those other ones are leading the way to the upside in the NASDAQ, the top 10 here. But we'll see what the rest of the market brings today. We're going to take a quick 90-second break. We'll see you on the other side of it. You're watching Tasty Live. It's good to be here in the studio.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Just for a minute, let's forget about your favorite stocks. Just for 1 second, let's leave specific strategies on the shelf. Let's talk about what really matters. Your portfolio. How do you build it? What should you target? How do you manage it day to day? The answers to these questions and more are inside our newest crash course. So I'll see you there.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
What's going on, guys? We're back. We're seeing a little bit of volatility into this market. Got Micron trying to recover a little bit there. I was looking to try and get out of some of that short delta there on Micron, but we'll circle back around to that here in a little bit. Looking like volatility is a little bit all over the place with NASDAQ just chopping around here. So we're going to keep an eye on these markets. See kind of just how we pan out over the first 45 minutes of market open. I know we have a level of value down here, but we're going to pay attention to this. Maybe we can get some scalps in there if there's some opportunity, but the market's pretty volatile right now. We were able to build a little bit of a cushion during the Sunday night open on the micro NASDAQ. So what we're going to be doing right now with this position is we're going to take some of the profit over here that we made, and we're going to be using that to get long some of our oil products or some of our oil positions. So we're going to be using the micro crude oil for that one. If things get pretty shaky in there, we'll manage our risk like we should always do on every asset. But right now, with the market kind of being all over the place, it's a little bit difficult to get a read on, what oil and the overall market wants to do right now. But with that being said, this Micron position, I mean, boy, these names definitely have taken a beating. Over the weekend with a pretty big gap down from about 820 to all the way to trading at about 783 right now. So, I mean, it's a 40-point difference just over the weekend. So a lot of weakness in a lot of these names. Would love to see Micron continue to slide a little bit more so we can get out of these positions. I had put in an order earlier this morning to try and exit this one at market open, but it's just been so volatile. I wasn't able to get a fill, but we're going to keep an eye on that one because we don't want this to shift back on us and maybe we see a reversal in NASDAQ, then maybe we see a reversal in NASDAQ, Intel, Micron, and all of those names. So this isn't going to be a position where we really necessarily want to take any drawdown on. I think because we're already kind of into the profit, this is going to be a trade where we'll cut at about break even if the market turns against us, and then we'll redeploy that capital in a very directional way on Micron if given the opportunity. But with the trade so deep into the profit, given the buying power on this trade, this isn't something that I want to necessarily take a decent loss on. So we'll keep an eye on it. But something that's been doing pretty well today is, TLT in the bonds. We put on another long zebra in TLT near these lows. We're getting a little bit of a pop on the day. But I mean, these bonds have just been absolutely beaten down. I know last week we had the FOMC last Wednesday, and the decision was going to be that we're not going to be raising rates right now. So the bonds were kind of on their butt. So we wanted to take advantage, put on a zebra there, just get a little aggressive-ish with it. And I think a zebra is a pretty aggressive position because it is a synthetic stock position. Because we're not dealing with theta decay, which is really nice. So we have about 99, roughly about 100 positive delta on TLT, and that's what the zebra will give us. And it can be an aggressive trade, right? Because we have about 99, about 100, synthetic stock, right? About 100 delta. So that means for every 1 point move in this underlying, we're going to be plus or minus $100 because we have about 100 deltas on this position. So given the fact that, bonds aren't typically the most volatile asset, it made me pretty comfortable to utilize the zebra strategy in this position because a great day for bonds would be going from 82.19 right now to 84, right? 84 and a half, 85 maybe. So that would be a great day on bonds. And considering the fact that we're going to be plus or minus $100 per point move in TLT or the bonds, I can stomach that potential drawdown if we were to shift, 2 or 3 points lower, and that would be volatile for bonds in itself. So it's a pretty easy position to manage based off of how volatile this specific asset is. But it's nice to see a little bit of a pop in bonds. And then we got this Google position on. We had rolled down that call side a little bit more to collect an additional credit. We're gonna see what we're gonna do with this position. Let me see if I can go back, maybe back 14 days. Yeah, we put this one on a couple weeks ago. Overall in the position, we're up about $52. We rolled that call side down to where we now have a total credit of 280. So we're trying to collect these credits, widen those break evens a little bit, but this one was more of a post-earnings trade that we had gotten into. And then, boy, SpaceX, looking forward to seeing a little bit of a pop in SpaceX. This is going to be interesting, right? I know earlier today, Chris was talking about how that float on SpaceX is going to be increasing. And right when he said that, right? So when I first got into the market, I was shorting a lot of small cap stocks, and these small cap stocks were a lot of low float stocks. So the supply was very low on these, and because the float was very low, it was very easy to see short squeezes in a lot of these small cap stocks because number one, the market cap is pretty low, so it's not going to take a ton of money to really move this underlying. And then on top of that, the float was usually, 10 million, 20 million, 30 million, 40 million, 50 million, which is a super small float. So whenever shorts were on the wrong side of the move, it was really easy to use them as fuel to the fire and propel this underlying higher. So whenever I hear SpaceX is going to be increasing their flow and adding a little bit more supply, it makes me wonder and it makes me think, is that going to add to the downwards pressure that we're already seeing in SpaceX? Or I know the short interest on SpaceX is also increasing as we put in consecutive down days in the underlying. Could this be a great opportunity to see a little bit of a pop in SpaceX? But whenever I hear the float increasing, short interest increasing, it almost sounds like it's like PEMDAS because it's going to cancel them out a little bit. Like maybe this volatile move that we're expecting is going to be a little bit dampened because of the fact that this float is going to be increasing a little bit more. But maybe we get a surge of volume and a surge of interest whenever SpaceX gets down, to more attractive prices. So regardless, I know earnings is going to be later this week. We'll keep an eye on it. Not going to be trading it, but like I was letting Liz know, I have a little exposure in SpaceX, and for the sake of this position, it'd be nice to see a little bit of a pop. And then also, it's always going to be interesting to see how correlated, Tesla and SpaceX and, Elon are to each other. So with that being said, we'll keep a look at Tesla, see how it responds whenever SpaceX drops its earnings. And if they ever do a merger, that's probably going to be one of the most interesting mergers out there, especially with Elon kind of being the brand of it. But with that being said, QQQ, I know we got that massive gap up over the weekend. We did buy a put over the last week, 4 days left till expiration. We're down about $55 right now, $58, $59, not too bad. We could cut our losses on the day. We could cut our losses on this one. It was a little bit more of an expensive put, but we do have that out of the money put spread we sold on QQQ. So that's going to help hedge that short delta a little bit there. And then SPY, I saw Ranch, you were talking about that SPY position we had put on the other day for trade of the day. Yeah, this is going to be one we're probably going to have to look to manage potentially. I know it's 18 days left to expiration. We're kind of on the dance floor right now with that short call being tested at 750 right now. So we could decide to either roll that up and out, give us a little bit more time, see if we could roll it for a credit, or take that position off, maybe redeploy the capital elsewhere. I do already have some short delta on in QQQ with purchasing that put for a debit. So maybe I take off one of those in the portfolio. Maybe I take off the out of the money call spread. Maybe I take off the QQQ put just to take more short delta off the table. But with that being said, it's going to be interesting nonetheless. I know SPY is just inching towards that all-time high. Like it wants another all-time high. And I mean, that's right around the corner. I know earlier this morning, Chris was talking about how he had top-ticked his long position in ES. But I mean, this thing, he might be able to profit on that one. I mean, look at the last 3 consecutive days we've seen on ES. I mean, the tables can turn so extremely fast. And I mean, I think this one's a little bit easier to do that because NASDAQ had a little bit of a deeper sell-off, right? I know we've been talking so much of that rotation. We've been talking about that volatility we've seen on a lot of these tech names with Micron, SanDisk, and a lot of these other names that are inside of the NASDAQ market. But you can even just see the rebound is a lot weaker on NASDAQ than it is on SPY. So we're definitely seeing a little bit of a divergence between both of those assets, even though they're both up on the day. The velocity to the upside on SPY is just so much more obvious and clear as day. So that downside moving in NASDAQ gets pretty volatile, but man, SPY being extremely resilient can't be understated. I know we're going to get about 20% of the S&P 500 companies reporting earnings this week. So I'm excited to see how those pan out. Obviously going to affect the SPY, the ETF of the S&P 500. So we'll keep an eye on it. And then lastly here, we got the Meta position. We sold an out of the money call spread there. Is that what we did on Meta? Let's go to this chart. I forget exactly what Meta was doing. Yeah. That massive gap down from earnings and then just 3 consecutive green days after that. So a lot of names, extremely volatile here. So we're going to have to definitely keep an eye on some of these positions and manage them accordingly. But with that being said, lastly, I want to take a quick look at USO, see what's going on in there. Seeing the gap down. Oil not doing too much here into the open, but we're going to keep an eye on it because, again, we're going to roll the micro NASDAQ profits into the oil position. But with that being said, guys, let's take a quick look at the schedule that we have here. I know it's going to be a really exciting day. Here at 9 o'clock, we're going to have Dr. Jim coming right up, the GOAT. And then at 9:20, we're going to have Tim Knight coming on, getting his thoughts and insights on some of the charts. And then 9:30, we have the amazing Tasty Research coming from Julia Spina. And then at 10 o'clock, Confirm and Send with Chris and Liz. So they'll give us an update on what's been going on with the market. And then, of course, at 11:30, we're going to start Trade of the Day with Gus. We're going to pass it over to Mike at 11:45 and then pass it over to myself at 12 o'clock Central Time. And then lastly, 12:15. And then upcoming guests on the day, Amit and Kevin. It's going to be a great one. I know Amit has a lot of interesting insights, especially on social media. So these are going to be some really exciting guests. I'm excited for us to be able to connect with them. And then later today, we're going to have Karsan, right, with Tasty Crumbs later today at 3 o'clock Central Time with Chris and Gus, I believe, if I'm not mistaken. But it's going to be great, right? Kem is another face that you've seen quite frequently on Tasty, and you might be seeing him a little bit more often. So be sure to stay tuned at 3 o'clock Central to say what's up to Karsan. And we're going to go ahead and jump into see what Dr. Jim has to say. Dr. Jim, what's going on, brother?
What is going on, gentlemen, this morning? We're doing it. Yo, E, man. Yo, I just want you to know.
What's that?
Yo, I caught it, dude.
What'd you do? What'd I do?
When you dropped that, please excuse my dear Aunt Sally on us, I caught it, dude.
Did you hear it? You heard the PEMDAS?
Oh, dude, I 100% heard it. Dude, I'm like, he just dropped a PEMDAS on us, bro?
I was like, I don't think anybody heard this. Yeah, there we go.
No, dude, I caught it. I wrote it down. I'm like, that's some good stuff, man.
Amazing.
I'm like, man, that is some good stuff.
No, I see we got a little bit of volatility over the weekend, Dr. Jim. What you got on the table for us today? We definitely dive right into it.
Man, let's do it. Let's go inside the trade, guys. So good morning. Jim Schultz here for Inside the Trade. And let me know where you guys are at there in the chat. Let me know what you guys are looking at there in the chat. We kind of made it through earnings. Somehow we survived and we made it through the most important earnings season of our lifetimes. And so now, we got SpaceX, we got some other things coming on down the chutes this week. And so it's kind of a bit of a lull now, having gotten through, Meta, Microsoft, Apple, Amazon, etc. So what I want to do today is we all get ready for SpaceX tomorrow to kind of hear how much money they're losing. Let's go ahead. I want to do a similar strategy to what we did last week. So if you take a look at, let me see if I can grab my drawing tools really quick. If you take a look at the trade that we did last week, I think we did this guy on Friday, if I'm not mistaken. Like if I go ahead and grab, this little Meta deal that we did. So we did this guy. This was a post-earnings kind of rubble trade, right? Like after the earnings have been released, the binary event is over. And so now we can go ahead and we can step in when volatility is still relatively high and do a little something from the short premium standpoint. That's exactly what we did with Meta, and it's working out. I mean, Meta's up $33. And so again, being a short-term contrarian, like I love opportunities when a stock is way up or a stock is way down. I really, really like to take the other side of that because I'm a glutton for punishment. Like it just doesn't feel right if I'm not permanently seated in the pain cave. And so it's working out so far in Meta, but sometimes when you do that, you got to be ready for the old damp underoos. And so for Meta here, though, the short put spread is working out okay. So 535, 530. We did this trade last time. It's getting really close to 50% of max profit. I'm not going to manage it yet, just to at least give you guys a reason to watch from theory to practice later today at 2:30 Eastern, 1:30 Central. I want to do the same trade in Apple, but was Meta? So hold on, Meta I think was Friday, right? Let me look at let me take a look at my chains here really quick. So Meta was 731. Yeah, that was Friday. We did this guy just on Friday because Meta had earnings on Thursday. So again, I really like an opportunity where, I'm able to get in after the binary event. I mean, I like getting in before the binary event. Don't get me wrong. Like, again, I rarely see a stack of cash that I want to at least try to set ablaze. Now, sometimes we're not able to, but our hit rate is pretty high if you've been following the show for any length of time. But still, you go through the binary event, you go through the earnings, it's like, man, you might still have some elevated volatility. I mean, we still have it actually in Meta up here with an IB rank of just about 50. And so I want to do the exact same thing with Apple here today because, again, Apple has been beaten down. Like Apple has just been taken out behind the woodshed, and it's kind of amazing because we're still buying iPhones. Like, yeah, sure, the iPhone 17 and the iPhone 11, are they any different? Of course not. Are they exactly the same? Of course, but we're buying it. We are 100% buying it. And so I think there could be an opportunity to play Apple to the upside as well. And then, of course, tomorrow we've got SpaceX. Is it tomorrow? I think it's tomorrow. SpaceX overview. Earnings are tomorrow, so you're not going to want to miss Inside the Trade tomorrow. So you're not going to want to miss the show tomorrow morning because I will give you a fadeable opportunity at 10 o'clock Eastern, 9 o'clock Central on the dot. Well, I mean, the show begins at 10, right? I begin my analysis at 10:02, and we typically get to the trade around 10:11 to 10:13, so somewhere kind of in that range. And so that'll give you kind of an expectation for the show tomorrow. But we'll do SpaceX tomorrow. Wait, hold on a second. Wait a minute. And I see you guys in the chat already putting in some work, man. Look at you guys. Ordenu is here. Samel is here. Ranch is here. Man, look at Sergio and Wolf and Gapper. Christopher Springer in the house. Andreas is here. Man, Jerry Kramer is here. Man, I appreciate you guys. Guys, look at this. This is crazy. I don't think I've ever seen this before. SpaceX already pays a dividend. That's not even, wait a minute. Hold on. This isn't even right. Wait a minute. Something's not right here because look at this dividend. Hold on. I'm going to let's grab a third color just because we can. So if we look at, you got a dividend, 12/24/25. So, I mean, it could be right. It's possible they paid a dividend as a private company, like to their private shareholders. That's possible. That certainly happens. But I'm looking at this and I'm like, okay, this is an IPO stock. Typically, IPO stocks, especially the ones that are hemorrhaging cash like SpaceX, they don't usually pay dividends because they don't have said cash to pay out to their dividends because they're hemorrhaging said cash. And so generally speaking, you don't typically see, the money printer on at the company to ship out those dividends when the company still needs to kind of get its feet underneath it. And so SpaceX apparently is already paying dividends. That's kind of wild, man. I want to hear more about that on the earnings tomorrow on 8/4. But are you guys seeing this? Like, pull up SpaceX in your platform and let me know. Let me know in the chat if you guys are seeing the same thing that I'm seeing because I want to know. The algo wants to know. And yeah, let us know. So Frank is already front running our comment canvassing. And so no, let the people tell us, Frank. Let the people tell us because I think SpaceX might pay a dividend. And so that's crazy stuff. But again, we'll learn more tomorrow from the great one himself, Mr. Elon Musk. So, okay, let's go ahead and let's do, let's go to Apple. So we go to Apple. If we do, let's see. So we go to the trade page. I am thinking, so Apple has a dividend on August 10th. And that might be a real dividend, like an actual dividend. Again, let's look at that really quick. So Apple, yeah, that looks right. All right, 27 cents. right? Don't spend it all in one place. But here's your 27 cents. Thanks for being part of the team. And there you go. There's a BEU, right? I mean, again, there's a BEU. We got to make this stuff real. We got to make it tangible. And the Bonefish equivalent unit is the best way to do that. But that comes on down the chutes on August 10th for Apple. But what I want to do here, so take a look at the IV rank for Apple. It is 60. So we still have a pretty elevated IV rank, right? We still have a pretty elevated level of volatility that we can sell even after the binary move. And again, Apple has gotten absolutely rinsed from the earnings call. And I think the earnings call was actually really positive. In fact, here's a funny little thing. So a good friend of mine, this was like a few days ago, it was maybe Wednesday or Thursday of last week. We're out having dinner with some friends for like some backyard deal, whatever. You guys are going to love this. So I'm talking to a buddy of mine who is actually, he's a policeman, right? And he doesn't really, I mean, he might invest for long-term like indexes, whatever, but he's not really too well-versed in the market, right? Well, we're talking about all these things. And we started talking about SpaceX earnings. And he was like, I want to get in on SpaceX earnings because I really feel like, they're undervalued. I really feel like they're going to have great earnings. And I want to get in before the earnings call because when they report earnings and it's positive, the stock is going to go up. And I said, honestly, Mike, it's actually not how it works. And he was like, how is that not how it works? I'm like, well, in the short term, you'll be shocked to find that the market reaction on any given day or any given Sunday, for my Willie Beeman fans that might be watching this morning, anything could happen. Literally anything could happen. Now, over time, it is typically higher because of the upward trajectory, positive risk premiums, whatever. But day to day, week to week, man, you have no idea. I actually told him, I said, if I gave you the SpaceX numbers beforehand, I don't think you can make any money. Like, I don't think you would know which way the stock is going to go because you don't know what the market's going to cling onto. You don't know what the market's going to grab onto. He didn't believe me. He was like, Jim, that's the craziest thing I ever heard. There's no way that's true. So like either that night or the next night, I think it was that night, Apple reported earnings, right? Now, Apple earnings, they were amazing. They were incredible. They're like, yep, people still buying the iPhone 17. It's no different than the iPhone 11, but we made it a little bit smaller. We made it a little bit thinner, and the people love it. People keep buying it. What did the stock do? It went down by 10%. It went down by 11%. Well, I sent that article to Mike, and he was like, that's crazy. That doesn't make any sense. I'm not going to invest. It's all made up. And I said, well, that's absolutely true. I said, but when it comes to earnings reactions, I said, yeah, you really don't know. And so anyway, I thought you guys might get a kick out of that. But if we go to Apple, let's get back to inside the trade. Let's get off the soapbox and get off some tangents and get back on the reservation. So if we go to September, with 46 days to go, I'm kind of thinking we just play this thing to the upside. Like, I don't think we need to reinvent the wheel. Like, I think this is a fairly straightforward situation. Again, as a short-term contrarian, I see the gap and I see the crap and I'm like, yep, that's a buy opportunity, right? Very, 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 fairly straightforward in my humble, professional, personal, and possibly quite wrong opinion. And so I'm going to go in here and I think we just do a put spread. I mean, I'd love to sell a put, but my account's not quite big enough to handle that. I mean, I could sell, like if I sold like a 285 put, that's $4,000, right? That's a little over 10% of my account. It's not crazy, like out of the question stuff, but it still is a little bit too long in the tooth. Now, I am talking about Apple. I mean, this is arguably one of the quote unquote safest stocks in the market. I mean, I hate to label any stock as safe because when they come for them, like nothing is safe, not even Snapchat. But when it comes to thinking about, I mean, this isn't like NVIDIA, this isn't like AMD, this isn't Micron, this isn't SanDisk. And so I wouldn't feel as nervous about doing something naked in here as I might in one of those stocks. But still, you want to be mindful of position sizing and you want to bump it up to, 8%, 9%, that's okay. But over 10%, in my opinion, especially with an individual name, not really something I'm super interested in doing. So let's go ahead and let's sell this put spread. And then I see you guys in the chat. Man, you guys are doing some work in that chat. Man, let's take a look at where you guys are at there in the chat. Let's do this put spread. Oh, wait, I got to set up the put spread. Let's do, 295. So this is an okay short put spread. I mean, the probability of profit is great. I mean, 59, 60%, that's great. P50 of 70, 72%. It's moving around, obviously, as the market moves around. That's really good. Positive delta makes sense. A little bit of positive theta makes sense. Maximum profit is going to be your credit collected. That obviously makes sense. And then your maximum loss is going to be the difference between the width of the spread and your maximum profit. And so that is going to also line up with your buying power effect on a defined risk strategy. So all of that looks good. It all checks out. Like that's all good to go. The thing I don't love about this trade, though, is I'm only collecting right around 1/3 the width of the strikes. I'm a little bit over 1/3 the width of the strikes. But when it comes to defined risk strategies, just the way that I like to do it, I like to be more like 40% the width of the strikes because I know that later on down the road, I'm not going to have as many adjustment opportunities. It's going to be more challenging to adjust the strategy later on. This is kind of a set it and forget it type of thing. And by set it and forget it, I mean, I'm going to be thinking about it, about every 90 minutes or so. But I'm not going to be able to adjust the strategy as easily or as, seamlessly as I might like a strangle or even like a short put or a ratio or basically anything undefined risk. And so to me, risk control on entry and also kind of balancing the risk reward ratio on entry is a little bit more important when it comes to defined risk strategies. Now, for every gimme, there's a gotcha. And so the gimme of the greater returns and, kind of better control over the risk return ratio does come with a corresponding gotcha. And in this case, it's going to come with a lower probability. So if I move my put spread up from 300, 295 to 305, 300, then you can see now I'm actually over 40% the width of the strikes, and my probability is just slightly above 50%, slightly above 50-50, and the P50 is looking good at about 65%. I was looking at this a few minutes before the show when the market was open, and based on where Apple was at the time, it was actually a little bit lower credit and a little bit higher probability. Right now, I'm getting higher credit and a lower probability. And it's kind of making me maybe move back to the 300, 295. And this is what's great about trading. I mean, it's fluid. It's dynamic. Like you can change your mind on a dime. Right? And whether you do a 305, 300 spread or a 300, 295 spread, I'm not sure that's going to move the needle too much at the end of the quarter or month or year or day for that matter too much. But generally speaking, I don't want to be around 1/3 the width of the strikes. I like it as a reference point, but it's a little bit too low for my liking. Yeah, I think I am going to go back to the 300, 295. So we just lost 3 minutes of our lives that we'll never get back, but we had fun. We had fun doing it. And so the 300, 295, we can get it for about $1.80. Yeah, I mean, let's see if we can get Phil there at $1.80. Let's see if we can push this guy out. I don't really want to give up too much on this guy, but I have to make sure we get filled because we are currently inside the trade. And when you are inside, okay, we got filled at $1.78. Okay, I mean, at 1/3 the width of the strikes is $1.67. So we were kind of between the 1/3 marker and the 40% marker. A little closer to the 1/3 marker than I would typically like, but it's okay. If it's good enough for government work, it's good enough for us. And so, all right, let's go ahead though. I see you guys in the chat. Man, let's go. Man, look at you guys, man. I'm going to go ahead and I don't have time to go all the way back to the beginning, but I do see you guys in the house. I see Orgdenu. I think humidity in St. Pete is very high today. It's extremely high today. It is very, very high today. Wolf says, Doc, you need to close that EEM and head to Bonefish. Well, you need to watch. I do. Oh, man, look at that. Wow. Not going to do it now because that content is not going to create itself from theory to practice. And so you guys are going to have to come back later to have a look at this EEM trade. But yes, I didn't think we were going to Bonefish tonight, but apparently, again, markets move and things change. But I'm going to go to Donald Chrysler near the end here. So Donald, what's going on there, my friend? Donald says, any ideas on Target? It has been ripping for a while now, Dr. Jim. Yeah, let's take a look at it really quick. I only have a couple of minutes to go. And so, yeah, Target up $4. Let's take a look at, the history. Yeah, I mean, there you go. And so, again, I know this is crazy. I know this is like bonkers, ballistic, banana stuff. But when I look at this, when I look at something like this, I rarely see something that is so obviously bearish. Obviously bearish, because I don't want to buy high and sell higher. I want to sell high and buy low. Now, again, I mean, the momentum bros and the breakout bros, they look at that like, man, this is the perfect time to buy. You just broke out of a pace. You just made a new higher high. You just did whatever. I see it differently. And the beautiful thing is that's what makes a market. Like that's what makes a market, as they say. And so when I look at this, I would absolutely unequivocally want to get bearish on this trade. Now, you have to make up your own mind, of course, Donald, but when I look at this, I would be wanting to do something bearish. Now, the great thing about Target, being a $140 stock. Okay, they have earnings on August 19th. So I'm not going to do anything now anyway, because you're right in that weird spot where I do something today and then, the implied volatility expands going into earnings. I don't really want to mess with all that. But if I was going to do something in Target, you could go into September, you could probably do something naked in here. I mean, because it's only a $148 stock. I mean, you could sell a 160 call. Yeah, it's only $1,800. I mean, wow, that's really low. I mean, they're just giving them away. $1,800 on a naked call in Target? Man, that's phenomenal. The pop is 77%. The P50 is 91%. All right, so I can round this up to 100 for my mental records. You've got a credit of $3.85. I mean, I really like that strategy a lot. Now, maybe you don't want to just sell the call. Maybe I don't love the idea of just being, short and naked call. That's fine. You could sell both sides. I mean, you could go ahead and you could skew it a little bit to the downside if you want to play it to the downside. And of course, you can skew it to the upside if you want to play it to the upside. It's going to be your decision at the end of the day. But if I wanted to do like a strangle, let's say in the final seconds of the show, maybe I did like a 165, 130. Right? You can see now I'm collecting, the buying power is even less because I moved that call further out. My pop is actually quite similar to what it was, a little bit lower, but now I have a lot more credit to work with and I'm still a little bit bearish. And some would say that this is a little bit more strategic than just selling one side of the market. It all depends on how directional you want to be. So Donald, hopefully that helps give you a couple of things to think about. And I appreciate you guys. I appreciate you guys very, very much. I will see you guys later today at 2:34 from Theater Practice.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Just for a minute, let's forget about your favorite stocks. Just for 1 second, let's leave specific strategies on the shelf. Let's talk about what really matters. Your portfolio. How do you build it? What should you target? How do you manage it day to day? The answers to these questions and more are inside our newest crash course. So I'll see you there.
It's time to trade smart, post-PDT rule elimination. And Tasty Trade has the tools traders need. The Active Trader tab's comprehensive market data is designed for rapid order placement in a single click, while bracket orders let traders set entry, profit target, and stop loss all in one ticket. From the Positions tab, you can monitor positions, roll trades, close positions, and create conditional orders. Now, traders of all account sizes have more flexibility than ever before to engage in the markets. Smart tools for smart traders. Tasty.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Investopedia says we're the best for options trading. Stockbrokers.com says we're #1. And Broker Chooser raves about us too. So what else can we say other than boom? Trade like a trader. Tasty Trade.
What is going on, everybody? Welcome back. I know we're seeing a lot of volatile action so far this morning in the market, and we're actually back with Tim Knight this morning. So let's actually get his thoughts on the current volatility that we've been seeing in some of these products. What's going on, Tim? Great to see you this morning.
Oh, thanks. Hi. Happy New Week. Happy New Month.
Happy New Month.
Well, let's see. Taco time again. We had very interesting situation. As we all know, we had another instance this weekend of we're talking about a deal, and I've lost track how many times this has happened. But the two things that kind of saved me personally is as follows. One, I was really light, and I'm going to talk about that in a sec. And two, it's not a complete green fest. Semiconductors, which is kind of my obsession these days, is still red in a lot of cases.
Yeah.
And let me, before we get into the charts, I'll just kind of lay down a little allegory. It's sort of like the fog, because driving along, if a dense fog descends upon you, the sensible person slows down, maybe drives more slowly and carefully, really keeps it there on the road, because you can't really see what's coming. And that's kind of how I've been feeling recently, because the markets are always uncertain. But this manic on again, off again, on again, off again has really mucked things up. And going into this weekend, because I've gotten taco on the brain too after all this time, I dialed things way back, because only about a week ago I was like 240%, 250% committed, like, every penny I could possibly steal for margin, et cetera. I went into the weekend like 45%, which is months since I've been that light. And so I was not thrilled to see like this news this weekend, like, oh, here we go again. But it's like, well, at least you're not that exposed. And it helped also, as I said, that my concentration is still in the wonderful world of semi. So we can look at a chart or two kind of to amplify those points.
100%. So going into the weekend, just feeling a little bit of that uncertainty, or just those ideas with the semiconductors, you try to at least de-risk a little bit going into the weekend at least.
Yeah, I'm more afraid of tacos than I am of earnings these days, honestly.
That's a great point.
And from a more chart perspective, the clarity that seemed to be going on with the likes of, say, the ES has really gotten mucked up. So here we're range bound. I mean, we've been range bound since early May. So all of May, all of June, all of July. Here we are in August, and we have been banging around this rectangle for all that time without any sense of direction. This is neither bullish nor bearish. This is just kind of a hamburger grind. What the bulls can cross their fingers for would be, of course, an escape from this rectangle. And I suppose, just to just make something up, if it was like, hey, we're not just talking about a deal, we've got a deal, and here's the entire coterie of Iranian delegates to talk about it, that might be enough to just jolt things up above this and release all that pent-up energy from that rectangle. But as it is now, we are still range-bound, and it's getting a little boring, I got to tell you.
Yeah, it seems that way, especially the last summer months, and then especially looking at NASDAQ. Do you lean a little bit more towards the S&P 500? I know we've seen a little bit of a deeper sell-off in some of the tech, like NASDAQ and those kind of names. How do you kind of perceive those and kind of the divergence we've seen between both of the assets?
No, it's actually kind of just the opposite. I mean, I'll use that as your talking point as a flop to this other chart. As discouraged as I am by the ES, and as frustrated as I am by the ES, it's just the opposite for the NQ. I find the NQ chart still very exciting, even on a day like this.
Yeah.
We are up hundreds of points right now on the NQ, and of course we've gone up quadruple digits since Thursday morning. But this is still a good looking chart with a very substantial block of overhead supply, that is to say resistance. And I tend to be kind of a bottoms up chartist. I don't sort of say like the S&P is going down, therefore I'm going to do the following. I just look at a lot of individual names, most of which I've never heard of in my life, and kind of find appealing patterns and then kind of just build from there. So, like right now I've got like 25 positions, and that sounds like a lot, but I'm really light because they're just mostly teeny little positions, just of charts that I like.
Yeah, 100%. I'm hoping we get a little bit more of a rally here. I know you're more of an indice guy, but I just wanted to ask you real quick, Tim, since I have you right here. You have any thoughts on SpaceX as well, given the volatility we've seen?
thoughts galore, sure. Let me just punch that up because this is a big week for SpaceX.
Yeah.
Of course, their first earnings ever are Tuesday after the close. I will be watching with great interest. So let's talk a couple of things. First, I've mentioned before, here on Tasty, we do all kinds of videos that people can watch. And the one I did that got way more views than any other was about SpaceX before they came public.
Yeah, I saw that.
And it's hard to come up with an analog for that, but the closest I came up with in the video, and I did this about 1 or 2 weeks for the IPO, was Facebook, now known as Meta. And the link I saw was, you've got this charismatic, world famous founder, you've got this sort of cultural phenomena going on. I mean, when Zuck did his IPO, everybody was wearing a hoodie, and CNBC, that sort of thing.
Yeah.
And Elon's way more famous than Zuckerberg was at the time. And a very, very hot sector, in this case, satellites / space cargo and AI. And the thing about Facebook is that as anticipated IPO was, it was a flop.
Yeah.
And it went down 61% from its IPO to its bottom some months later. And it took like 15 or 16 months, if you had bought into the IPO, for it to even be flat. Now, it went on from the bottom to 400, like 40x gain or something like that. It was enormous success. But my point in the video was, don't be surprised if SpaceX is a complete dud for a while, maybe even months. I've got a well-earned reputation as a bear. In this case, I always say the same thing. I want it to go up, but it's probably going to go down for a while. And my guess, based on nothing, is that we're going to see double digits on this after earnings come out. And it will be a while, some months before, in retrospect, we can say, that was the bottom. I think it's just going to keep grinding away down this gentle, miserable slope that it's been in.
Yeah, no, I have heard word they might be increasing the float as well. So I'm just curious about how that might add to some of the downwards pressure we're seeing in there. But really interesting point you brought up about Meta and their IPO. It's kind of surprising too. You would think that, the hype that we get from social media and headlines and the way that information spreads nowadays, I would have kind of thought that would have bled into the hype of these IPOs a little bit more. Not that Mark Zuckerberg wasn't relevant, is in the day, but feels like it's a little bit easier to be relevant in terms of, being a CEO of a company in today's age.
Yeah, well, the market is designed to confuse and surprise people. And you're right about the forthcoming volume of shares out there, because 96% of all the shares aren't available. Wow. And the theory along has been that, starting on, I think, August 11 through December 9, that 95% is going to come free. Not really, because Elon's is locked up for a year, but a lot is coming free. And the theory is that, well, if you're going to get this stocks flooding the market, it'll naturally go down. It could go up. People could be surprised.
True. Because
the fact is that, you got to look into the heads of all those insiders and say, like, what are they thinking? Are they be like, I'm not selling at these prices. I can wait.
Yeah.
Which may well be the case. So we could get a complete surprise. I mean, after the unlock happens, the stock could go springing higher, completely defying expectations. So for myself, I almost think this is a stock where it's like, don't even bother looking for about a year so you can kind of suss out what's going on. It's not going away, but who knows what the bottom's going to be. It could be 30. It could be a lot lower from here.
Yeah, no, you're right. We'll see what we get on that end. What else is going to be top of mind for you as we get into the rest of the week here, Tim?
Well, naturally, crude oil. Let's wrap it up with crude oil, because that obviously is, on the one hand, getting zapped today, but on the other, I think we could be in for much higher prices on this. This latest peace talk has smushed prices again, but from a charting perspective, this looks like it's kind of found a happy home at this new base level of around $77, $78. This was the gap that led things higher, and we've been banging around in a very volatile fashion. But twice now, as we've gotten smacked down with the idea of like, this war is going to be history soon, it seems to be kind of reluctant to get below those that 77, 78 level. So, if one asked me, like, 2 months from now, do you think oil will be higher or lower? One might say, well, 2 months from now, this war is bound to be over. So, of course, it's going to be lower. I think just the opposite. I think it's much more likely that we're going to push past these recent highs we've seen and become a more robust push higher in oil prices and in energy prices. So that's my guess based on what we've seen thus far.
No, I mean, I do hope that plays out. I got a little bit of long delta in the oil, especially off this gap down. So with that being said, Tim, we'll see what we get over the SpaceX earnings, and we'll see what NASDAQ and the S&P 500 offer us. As always, appreciate you and your thoughts and insights. It's nice to connect with you here on this one.
All right.
Thanks, Tim.
All right. I'll see you guys later. Bye-bye.
Bye-bye. But yeah, guys, with that being said, we will be back here in a quick minute with some amazing research from Julia Spina coming up here in a quick moment. So curious to see what we're going to get into. But be sure to stay tuned. NASDAQ up right now, volatility collapsing. We'll see what this market gives us, and we'll see you in a quick minute. Stay tuned.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
It's good to be here in the studio.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click, all on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
What is going on, Tasty Nation? We are back with some trades or with some tasty research, which I'm really excited to get into because we got Julia on deck right now. Let's see what she's got going on. What's going on, Julia?
I love the new intro. This is my first time seeing it.
Oh,
we got a tasty research
great, right?
intro.
Yeah,
I love it. It's awesome.
Yeah, and you're premiering it right now. But no, Julia, as always, great to have you up here. Before we get into it, how was the weekend? It's the first day of August, so June and July kind of flew by. How are we feeling about that?
I know summer's behind us. It feels a little weird. It was
Right.
a crazy weekend with Lala. I don't know if you do Lala or have ever been.
No, I'm going to though. I'm nearing that area, so I seen the energy over there was pretty active this weekend. But were you able to pop out for a little bit?
I don't do Lala. I'm not a big festival person, but the
Okay.
after, yeah, that is Lala. It was a total mud.
Yeah.
Like especially on, I think it was like Saturday. There was like crazy rain, so the whole main stage turned into like a mud pit. And then yeah, it actually started on Thursday. So weather was great for Thursday, and then it started getting a little iffy on Friday. And then I'm sure it was still fun. It just looked like
I know.
a hot mess.
Definitely. I'm glad people made the best of it. Seeing the mud wrestling was pretty fire. But yeah, definitely
mud
some messy
looks
times.
fun.
It did
I
look
will
kind of
say
fun.
though,
Fun in the mud.
It looks pretty fun. It looks pretty fun. I'm not a big festival person, but the after parties I think are very cool because artists who play Lala will go do venues like all over the city. And it's usually more casual. It's like an hour-long set. Sometimes they have an opener and they just show up and they play, and you get to see like big artists at
dope.
much smaller venues than they would typically play.
Yeah.
So we saw like Deftones at Metro a couple of years ago, if you know them. That was like one of the coolest concerts ever because they're like a big stadium band. It was a very wonderful moment. Big fan.
That's sick. I'm glad that was pretty reminiscent of this moment. But yeah, a lot of good energy this weekend. What do you got today with some of the tasty research?
Today I'm
Julia?
talking about zero DTEs.
Oh, the best. Fan favorite.
Oh, the best. Yeah. We're going to keep it super simple today. We're talking about managing winners versus holding to expirations.
Okay.
This piece is by Kai over Options, Kai over on X if you want to give him a follow. But we're going to keep it super simple. We're going to talk about the trade-offs between managing at a small profit target, which is what you would typically use for a zero DTE strategy. They're volatile, ideal not to be in the position for a very long time in terms of managing risk. So we're going to be comparing having a small profit target versus just kind of letting it expire. What are the trade-offs? What are the, risks and rewards and that kind of stuff? Make sense?
100%. Let's do it.
Cool. All right, let's get into it. Okay, so every zero DTE trade, you kind of have to make a decision. Like setting the trade up is, a lot of decision, making goes into that. But then how do you manage it? Do you take profits early or hold through the 3 p.m. close? Noting that here we're going to be using SPX, and that management mechanics and settlement mechanics are really going to matter when you're trading zero DTEs. So because we're using SPX and it's cash settled, we're going to be comparing like holding it to the close versus taking profits early. So you can capture more of that like late theta decay by having the position on a little bit longer, but that comes, with generally more P&L volatility and potentially a bit more tail risk. So here we're looking at 20 Delta Iron Condors with $20, $30, and $40 wide wings, entered at 8:30 a.m. Central Time, and then either held to expiration or manage a 25% profit target. And here we're going like pretty wide with the wings, kind of to model like a synthetic strangle, actually. From talking with Mikey and Jamal on the show, it seems like $20 is typically what people will kind of do, or what they'll at least do a little bit more often, maybe even $10. But that's what we're going to be looking at. Make sense?
Makes sense. So you're kind of saying starting out as well, sometimes that theta decay will increase, which is really attractive towards the end of the day, but it kind of increases the risk a little bit because of that volatility that you get.
Right.
Gotcha.
That's kind of what we're looking at. And then adding that profit target, the philosophy behind that is that you're capturing, like smaller profits over time. But that can obviously limit upside because you're putting in a small profit target. But what that does is really controls your P&L volatility and your tail risk. That's the idea behind having the small profit target. But there's trade-offs that come with that. So here we're going to look at it. Make sense?
Makes sense.
Cool. Okay, let's get into it. So when you're managing at that 25% profit target, that lifted the win rate from kind of 72 to 75% as your base rate holding at expiration up to 89 to 90%. So very significant increase in your probability of profit by adding that small profit target, just because, premium, short premium positions, options are volatile. So the probability of hitting, a 25% profit target at some point before expiration is quite high across all these different positions that we tested. Versus 72 to 75%, still, very high, but not as high as when you add that, that profit target. And then what we looked at here, which was super interesting, about 1 in 5 profitable trades, gave back its gains at some point and then ultimately finished into a loss, meaning that those trades were profitable at some point, but then gave the gains back by holding the position longer rather than managing early at the 25% profit target. And that's kind of one thing that you avoid when you have the 25% profit target. Why they win a little bit more often is that your chances of the trade flipping and becoming negative, right, go away when you manage the position at a 25% profit target when it's already a winner, right? Make sense?
100%.
So that's something that you kind of get to avoid by having that profit target in there.
I got to say, that's probably one of the worst feelings. I don't want to speak for all traders, but it's one of the worst feelings when you're in the profit on a trade and not only does it turn around on you, you give back the profit and you take a loss on it. It's one of the worst feelings, I know for me at least, Julia.
And I tend to trade longer term strategies, I guess now, like trading like a 20 or 30 DTE is a little bit longer term.
Mm-hmm.
But for me, one of the worst feelings is when I put in, like a 50 or maybe like a 40% profit target. It gets to, if I have a 40% profit target, it gets to like 35%. And I'm like, I'm just going to hold out a little bit longer. And then the tides totally change.
Yeah.
That's a crummy feeling, but it's about consistency. That's why consistency is so hard.
100%. It's nice that you add a little bit more context around those things with the data that you have right here. So 100%.
Yep. It's about staying consistent as best as you can.
Yeah.
And then when we go to the next slide, so this is, again, where that balancing act kind of becomes a little bit more full visibility around it.
Mm-hmm.
But when you're managing at the 25% profit target, it bumps your POP significantly, at least in this back test that we looked at. But it also cuts down the P&L volatility of the strategy overall, as well as the tail risk. Although noting that we're working with defined risk strategies here, right? The tail risk, because it's capped at the max loss, just inherently, you see less of a difference there, but the P&L volatility is really where you see the difference. So you're profiting more often, but then the variability around sort of like your P&L long-term gets reduced by having that profit target. And that's kind of one of the other benefits. Here, we're seeing a little bit less impact in the tail risk kind of department, if that makes sense. And these are because we're working with defined risk strategies. For undefined risk, which you typically would not do with zero DTE, it's kind of more of a difference. They're managing early when controlling the tail risk. But here is where we're seeing most of the impact in those kind of P&L swings, as in like the variability that you get in your P&L, at least in this back test.
No, 100%. This context is super helpful. And I think sitting through unnecessary drawdown is another feeling that is not very comfortable to do. So just having the numbers to provide that context is nice insight.
Yep. It's just no fun when that happens.
No, not at all.
It's just no fun.
No.
So then we go to the next slide. We talk about this other piece to the trade-off. So managing early, putting these small profit targets in, 25%, people do smaller as well, but putting the 25% in, it does increase your POP and it reduces P&L volatility in this back test. However, what you kind of give up is that your average P&Ls are, capped over time because you're collecting small profits. The upside of potentially holding the position a bit longer so that it can, bring in more profits via theta decay kind of goes down. So that's that kind of trade-off. They're smaller profits, but they happen more often when you're adding that profit target to it.
So what you're saying is every gimme's got a gotcha.
Every gimme's got a gotcha. There's no free lunch.
No free lunch, not at all. Just trade management. That's all we got.
It's trade management. That's all we got. But I think the next slide actually has one of the most interesting kind of insights when it comes to making this decision, which is when you look at when you compare the different management strategies, putting the 25% profit target versus holding to expiration, and you compare basically how much profit is accumulated per hour, you see that having the small profit targets accumulates more per hour than having the trade on for a longer period of time. And so this is kind of like the structure of theta decay a little bit, although a lot of things kind of become more dynamic, you can say, when you get to zero DTEs.
Yeah.
But I think this is the most compelling argument to managing early, but not just for zero DTEs, but in general, which is that most of the profits really come in during the first kind of like chunk of the trade. And you can define the chunk sort of however you want. Here we're using 25% to cut off. But that's where a lot of that kind of like acceleration kind of comes in when it comes to your P&Ls. So having the trade on longer does result in higher average P&Ls. But for the tail kind of end of the trade, while you can collect more, it's not as much as in the first half. So if you wanted to collect more per trade, you can leave the trade on longer with the increased P&L volatility, slightly increased tail risk. But it's not necessarily the most efficient use of capital because you kind of like gained the most during the first half of the trade, and leaving the trade on a bit longer might collect more. But that capital is at risk for a longer period of time when it's working a little bit less in your favor, I should say, if that makes sense.
100%.
So that's another one. I think that's a really interesting point to the managing early, which is a lot of the profits just really do come in, at least a lot of the cases that we look at during the first half of the trade, when we're looking at like aggregate summed up statistics over a lot of occurrences, a lot of market conditions over a longer period of time. And so that's really, it kind of makes a big difference with longer dated positions as well, with like the 30, 40 DTE. It's just a long time to have the capital locked up. And if the first half of the trade is really doing most of the work, then keeping it on longer might increase average P&Ls. But the opportunity cost is that your capital could be doing something else that could maybe be, depending on what your goals are, more profitable, right?
Yeah, 100%. And I mean, there's so many different ways to skin a cat here, but that's why like even just seeing these numbers helps put that into context, no matter what kind of style of trader you are. It just gives you at least a little bit of insight, a little bit of an idea of how some of these kind of pan out. And it seems like trade management, it seems to be number one, like especially with the 0 DTEs. But with that being said, Julia, what else you got?
I think we got takeaways after this, but it's really, it's setting the trade up and managing the trade. There's a lot of strategic considerations during those two things. And here we're just kind of looking at our takeaways on the next slide. But when you're managing winners, and here we're just looking at a 25% profit target versus holding to expiration, noting that you can use a smaller one, you can use a bigger one, but the longer generally that you have the trade on, the more P&L volatility is what you tend to see for short premium positions. So when we looked at this 25% profit target, it lifted the pops to about 90% from 75%, which was already, pretty good. But 90%, you're profiting very often. Daily swings fell about by a third, and average bad days improved, noting that we saw kind of more of a difference with the P&L volatility because we're working with defined risk positions. The cost was lower. The cost, I guess, or the trade-off was lower average profit per trade because your upside is capped when you have that 25% profit target. But that being said, we saw most of the profits for the trades really come in during that kind of first half of the trade on these 0 DTEs timescales. So leaving the trade on a bit longer does collect more because you get more in theta decay on average. But the capital is generally doing a little bit less work, if that makes sense, compared to the first half of the trade.
It does. And it is kind of funny with that trade management, like you're putting out there again. It is kind of funny. Like this is a trade where you can't necessarily like bag hold. Like for example, like I'll get into like a Google trade or a meta trade and it turns into a trade where I was like, I kind of just have to hold this a little bit longer just to see what happens. It seems like 0 DTEs kind of forces you to do something and at least manage. But I mean, with that being said, Julia, some great takeaways.
So we got those takeaways. I think that's all I got.
Cool. With that being said, Julia, I appreciate you and your time as always. Thanks for hopping up on here. And it's always great to see you. But with that being said, guys, be sure to stay tuned for more amazing content we have coming on next. We're going to take a quick break. We'll see you guys here in a quick second. Peace.
It's time to trade smart, post PDT rule elimination. And Tasty Trade has the tools traders need. The Active Trader tab's comprehensive market data is designed for rapid order placement in a single click, while bracket orders let traders set entry, profit target, and stop loss all in one ticket. From the Positions tab, you can monitor positions, roll trades, close positions, and create conditional orders. Now, traders of all account sizes have more flexibility than ever before to engage in the markets. Smart tools for smart traders. Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Tasty Trade has crypto, and you can trade with 0 commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Tasty Trade has crypto, and you can trade with 0 commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
It's good to be here in the studio.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us.
What is going on, Tasty Nation? We got Chris and Liz on the line here to get their thoughts, do a little quick market check-in, see what's been going on since the morning session. It's looking like NASDAQ is up 378 points right now as we speak, volatility down, and also oil catching a little bit of a bid. Chris, Liz, how we doing? Good to see you guys this
Errol,
morning.
what the heck did you do to the market between the time I left you and now?
Hey, look, all I got to say is anything that's different right now, Mike isn't here right now, so who knows what Mike has been up to. Maybe he's been throwing in some bids for us, but I mean, what a reversal so far.
It's crazy, right? And vol is at a low 15.
Getting crushed. Take a quick look at volatility right now. And, you know, as we start to get into these markets here, what's standing out so far as we're a couple hours in the market open now? What's been standing out so far? Volatility trading at 1575 right now.
Volatility trading at 1575 right now, I think is what stands out most.
Yeah, getting crushed.
Yeah. Okay, so Chris, were your ears ringing this morning?
Yes, but I think I have tinnitus. Why? What's up?
Because we were talking about you, and I was like, I'm going to shake Chris down and find out what this intervention was happening in.
Intervention.
Yes. What is going on?
The Treasury and the Ministry of Finance in Japan are intervening in a public cooperative fashion for the first time in 15 years to weaken the U.S. dollar versus the Japanese yen.
Why?
Why does the sun rise in the east and set in the west, Liz?
It just does.
Because
Look, Japan needs to get up brakes on their currency. It's a political problem there. Japan's been a good ally to Trump specifically, not just the United States, but Trump in particular. Trump himself had an all-time line yesterday. He goes, "Japan's been pretty good for us, except for Pearl Harbor," which is a pretty good observation, and I thought that was actually quite funny. But, you know, you have a Japanese government that's been a friend of Trump and Trump's administration, and he's trying to give them a political lifeline. The weakening currency over there with higher oil prices, they import 90% of their energy. So when oil prices go up, they literally have to convert more yen into other currencies to pay for it, mainly dollars. And then all of a sudden their currency is getting weaker, which makes the oil more expensive. So it's a real negative feedback loop. This is an intention to put the brakes on it. Maybe a little bit more, because I know that we were sitting in some intervention trades that are now in the money here, Liz. Well, not in the money, they're making money, but they're the 65 calls. They're just on the other side of this hill. I can see them with my own eyes now.
Yes, I remember when you put that on. You can see them.
They're close. Just what Scott Besson, Tasty Live has been a friend of the Treasury just One more intervention for friends.
I would like to also put you on the docket, I guess, because I said this on air. I would like a segment where we have Gus reading tweets with voices. You can do it as well, because we almost got a voice. You almost did a good job saying what Trump said. We just need you to work on your Trump.
Actually, I don't have a good Trump. Ilya shocked me. Ilya has a very good Trump. I'm more of like I can do like Yoshi from the Mario movie, because that's where my kids are at right now.
Okay, all right.
I don't get paid enough to do that here on air, Liz.
No, it's
I can only do TP impressions. I've been working on it for years. I mean, not a lot of people know that in the outside setting. So your yen trade is working. Are you doing anything in the yen, Errol? No, right?
No, I'm not. To be honest, to be quite frank, I've been out of the loop actually with this yen trade. Chris has been keeping me updated on it, so it's been kind of nice to at least tail the context as to what's been going on in here. But I mean, a ton of volatility over just the last, especially 3 days. I mean, these moves can't be understated in these names.
Yeah.
Yeah.
Yeah, and there's a reason why these trades have been structured over the past several months the way that they have been, is because if you take an out of the money call, it's got to be pretty cheap, first off. And there's been some money thrown away along the way, but just I was doing the math, like this one will pay for the past 3 trades and then make some more money on top of that. If we can just get 100 more pips here. Please, Scotty.
Amy, I mean, you look at the tape, you might.
Yeah, no, they said they're going to consistently intervene. So there's 7 days to expiration. How many days are left to expiration? Let me just double check that math.
That's my next question was, how far out in time do you have?
4 days. So I just need another little push higher here this week, which seems to be in the card. Maybe it's in the cards.
What is that?
These are a lot of tickets.
65?
These are a lot of things. 65.
Oh, yeah, that's right at the expected move by the end of the week. You could definitely get that if this momentum continues.
Yeah, again, lotto ticket, lucky. It's wasn't a skill thing, but just 160 just seems like a lot in the sand.
Hey.
I digress, though. Can we shift focus away from the yen, just because while we have both of you? How are you guys trading Palantir today?
Oof.
Are either of you guys trading Palantir today?
I am. I talked about it already today. I've been in Palantir for a very long time. So I removed my options around it. I was waiting for today, and I'm selling a strangle around my stock. So I am bullish. But that's just because it's got really high premium. So I have no risk to the upside because I have the stock. It's a covered strangle. So I'm selling at the expected move on both sides. That's my move. And could it go down? Sure. But what I love about the covered strangle is that if it does go down, I will acquire more stocks. I'll probably roll my put, but conceptually, I will acquire more stocks and it will dollar cost average it. I don't want that to happen. I would prefer Palantir just go up. But if it doesn't, I know what I'm doing.
Yeah, I'm a little bit more sidelined with Palantir. I do like Palantir. More so the fact that they kind of have their hands in the government. And I mean, if there's going to be an underlying that is having help from political figures, I am slightly a little bit more bullish on some of those underlying. So, I mean, I'm bullish Palantir. I'm probably not as bearish as Michael Burry is, but I'm going to be sitting sidelined with this one. I'm excited to see the volatility because I think Palantir might have been one of the first 3, I think, underlyings that I placed an options position on. So with that being said,
really?
I think it might have been. Yeah, it was one was Riot, Palantir. There was another one that I totally forget. So many hyped up names that kind of come and go, but Palantir was one of those.
What was my first options trade?
I remember
I can remember so many first trades, but first options?
When did you get an option? What do you think your first options trade might have been? What is it, a commodity? Was it an indice? Or do you think it was like
No, it was a stock.
Underlying?
No, it was definitely in 2013.
Okay.
I was using the Sogo trade platform because at the time they had $1 commissions, and I was like pretty low.
Oh wow!
For 2013,
That's
was
pretty
right?
low for 2013. Yeah, for sure.
And also they had an office down right near where I live, so if I had any problems, I would literally just go knock on their door.
Like you didn't get back to my email. Yeah.
Yeah, they had you didn't get me. Yeah, I never said that to them, but that was kind of like I'm just going to swing by after work and wonder why this trade hasn't cleared.
Yeah, they got the
yeah. It was probably. Yeah, this is a good question. I was doing a lot of Gilead trading in 2014 and 2015 in options, but I was doing some things before that. I think maybe Pfizer. I was trading a lot of biotech and pharma stocks back then.
Okay, you like the volatility. That's because you like the volatility. That had to have been. You know how those names can be sometimes.
Yeah, I was a little bit of a dork. Place I had used to work prior to Tasty IG. Martin Shkreli was one of the clients, and there was like a whole pharma bro thing going on. It's like, well, if he's making money trading pharmaceutical stocks, what can I? And it turns out it was insider trading and price rigging and all that jazz. So,
but pharmaceutical stocks move, and they notoriously do because they're always on the precipice of a possible approval or denial. 100%. Yes, approval or denial. So a lot of times they do trade as binary.
You're right. I'm thinking of someone else. It wasn't insider trading. He was the price rigging with the that drug, and then he went to jail for a little bit, right? And the Wu-Tang album guy, right? I'm thinking of two different people here. Just want to clarify that. Don't want to besmirch anyone's reputation, but yeah, he was the Wu-Tang album guy.
And you know that Jenny was in the pit with the M clone scandal with where Martha Stewart went to jail. She was right there through it. That's how old we are. But yes, she was in the middle of that with M clone.
That's how young.
I see her in town here. I have not gone up to her once, but she has my favorite tweet of all time, where she just tweeted out oil several years ago, and anytime oil moves more than like 5% to the upside, I just retweet it.
Yeah, I mean, speaking of oil, we're catching a little bit more of a bid here. I know we touched on that a little bit more this morning, but we're chugging along. You know, as the market's begun to be a little bit more decisive in choosing a direction, it's looking like oil is following suit. So that's the trend so far. With that being said, guys, we are going to take a quick break here. Chris and Liz are going to be getting a little bit deeper into some of these questions with Confirm and Send coming on next. But with that being said, guys, we'll see you guys here in a quick minute. Stay tuned.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us. We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Investors Business Daily raves about us. Stockbrokers.com says we're best in class for futures trading, and Broker Chooser thinks we're pretty great too. So what else can we say other than trade like a trader? Tasty Trade.
Putting on strategies? That's easy. Taking off strategies? That's also pretty easy. But what do you do with everything in between? Well, in our Options Crash Course Strategy Series, we're going to show you how to handle the winners. We're going to show you how to handle the losers. But most importantly, we're going to show you how to handle everything in between with simple and clear guidelines and reference points. We'll see you guys there.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80-plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
We're back. You're watching Tasty Live. This is Confirm and Send. She's Liz Deer King. I'm Chris Vecchio. Liz, we should have played Rage Against the Machine, Bulls on Parade for the start of this show.
Ooh,
it's a nice tape here in this market.
It is a very nice tape. Hey, I know we just said goodbye to Errol, but sometimes I like to finish these conversations. You asked us about Palantir. Are you doing anything in Palantir?
You know, I'm thinking about it. I'm looking around the edges right now. We can just go right to the charts here because the trade tab for the 4 days to expiration, it's getting us a $13.50 move, which means if you wanted to just go a dollar wide to the downside here and maybe a dollar wide to the upside on the expected move, you're still collecting 40 cents of credit, and that's decent. And it's not a big trade, right? Max loss is $60 here for a max gain of 40. You, of course, could scale up or down. But that seems like a worthwhile roll of the dice, quite frankly, given everything that we've seen. That's a little rich, and vol's been pretty low. So just something a little bit more. Risking 3 to make 2, basically.
Just dip a toe in the water because then you can talk to people at your cocktail party on Monday night saying you played Palantir's earnings. Isn't it?
The meetings that I have after work on Mondays, that is not the crowd that would be interested in this. They would not care at all. So, all right, yeah, that's really, Palantir does have a decent bit of volatility, 133% right now. So something to fish around, and we'll see if we can get filled. These are pretty tight markets too. Bid-ask spread is what, 3-4 pennies wide right now, which is pretty nice.
Yeah, Palantir's got a lot of players in the sandbox, which is kind of fun. What's interesting too? Hold on, I just want to look at this. I wanted to see what the expected move for the cycle is, because I know we have $13 in. We have $13 for the 4 day. What's the following week? Yeah, so most of your moves. That's the one thing I like to look at, especially on a Monday. You can see $13 in the 4 day, and then it's only $15 in the 11 day. So when you're looking at something like this, it behooves you to stay in the 4 day, because the move is the 4 day.
Right. Yeah, Liz, I mean, last week we were doing a lot of trimming of the hedges around here, which, to your credit, you tried to take me out of my Amazon position before I could do it on last call with TP. But that was done. That was done. That was accomplished. One of the points that was demonstrated and illustrated there, which I think is good for the listeners at home, let's just say we were sitting in, the short call spread was sitting out near where were we? 235, 230? Yeah, okay. So we go to 235, 230 here. Right now it's trading for 5 cents credit. Would I put that trade on today? $5 wide strike for 5 cents credit? No. So what on earth would I be doing trying to ride that into ground for one more penny?
I would swear before I said no. Blank, no.
Right? Of course not. And so when you're considering, this was a double bull spread for what it's worth when it was put on, and considering the put spread side, the short put spread side really had reached its max potential there without running into a good deal of gamma risk. And if this thing drops, could potentially go against me very quickly. You just take it off. You don't need to literally squeeze every single penny out. The other side of this, though, Liz, is that because the long out of the money call spread still had some things to do, we kept that part of the trade on, which serendipitously today with Amazon up 4.89%, we were sitting just below that long strike at 285. So the position is now trading for $2.23 credit, which is nice. It's behaving the way that one would have hoped when the double bull was put on. But that's why when you're going into the double bull, unlike an iron condor, where you really just don't take one leg off, that's not really the rule of thumb. With the double bull, if the short put or short on the other side, the double bear, the short call spread side reaches that healthy 50%, 70% max profit level, just get rid of it. And now you're sitting with a position where, hey, if it turns around, it's gravy.
And we used to talk about this a lot too. You took all your risk off the table, and that's why I was like, get out of that trade, because this you have just profit potential left. You take when you're selling the Super Bowl is a different setup. To your point, it's not the iron condor. So you're bullish. So your risk is on the put side, right? Because you're using that premium to pay for that call. So you are in a great situation when you can take all your risk off the table and leave your profit potential. You hang on. Go for it.
Hang on here. Now, whether or not I maintain this position, right, we're still only at 284. I could monetize it today. I'd like to see a little bit more out of it. I know I can get a little bit more out of it. I feel like I can get a little bit more out of it. But let's watch. If Amazon starts to break down intraday, maybe because 18 days to expiration, so there's a little bit of time. But if this thing starts popping 287, 288, I'm just going to take the money and run. It was a good trade. We can find the next double bull somewhere else.
I like it. I like that you call it double bull instead of Super Bowl.
I call it the double bull because you're bullish if you're short a put spread, and it's, I don't know. That's how I was taught it when I was studying options trading, academically.
Well, we used to call it on the floor. You call it stupid if you're going in both directions in the same direction. So bullish or bearish is stupid.
Yeah, see, I'm a younger generation though, so they had to coddle me and they made me feel better.
Yes. It's not nice to say. Don't tell your daughter that.
No, of course not. It'll be, who knows what we're going to call it that. Okay, so ES here, before we get into the confirm and send questions, which you can always send to us, research at tastylive.com, research at tastylive.com, or put them in the YouTube chat. So if you're on the platform, come join us over there. ES is back to 7601. Liz, I have been complaining, kvetching about this for the better part of the last month because it's almost August 6th. I had the pleasure, the luxurious pleasure, can I say, of taking MES here on July 6th at 7,675. The past month has, I don't think the word is fun I'm looking for, but it certainly wasn't that. Now I'm back to break even actually on this exact tick here. So there's still 45 days to expiration. The reasons why I was wanting to be long, they have changed and shifted a little bit so far. I'm contemplating whether or not I should hold on to this or just clear the table with the risk. What would you do, Dr. Deer King?
What do you have here? You're long here?
I got long on July 6th at 7,600.75. So we are back to break even after a rip-roaring 3 days.
Well, if I was going to channel my inner Chris Vecchio, because I believe that in August, and correct me if I'm wrong, cyclically, seasonality, August is a down month, correct?
Yes.
So,
Well. Time out.
Okay.
August is a month for volatility expansion.
Okay.
It is not a down month for stocks. And I think that's the fine line we should differentiate here.
Okay. Now you're talking.
If I may, let me just run my little bot here real quick, which takes 5 more seconds. 4, 3, 2, 1, and now it's done. July goes into August. August seasonality for the S&P 500 is 0.84% higher 70% of the time over the past decade. The problem is, and this is the confounding thing, volatility in August, we don't use averages or percentages to talk about VIX, but it's up by 3.71%. So you get this thing where stocks tend to bounce higher, but also volatility begins to creep up. And then you have your September, October swoon, which, Liz, I mean, that's not uncommon. Volatility tends to expand during turns. And so a market that's going into its final leg higher, push to the upside, coupled with a vol expansion, fairly usual, fairly normal.
I like the clarification. Because I was about to sell everything I own because August is swoon.
I understand. You hang on these words. Nasdaq's a bit better, 1.55% higher over the past decade. So not quite a July, but this past July did not work out as well. But volatility expansion, that's to me, TP cued me onto this, and I think that's really the name of the game here. If we start to see low 15 prints in the VIX, I think maybe looking short a put spread in the VIX. At 43 days to expiration.
Oh, you've been hanging out with TP way too much.
I know I have been. And there's not really much to do here right now, okay? But that's why we get a push into 15. We imagine that we're a point lower. I would take 24 cents a credit on a dollar-wide strike in the VIX if it's like a 14, 13 short put spread that expires in September, right around a Fed meeting where they're supposed to hike. Come on. That's the kind of game I want to play.
You get so excited, and I love it.
We're on air for 9 hours a day, Liz.
This is what I was going to say. So I just glanced at the chat. Night Move says you got to get out of your trade.
Which one?
I think the ES.
MES. Yeah, I feel it. We'll take a poll later. I'll put a poll up later on, and we'll see what people think as I kick this one around the tires. Maybe I'll leave this to the audience. That way I can blame any losses in the follow account on them.
It's way more fun to say they took you down. Yes, I 100% should do that.
I agree. Confirm and send right now. Let's do it. Let's jump into these questions. We have 4 of them. You send us 4. We answer 4. Research at tastylive.com. Liz, we talked about this at the start of the program. We have Palantir options are in here on the equation or on the screen because we have, of course, the earnings tonight. They're pricing in a 9.6% earnings move tonight while its average post-earnings move has been closer to 13%. How do I decide whether the straddle is genuinely cheap or whether the past is overstating today's risk?
Well, the straddle is the expected move. So this is where I think that cheap or not cheap, it's the math. The straddle is going to be what the expected move for the cycle. So if you're saying cheap, meaning you want to buy the straddle, thinking it's going to go farther, I have known traders that have done this before. Straddle is the at the monies, like the right at the monies.
Oh, sorry. I thought you said strangle.
The strangles are the ones that are separated. The straddles are the at the money. So if you sell the put and sell the call, you'll notice at 14, 17, it's close to the expected move. I mean, give or take. Obviously, it's some differential, but that's typically what the expected move for the cycle is. So is that cheap? Meaning if you think it's cheap and you can buy this, I've known lots of traders over the years who trade completely different, where they'll buy these straddles thinking that Palantir is going to move. It's 13 instead of 9%, like they said. And then on the open, if it does move, if it doesn't move, it's expected
right away.
You usually get out.
Out right away.
Yeah. I know that have done that. I don't do that. I've tried it once or twice, and it has worked where it hasn't moved its expected move, and I get out for a smaller of a loss than buying it.
Why not do something like a reverse iron fly, even something like just not even a short iron condor, like a long iron condor? You just play for the vol collapse around earnings like this. There's no, I want to take a step back. Our methodology around here is usually there's volatility collapse after earnings. There's a lot of data to support that. However, the question here is that if they're trying to figure out if the straddle's cheap, maybe they're considering looking for the move beyond the 9%. And that wouldn't be uncommon this cycle, Liz. How many times have we seen one of these tech companies that are in the AI sphere go outside their expected move? So maybe they don't want to do the short vol. Maybe they want to get the long vol here.
Yeah.
So how would you structure that if that's what your mindset is?
Can we call this the not Kramer, George? Because remember, if every instinct you have is wrong, then do the opposite, right? So if you think it's going to go outside, I like the way you're thinking here, because then you can just go buy it. You could buy that. I would buy that straddle versus doing the reverse iron condor. So if you're looking at this, it's a $1,400 play. If you think it's going to move outside its expected move, there's your play right there. Lots of traders have done it. Any move, when you buy that straddle, either move to either direction outside will start making money.
Right, and that's why I brought up just the reverse iron fly here, because you have your straddle, right? And now if we sell the wings, we're capping off our risk a little bit here, and all of a sudden this goes into, it's a little bit cheaper a position, about $729 of buying power.
Yeah.
So there are ways to construct that view. Listen, this has been one of the things. I actually thinking about this now, it's like, wait a second, the Palantir is AI, Jason. What am I doing with this? Get out of here. No, I don't want to be in it. I don't want to do that.
So, and you have been saying that a lot of these tech names have been going outside, and not necessarily to the upside. I'm playing it bullish, right? But not necessarily to the upside. They've just been moving outside their expected. So it's not bad. I don't personally. I would rather. No, this is just a personal opinion. I would rather buy the straddle and not cap my risk. Because you're
rather buy the straddle and not cap your risk. Okay.
That's because then anywhere in any direction you're going to make money instead of it being to a certain extent. Because here you can only make X amount. Your max profit is 50. Where if it's going to move, you could make a lot of money if you're taking that risk.
That is very true. Hey, we have a second question here, and this one feels like it's directed at me.
Perfect. Okay, oil is down roughly 6%, while airline stocks are up more than 5% on hopes of a de-escalation with Iran. How could I trade that airline energy divergence without betting anything on today's headline holding? And without betting everything on today's headline holding. Yes, this is for sure with you, Chris.
We're trying to trade the relationship here, right? I mean, the headline itself is fueling the move between, we have oil down, so we can just go to CL on the platform, 79.48. And let's use Jets, the airline ETF, as a proxy here. It's not a deeply liquid ETF. It's only 1.4 million traded today. If you go to the options chain, so this isn't exactly the kind of place where you'd be placing these trades. Just go over to like UAL or American. American has 20 million shares traded today, deeper options markets. You could see 4 cents, 5 cents bid-ask spread. Okay, so I'm just using Jets as a proxy here. This is not a place where I actually do any options trading. But obviously we want to trade the relationship here. If you wake up tomorrow and you're long Jets and you're short oil, Liz, and Iran says, who's Trump talking to? Well, there's no deal in place. And like they blow up another Kuwaiti oil field, oil jumps, Jets come back in, you just get double tapped. If I'm thinking of expressing this view, if I want to like continue to trade along this this divergence, if you will, to continue, I'd rather do something to find risk, like going to maybe an AAL, which, hey, we talked about a headline with Ilya a few weeks ago. We just had record air traffic, commercial air traffic in the United States and worldwide a few weeks back. That's not something that happens on the precipice of a recession, as other people like to point out here. So maybe it's a long out-of-the-money call spread here in something like AAL. Conceptually, 46 days to expiration, 18-19. And then at the same time, I would pop on over into, I suppose we could do it in USO, where we could say that maybe the market's going to get capped off. What does selling a call spread look like in that same time horizon?
Well, and it's good. I'm glad you're using USO with this too, because it does have that drawdown or the drag, and it seems to be that will be in your benefit right now.
Right. And so if the backwardation ends, like if you want to trade this divergence without the headline here, and so that means you think the trend is to continue, maybe there's some bumps along the way, but directionally, regardless of the headlines, that's where we're going. There's still a decent bit of volatility in oil. You could sell a call spread that's at the expected move or maybe inside there over the same expiration window, and you could buy an out-of-the-money call spread in something like an airline and let time do the heavy lifting, so that way if things directionally continue, you get the theta decay on the USO side, and the market's going to have to do a little lifting for you for the AAL position to work. But like conceptually, that's how I would do it. That way, if tomorrow we wake up, I'm not simply long American stock and short USO or short CL, and all of a sudden I'm getting double tapped and my risk parameters are getting blown out.
When you put on a trade like this, do they need to be standalone trades too? Are you happy with both the USO position and the AAL position as standalone? If you only wanted one half of it?
Depends. I mean, I think everything deserves to be treated on its own merits, right? So maybe I have oil positions already, and then this would be a way to kind of like diversify my view within oil itself slightly. But I would treat this on its own merits. And then quite frankly, Liz, if I saw I wanted to do this trade and I go and go, okay, what is this going to do to like the beta weighted deltas in my portfolio? Oh, I already have this is increasing my portfolio correlation. No, I don't need to do this. It's a good idea, but conceptually I already have stuff going on that will benefit from such a market move.
Yeah, you got to make sure you don't double up to catch up, right?
Right.
Yeah, I get it. Good job. Good explanation.
How would you do it?
With these, well, I would look at them as standalone trades because, like, I know your brain looks at the macro and the reasons behind it, but I liked both of them separately, right? So that's kind of why I asked that question. I don't mind getting long American Airlines, and I didn't mind the way that you did it, and I love the fact that USO takes advantage of that drag right now. You got to check to make sure how the futures are looking before you put on USO, because that's usually how I'll trade that. But I like them both as standalone. That's where I was going with. I wouldn't put them on as a package, off as a package. I might say, okay, I don't mind being, short USO, and I definitely love the long AAL because it's $16 stock. You're using options in a good way where you have the power of, if it goes up, great. If not, you only lose a little bit of money. I like them as standalone, and I would manage them separately.
Yeah, you only lose money. USO becomes a more difficult product to trade if you get add a backwardation into contango and crude, because then all of a sudden the fund is selling the cheaper contracts to buy the more expensive ones. And
Wait, once that happened, I would probably close my USO and take whatever baby loss I had. Do you know what I mean?
Mm-hmm. Yeah.
So that's why I would separately.
You get a little bit of a heads up. USO, their roll takes place over a 5-day window. Let's move on to the next question here. We're zooming on through. If a trade has a 70% chance of making at least a small profit, but only a 40% chance of if a trade has a 70% chance of making at least a small profit, but only a 40% chance of reaching my 50% profit target, which probability should I actually use when deciding the trade is worth taking?
I don't know that I've ever seen this. Can you go to the platform and let's just throw in it doesn't matter.
Apple.
Yeah, and go to go to August, yeah, and just throw in 16 delta put, or just a random put for $1. Just throw the 285 put. There you go. Okay, so the numbers they're talking about down here are your P50 is 91. And which means that's the chance of making 50%, and your pop is 87. That's your chance of making 1 penny. I've never seen it where your P50 is lower, like the question they're asking, than the pop. Have you?
No, that's why when I read the question, my first instinct was, Right. I'm trying to think of a scenario where that's been.
This question might have come from us because we've commented on this before. So your P50 is your chance of making 50%, and it's usually higher than your pop.
I mean, I suppose if you're going further, like way out of the money.
Do you think are they buying options? Because I don't look at those numbers when I'm buying options. Like I never look at my P50 when I'm buying an option, but it's got to be there, right? Does it flip over?
That your P50 is going to be.
Then they're probably talking about buying options, right? Because your P50. And once again, you and I touched on this the other day at Confirm and Send. Maybe it was maybe it was Thursday, where somebody asked us if 50%, and I took it from the view of selling premium. 50% of 50% is 50%. And you said, and I'm glad you did, when you buy an option, you might want 10-fold or whatever fold because it's not there. So I don't think these numbers correlate when you're buying options. And that's what they're asking about.
I mean, listen, I think the plan is you're paying attention to the 40% number, right? Because if your trading strategy is mechanically exit a 50% profit, then you're more honed in on the 40%. I don't think the 70% is relevant. 70% chance of a small profit.
Wait, can you move the 315 put over to the 315 call? Just because then you'd buy it out of the money? That's where it really flips. This is what they're looking at, because they're looking at a P50 of 42 and a pop of 20.
Yeah.
They're looking at this. So you're looking at an out of the money option and purchasing it. And I don't necessarily know that I don't look at the pop, my possibility, and I don't look at my P50 unless I'm premium selling. I truly don't. And I don't know whether that's right or wrong, but those numbers in my heart of hearts are for premium selling. And I would actually, can you do me a favor, Chris? Can you ask me this? Do you have them this afternoon?
Yeah, I think I do have TP this afternoon.
So I would like to hear his, because I know he had a lot to do with the making of the P50 and the pop. Legitimate. Yeah. These are his numbers. So I would like to ask him and just buy an out of the money option and show him this. And maybe let's talk to him on last call about this one, if you don't mind, because these are his numbers. But I think of them as selling premium numbers, not buying premium numbers.
Right. Yeah, no, that's very true. And, listen, people like buying the options these days, Liz.
I like buying them too, but I don't look at my chance of making 1 penny in the money when I'm buying an option, because this is a low probability trade.
Right. No, that's more of a swing. Like I'm trying to print.
Yes.
We got bills to pay, mouths to feed, right? I'm buying out of the money calls to.
Yes.
I'm not buying lotto tickets, Liz, to like dream of small things. I want to get that vacation home, that boat, that private jet.
It becomes a very low probability trade. So just talk to TP about that on last call. So whoever asked that, I wish they signed your name. Tune into last call.
Yes. Last question here. If implied volatility is high, how can I tell whether the options are offering a real opportunity or warning that a big move may be coming? Both?
Yeah, implied volatility is telling you that a big move is coming and there is a real opportunity. You get paid to take the risk in high implied volatility. So yes, I think you're right, Cole.
The implied volatility is high for a reason. It's our job as traders to use our discernment to figure out whether or not the market's overpricing or underpricing that risk. And there are some times when we go to the expected move list, it's like, okay, dollar-wide strike. Wow, there's 100% raw volatility for this week, and yet I can only get 10 cents credit on this?
Yeah.
No, that's not worth the risk. And there are sometimes you go out, it's like, oh, hey, I'm going to get 70 cents on this dollar-wide strike. That seems a little rich for how the market usually behaves. So, ask, just a simple question, is implied volatility higher or lower than recent realized volatility? Look at recent earnings reports. Look at the broader market over the past several weeks or months. Has there been a catalyst that has facilitated the need for that high pricing? Over the course of this week with the stocks that are reporting, you're going to see higher volatility. And then also Friday, we have non-farm payrolls. So even the market itself may have a little bit of higher volatility here at the start of August. And I'm not going to delude myself into thinking, oh, it's because of seasonality here, Liz. There are specific catalysts on the horizon that may precipitate that type of situation. And then, what's the skew telling us? I suppose that's the third question. What's the skew telling us here? And if you can get through those, then we can try to figure out and use your knowledge and experience to determine whether or not the market's overpricing or underpricing.
Right.
But the answer is both to your question.
And I do think taking a look, so the common sense side has to kick in. You have Apple up. So Apple's got a 52 IBR. That means it's high. That means it's high for itself. Type in TLT if you don't mind. Put TLT. TLT, just because I think that's lower. Oh, it's a 41 right now. Like ZB, maybe ZB. Those are low, right? These are still high for themselves, but it's a 12% implied volatility, right? So it's high for itself. So this is where your common sense slide kicks in. So Apple's got a 55 rank, but it's still at, a 40% implied volatility. Here you've got, you've got a high, you're gonna get paid to take that risk. And you can kind of go through like that when you're looking at things that have, here's 148% implied volatility and a 72 rank. Which you could look at this and say, oh, wow, this has a super high rank. But at the end of the day, you're only getting like a 6% implied volatility.
Right. Yeah, and you have to go through the IVR is a starting point. It is not the end point.
It's not the end point.
Use it as part of a filtering process. I think both of us, everyone around here uses it that way. But hey, Liz, we are done here. 4 questions, 4 interesting ones, particularly question 3. Come back. If you sent in question number 3 today to confirm and send, I'll be with TP on last call, 2:30 Eastern, 3:30 Central. That's not how you quote that, but that's the way we just said it. He'll be sure to check in because he was one of the architects and minds behind POP and P50, not just on the platform, like as a thing that human beings do trading.
Yeah, this was his creation to the world. Yes.
That's his contribution to human society. TP, job well done. Liz, always, again, research at tastylive.com, research at tastylive.com. Send in your questions. We answer them to the best of our abilities. Hopefully you get the answers you're seeking. Otherwise, we go out the door 76.03 here, 1.1%. The NASDAQ likewise still up a buck. We'll call it 16. Russell 144 as well. So nice little bounce here for stocks coming out of this oil collapse on Monday. Hey, we're taking a quick break here. Liz, always good to see you.
Good to see you too. Happy trading, Chris.
We'll be back in 90 seconds. You're watching Tasty Live.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us.
Explain pot odds.
Pot odds is my favorite term, but pot odds in the poker world or gambling world refers to having a greater payout than your implied odds would suggest. So let's say I have 3-to-1 odds to win a pot, but the pot is giving me 4-to-1 odds to make that bet. I would have a positive expected value over time. So in trading, let's say you have a defined risk debit or credit spread that's currently at a max loss, and let's say there's 30 days left to go. There's not really a reason to close that position because you're already at max loss. You can only go up from there. So in that scenario, that would be a positive pot odds scenario or something that would give us pot odds to stay in.
It's good to be here in the studio.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80-plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Tasty Trade has crypto, and you can trade with 0 commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
What is going on, everybody, and welcome back to Risk and Reward. It's Black Shirt Monday here in the studio, as you may have seen on air earlier, and I'm joined as always by my wonderful co-host Errol Coleman, whose voice you've been hearing all day today. He's working so hard. Errol, how you doing? What's going on?
I know, they're like, Errol just keeps yapping. We got more yapping of Errol going on, but no, I'm doing pretty well, brother. Black Shirt Monday. I don't know what that entails for the overall market. Black Monday? I don't know.
Yeah, it's going pretty well right now. Yeah,
it is going pretty well. The market.
Wearing black. We got to both wear white on the same day and do some A/B testing, figure out what's best for the market.
I have to, because NASDAQ is up like 400 points already. So it was pretty crazy to see such a large gap up over the weekend. Such a large gap down in oil. and some other exciting stuff this week, but doing pretty good. How are we doing today?
Doing good. Yeah, I'm hanging in. Positions, pretty much everything's printing today. One of the best holistic days I've had in my portfolio over the last few weeks here. I got everything moving in the right direction. Rocket Labs, especially, very interesting move going on today. So excited to talk about that. Got nuclear stuff going well. So yeah, I'm a happy camper. There's nothing dragging me down at the moment.
Before we get into it, is there any specific company or earnings? I believe about 20% of the S&P 500 is going to be releasing earnings this week. Is there any specific earnings that catches your eye or not really?
I mean, I'm certainly interested in SpaceX, just really more just from a broader, market interest standpoint. It's going to be interesting to see what SpaceX puts out in their first earnings report here. We obviously know it's no secret to anybody that their revenue is not going to justify their valuation, but can they say exciting enough things to drive themselves higher, to make people excited enough about the future that they're willing to dive in on this thing that's been sliding a little bit? I think all those questions are very interesting. I'm not going to be trading it myself. Also interested to see what happens with AMD. I was talking on First Call with Chris yesterday about how it's interesting in this, in the AI space, whether it be, memory, semis, chips, hyperscalers, whatever you want to talk about, these stocks that are in their same little pockets of the AI space all move together. It's something we've talked about at length before as well, where with some of these companies, it's like they have 4 earnings reports a quarter because SanDisk is going to move when Seagate and Micron and SK Hynix and Western Digital report, and then any one of those other companies reports and it moves all the other 4. So it's this really hard calculus to get out ahead of, and with a lot of the stocks in the same pocket as AMD having already gone off, it's going to be interesting to see how they react, having already priced in a lot of that sector information. Have we overreacted, underreacted, somewhere in the middle? We'll see.
Yeah, 100%. I know you were just talking about AMD there. I see, we can jump into the Tasty platform here, but I see AMD kind of still trading near its highs. And then also, it's hard to keep a good man down. These memory names, I mean, they just keep on recovering like it's nobody's business. We've seen AMD kind of poke down to the lows at around 434. Now AMD is right back up trading around 478. Kind of been a similar story with Micron, SanDisk, some of the other names that you just touched on there a moment ago. But yeah, 100%. I'm kind of in the same boat with SpaceX. I think it's going to be most interesting. Of course, there's going to be some more great earnings coming out, but just seeing how it plays into the entire context of the IPO just releasing a few weeks ago, it being a part of Elon's brand as a whole. And then not to mention, SpaceX has seen nothing but red days since the reversal off the initial hype. And then not to mention, I know Chris mentioned earlier today, they're going to be increasing the float on SpaceX, which I actually wasn't too aware about, which is just going to add a little bit more dilution to the pot there. So just seeing, I don't know, even Tim Knight came on with an interesting perspective. He says he also thinks it can catch a lot of people off guard. You hear the supply increasing, you hear a little bit more downwards pressure. Maybe that's a catalyst to catch people off guard and see a little bit of a pop in the market. Nonetheless, it feels like everybody is interested in these SpaceX earnings. So we'll keep an eye on it.
Yeah, certainly no shortage of interest. Like I said, I just have no earthly idea how to even begin to trade it, so I'm not going to try to.
No, I feel you. I'm in a position
to try to price in, but
I'm in a position that I'm stuck in. That's the only reason why I have
exposure. I have some longs on as well. Like I have the exposure. It's actually at the very bottom of my portfolio today, despite SpaceX being up a little bit. But yeah, I have June 17th, 2027 short put spread on SpaceX there, 190, 200. So looking for the 200 level within like a year-ish. That seems less and less likely every day. But at the same time, it only takes, the one little headline, whatever that may be. They could say, excuse me, they could say, something Mars, something, and things go up. They could say something Tesla merger, and things go up. So it just takes them saying the right things, issuing the right guidance, and all of a sudden we could just be right back above IPO price.
It's kind of crazy that we're in the 9th week of this IPO. That was 9 weeks ago.
Yeah.
2 months ago. It's flown.
No kidding.
That being said, what's going to be top of mind for you, as we dive into things here? Anything catching your eye?
Yeah, Meta jumping out at me today, up about 7% currently at the top of my portfolio. As you guys know all too well, I am irresponsibly long Meta. I just keep letting it hurt me. All right, it's like I don't know. It's like a pineapple. It's like it's sharp on the outside, but I know that there's got to be something sweet in there. I just got to cut into it, and there has to be something sweet in there. And then, much like a pineapple, as soon as I put some in my mouth, it starts eating me back the way that pineapples do. We got Meta here. Few scattered headlines, kind of compounding into this big move that we're seeing today. It's not one thing or the other. They have shut their digital marketing arm. They want a wider AI rollout. They're going to rely less on third-party content enforcement vendors, so saving a little bit of money here to spend even more money on AI, which their free cash flow is the big concern. People are happy to see them at least cutting some spending somewhere. They have been listed as a potential hyperscaler tenant for proposed leaseback data center bonds. So Meta exposure is part of possible future financing deals offering extra yield. And then additionally, a third story, Australia raised its news bargaining levy to 2.5% of ad revenue, expanding scope to include LinkedIn. So that's going to hurt Meta a little bit, but obviously market doesn't really care too much. And again, when we talk about Meta is like a lawsuit company recently. It feels like every day there is a country or a continent that is suing Meta for something. Yeah. But when Meta gets hit with like a $2 billion lawsuit, it's just like, okay, I don't even know the equivalent of $2 billion to Meta. Like, I mean, that's a little quick math we could do.
At scale, yeah.
Say if Meta's a $2 trillion company,
right?
Then 1%, we're talking about, what's that? 2 billion? A trillion is 1,000 billion. So 20 billion would be 1% of 2 trillion. That's math.
That's a chunk.
Yeah, I think that's math. Because 10 of those would be 200 billion. Yes, that's right. So 20 billion, 1%. So when they get hit with a $2 billion lawsuit, we're talking about 0.1%. Say you're an average American making $60,000 a year. 1% of that is $600. 0.1% is $60. So we're talking about a $2 billion lawsuit for Meta is like the average American getting a $60 parking ticket. All right, it's not anything that's going to sink the company.
They definitely have like a pot of money that's like for their lawsuits. You know, they definitely have a lot of cash sitting aside for these lawsuits. They probably see coming, but that's insane to put it into those terms. I mean, 20 billion, 1%.
Yeah,
that's a pretty penny.
Yeah, it's incredible. So when you see things, Australia raised taxes, it's going to cost Meta $1.2 billion. Oh, Meta lost a lawsuit with the EU, they got to pay out $3 billion. It's like these are not even paper cuts. These are stub toes we're talking about with Meta here. They don't care. Happy to see Meta continuing to work higher. Happy I bought off the lows. I mean, this is just what Meta does. These quick gap fills, these rips around, and it feels like Plinko. It feels like Plinko whether you wind up in the right spot at your expiration date or not, with how much this rips around and rips up all the way to 750 and back down all the way to 500.
Much to my dismay, I will say, I got a little bit of short delta on it.
Oh, yeah?
I think like a day after the earnings. Might have to manage that one a little bit sooner, but it's definitely propping up the rest of that NASDAQ market and some of the other tech names. So tons of volatility there.
Certainly. Next thing on the docket would be Rocket Lab.
Okay.
This one, let's go to a more granular chart on this. Give me like a 10-minute. We got to look at what happened in the middle of the day today.
What about 15? You okay with 15?
Yeah, 10, 15, 5, any of that.
Do 15.
So you can see just intraday here, we opened down and we're just ripping lower. Yeah, this is an even better illustration. Big gap down off the open, and then immediately the market is like, wait, never mind. And we go flying higher. Rocket Lab currently trading up, 8% right now, 9%. Continuing to work higher here. And the strange part about this is I can't find the news driving this. Usually when you see a giant intraday reversal like this, it's because some kind of story breaks to save the stock. I can't find it. If anybody has it, feel free to drop it in the chat. I'll be sure to keep my eyes on that. But to my understanding, this is just delayed enthusiasm happening for Rocket Lab, not unsubstantiated, but not uncatalyzed, shall we say. Just broader market sentiment propping up Rocket Labs a little bit here. Perhaps some excitement ahead of SpaceX earnings for Rocket Lab.
That's probably what it is, right?
Rocket Lab, ASTS, RDW, all up 6 to 9%. Says nice boy. Yeah, why did we do something in the space sector today? So I guess there has to be some broad sector news that I'm just missing, but I haven't. I've whiffed on this. Just space earnings week. Yeah, I suppose that's all it is. Nice boy. Everybody's excited about the numerous space earnings this week. It's not just SpaceX. So. Interesting situation. I'm happy about it. I have this 2x1 upside bullish put spread going on here. Sold 2 of the 60s, bought 1 of the 55s for October 16th. Huge moves coming through for me as it pertains to those contracts. We continue to work higher, already up a little over $200 notional in that position. So.
Palantir has been another one of those companies that's been getting brought up pretty recently, quite frequently. I mean, just today in the chat alone.
Yeah, earnings tonight on Palantir.
Yeah, but it seems to be a pretty hot topic so far. I know Michael Burry started to get very aggressive with his shorts, near the highs. I think he unloaded most of those positions there, but Palantir still to be in the conversation.
Yeah, I miss the good old days when I could just, anytime we talked about Palantir, I could just say this company sucks. There's no way they can sustain this valuation. I was proven right on that thesis, and ever since it's sort of become a lot less exciting to talk about. Now that we're, I mean, what was this at the high 210 is like what we saw there.
Yeah, about 207, give or take.
Yeah, we sank right back, essentially cut their valuation in half, and suddenly the forward PE ratios and everything look a lot more reasonable. Still triple digits, but a lot more reasonable for what we expect of a modern tech company. Yeah, the shorts, I do believe Burry's already offloaded his shorts. I was shorting Palantir all the way up and have offloaded all of mine as well. So no exposure to this earnings myself. Yeah, I don't know. Interested to see what they say. It feels like these are like, Palantir is one of these, like, I don't want to say fringe, one of these highly speculative AI companies, one which was kind of the exemplification of trying to price in the distant future right now, which is a dangerous thing to do. And yeah, so it's a tough spot. Obviously, we're getting to a point with this AI boom starting to slide a little bit, where you can't just say AI 30 times and expect shares to go up anymore. Palantir, what is their current valuation? Let me take a look.
What would it be?
Currently at a $300 billion market cap, and they are on pace to do $5 billion in revenue, not profit, revenue in 2026. So
IB?
Yeah, they're going to do 5.22 billion in revenue is the current trajectory. That could obviously change today. But I mean, even if they were to double that somehow, we're still talking about, we're talking about $5 billion a company that is worth $300 billion doing $5 billion of revenue, whatever their margins wind up being on that.
That got to be decent margins. I know they
I
have
would
a
imagine.
lot of software. I know they got a lot of hardware and build out and teams they got to pay for, but
For
I
sure.
can imagine if their main product is software, those kind of services, I mean, not to mention they're kind of getting integrated into the government, right? Because they have their hands in a lot of the, the Iran war and a lot of the technology that they use out there. So, I mean, with that being said, I mean, they really have their hands in a lot of these things. But
Yeah. I mean,
the revenue and the
if you want to
valuation.
talk future prospects, I'll say this. I don't put my tinfoil hat on too much.
What's your thoughts?
But provably, Palantir owns, Peter Thiel owns JD Vance. He's made JD Vance's entire career, always taking him under his wing. This is all very publicly documented. So if we get into a world where we see a JD Vance presidency in the relatively near future, in the next 16 years, next 4 election cycles, let's say, Palantir is going to stand to benefit a lot.
And that's what it seems so too, because not even that Palantir is one of my favorite companies, but when I hear a company has their hands tied in with the government, and the government is known to bail out certain industries, certain people, regardless of your feelings towards it, it's like they seem to have a little bit of an edge nobody else has just by having those type of relationships. I didn't even know Palantir was so in deep with the government. At the start of it and at the start of the IPO with Palantir. So, anyways, with that being said, it's kind of crazy to see how they played out. Did not know they were doing $5 billion in revenue. That cannot be understated. We'll see how it plays out.
Yeah, $5 billion in revenue
nuts.
on a $300 billion market cap is incredible. For anybody that's curious, that makes their PE ratio as of right now 257. But we have come down from 425 in June of last year. So year over year, forward PE ratio, PE ratio 128, forward PE ratio is 257. So yeah, we've moved down from 425 to 128 PE ratio in like a year. Like I was saying, that's much more sustainable. I don't scoff at a tech company, a speculative tech company that has a low triple digits PE ratio. That feels like table stakes at this point, and we've seen companies successfully sustain those for years until the revenue catches up to back them. It was just insane to me when we were talking about a 400 plus PE ratio, and at the time that was something like a $500 billion market cap on a $4 billion in revenue or something. The disparity was even much more pronounced than what we're seeing right now.
Volatility getting absolutely crushed, trading at about 1565 right now. It seems like these markets is still making highs as we speak. And again, Meta leading the way with a lot of these other tech names. But I mean, now we're trading at 28,783. So, I mean, with that being said, lots of volatility in these markets. Volatility just getting crushed. I mean, if you had on some premium positions, we're probably seeing a little bit more volatility come out of those names. But it seems like volatility is going to stay low for the time being.
Yeah. So we'll see. Definitely getting compressed a little bit, but any of these earnings, I mean, it feels like, with I'll use Chris Vecchio's term, we had Mama earnings last week.
Mama
That's Meta, Amazon, Microsoft, Apple.
Okay.
Alphabet rather is the last one. Meta, Amazon, Microsoft, Alphabet he's coined that Mama, the Mama index.
The Mama
for all reported earnings last week. Big fan of that nomenclature. But yeah, with all those going off last week, it's easy to feel like, it's the excitement's over, but at least we got major companies going off this week that could still definitely shake things up.
No, we do 100%. Yeah, we're not doing too much today. I know off the gap down on oil, we got on a little bit of long delta. We had longed one of the micro futures contracts in oil. So that's a position that we have on over there. Very difficult trade to get into, I got to say. This isn't an easy product to trade right now. I mean, as you can see, things change on a dime, right? Over the weekend, we got this pretty massive gap down. Trump is pulling troops out of Kuwait and Bahrain, I think. And, it's like these type of things affect oil and the potential outcome that we could see with some of these names. So, yeah, I mean, you just really never know what you can get, but we did get along a little bit of the micro crude oil. Hopefully we can continue to see a little bit of a rally, a little bit of a bid. It's not too surprising to see us get that into the morning, considering how much we did gap down. But not going to overstay my welcome on this one. But it is nice to get a little bit of exposure to these oil markets. But energy as a whole, especially with a lot of these geopolitical conflicts, can be pretty crazy, to put it blunt.
For sure. Yeah, I've gotten long some oil as well. Not going to dive too much into the weeds because it is my trade of the day. Tune back in 40 short minutes at 11:30, and I will detail the full extent of my long oil position. But all I will say right now is that yes, I am long oil as well, and it correlates with my iron condor on SPX, which I am continuing to leave on. But we'll talk about that at length here shortly. So that's all I'll give for now. But agree with your sentiment.
Yeah. Before we transition here, I mean, anything else in the portfolio standing out to you? I know one thing that I was trying to get out of, was Micron. We had some short delta on. It was nice to see some of the downside move over the weekend. I put a position in to get filled, didn't get filled. That thing continues to rally without me, so I still have it on. So we're up a little bit on it, but that's one I would have hoped to get out of. That's probably most interesting in the portfolio, that Micron position. But anything more interesting on your end?
Yeah, the other thing I would float is NNE.
NNE.
Shout out Big Deal who gave me this trade idea just early last week. I've had this on 4 days, so not a long time. But yeah, NNE catching a nice little bid today. If anyone who was here, you may remember Big Deal threw this out, and I simply said, you know what?
Say less.
Nuclear name at multi-year lows. You don't got to sell me any further. I'll get long here. I have a 19-20 bullish put spread, something like a 4 or 5 to 1 risk profile I got on that into January of next year. I have 3 of those on, but catching a nice bullish engulfing candle here on the daily chart, up 8% on the day, considerable. And yeah, hoping for continued legs up out of NNE.
No, I love it. A lot of volatility. It's nice to see that volatility kicking, especially whenever you're trading at the lows. Give you a little bit of breathing room right off the bat. Maybe some room to allow it to ride. It seems like 1950 is right around that corner too. So if this momentum can sustain, could get there a little bit quicker than anticipated. But yeah, no, shout out to Big Deal. NNE in the chat. That'll probably be another underlying that we'll keep an eye on just to see how it responds around. It's nuclear, like you kind of said, has a lot of exposure to that industry.
Yeah, Big Deal popping in the chat saying, I prefer to stay in the shadows with a #1 chatter icon next to his name.
Big Deal is just trying to give us a quick shout. Absolutely loaded in those longs in NNE. So shout out to Big Deal.
Yes, appreciate the shout on that one. But yeah, those are the kings on my end today. We can throw it over to whatever you want.
Yeah. No, I mean, we really weren't doing too much today. We're up a little bit on the micro NASDAQ, which was really nice to build a little bit of a cushion to feel comfortable enough to even get long delta on in the micro crude oil. So we were doing that a little bit today. You can see our average entry at about 79 flat today. We had a little bit of trading activity below that, just briefly. Then we're getting a little bit of a reversal on the day as the overall market had turned around. So it makes you feel a little bit more comfortable whenever you have a little bit of breathing room there, a little bit of a cushion to sit on to see if crude oil wants to continue into its highs. But that's what we did over here on crude oil. Nothing too crazy. I know yesterday I was looking to get long on crude oil, and this is where I was a little bit in a pickle, right? I loved that we had the massive gap down. We had a little bit of a pop to the upside. So you can see I initially loaded in one contract at around the 880s on oil a couple times. And then I didn't like the volatility. I really didn't like that. I felt like I was chasing this move to the upside either. I almost felt like we had a pretty big, massive gap down. I would have loved to get long at lower prices. So that was a little bit of an emotional entry. And I recognized just a few minutes later, cut that position twice. So it was nice to see a little bit more of a sell-off into lower lows today, just to reposition and get a little bit of a better entry so we can skew that risk reward in our favor. But yeah, as you can see here, I was really looking to get into that on the Sunday night open. And then just going over here to the micro NASDAQ, we've seen a little bit more volatility into these names. If we can go over here down to a 1-minute chart at least and see if we can get these, bit of a delay there, a little bit of a latency. I believe that Trump, the Trump subscription I was looking, I was like, how is this actually legal? Like, actually, I sat down, I was like, wait, how is this actually legal? And it's a little bit of that latency. So, right, those posts are still going to be going out to True Social. Those posts are still going to be public. But some people are going to have access a little bit quicker with a very specific API, whatever the case might be, just by milliseconds.
Sure.
From what I'm hearing.
Yeah.
But I guess that's how it's legal, and I guess that's how you can kind of do some of those things. So latency is no joke. You're profiting off of latency right there.
Oh yeah.
Setting it up that way.
Well, yeah. I mean, it's like I've talked about before when we're at the SIBO, is like it's a big thing in New York for all of the giant HFT firms to be like as close as possible to
you did
the
mention that,
exchange, because the nanoseconds of difference between when you get that data and say when we get it here in Chicago, like they're acting on that.
It's insane. But yeah, no, guys, with that being said, we had a value area high here today. Just quickly to just break down the thought process and logic and what we were doing on some of these scalps. As we went into the Sunday night open yesterday, we were looking to get short, which we were able to do over here. It was a kind of same thing here. I was looking to get short. I used a market order into the Sunday night open, and I got one of the worst fills, of all time. I put in the market order, and I kid you not, this thing fills me like 10 points beneath that. And I was like, how did that even happen? So I got out of that position fairly quickly. We were able to reposition above our value area high where we were looking for some weakness. We tried to be as patient as possible for this one. We had a little bit of a downside swing fairly quickly. I wasn't quick enough to at least take off one contract down here at our lows. So I was forced against my will to sit in this for another about 10, 20 minutes yesterday. And we were just kind of chopping around. And then we were able to kind of stair step lower very slowly to get some lower lows into the market. And then our last exit over here was a little bit bittersweet because I'm over here trying to stay as patient as possible. This market is just chopping around. I kid you not, 30 seconds later, we put another leg down. It's like I was waiting for that. I didn't want to be watching the computer all Sunday evening. So it was kind of nice to build a little bit of a cushion into that. And that kind of matters because that affects our psychology and confidence whenever we come into the opportunities the following day. So with that being said, getting into today, we were retesting, if I can find it here. I know a lot of movement on the screen. Just bear with me. I know it's a lot of movement. But we were looking to reshort the same value area high where we were able to get a little bit of downside pressure off of. It was working out initially, and then we immediately got bought straight up. So I exited those long contracts, and once we were able to pull back on the value area high, I flipped the bias, and instead of going short, I got long one contract. And then I was looking to attack the pre-market high and then also the swing high that we had left from last Friday, which we were able to get to. One of these swing highs from last week. I would have loved to hold a little bit longer to these levels, but I just didn't recognize the market really had that level of tenacity within it. And it was really going to shoot up to these levels quicker than I thought. It's just so difficult sometimes to get long after the market just rallied 300 points and then the market rallies 750 points. And then you're going to be at that point, it's like, can't get long. We're up 750 points in the market and be like, bet, here's 1,000 points for you. So anyways, with that being said, it's been a bull day. It's been a bull bias. Bulls, easily taking control of this direction of the market right now. So that's kind of how the cookie crumbled today. But with that being said, I saw somebody in chat said the other day or earlier today, they're like, he said, with that being said, like 10 times. Yes, take a shot every time. With that being said, there's one more for you. And no, with that being said, it's nice to gain a little bit of profit there just so we can kind of put that cash into the oil position. So if oil blows us out and we got to stop out of oil, at least we have a little bit of a cushion on the day. And it's a little bit easier to do that from a psychological standpoint since we were able to do that on NASDAQ. So with that being said, that's what's been most exciting over here. Just a few scalps here and there, but it's going to have to hedge some of these other swing positions we got in the portfolio, like Meta. Meta's a top dog on the day. That's 3 consecutive days now. Meta up 6.5%, 36 points in the last 24 hours. That move can't be understated.
Yeah, there's so many moves like that too. I see Hachi and popping in chat and acutely saying these rips are absurd. I agree.
Yeah,
I agree.
Wild.
It's incredible what we're seeing right now. Also saying that I matched Gus's Iron Condor and SPX from last week with a nervous emoji. We're holding strong for now, Hachi. I'll get into that a little bit more on trades of the day here shortly as well. But yeah,
we traded from the bottom
holding
of
up.
That range now.
We're testing the top side right now. But I stand by my conviction, and I see Jared in here saying, SPX 7600. I got to get a little bit short. Christopher is mirroring that sentiment with his comment. Lots of that sentiment, and I agree. It just I think this is the time when it's getting tested, but we must hold strong. You can see we've done the same thing to the downside a number of times. These big red candles testing the bottom of the range, and just got to continue to hold strong. I would not be shocked at all to see another rejection off the highs coming up right here, especially with this much momentum. It's hard to sustain.
Hold the line. Guys, hold the line.
Yeah, let alone if we get any headline in the next week that remotely indicates that the war might be continuing.
If we break through to the highs, who are we blaming in chat for taking off their short position? Who are we blaming in chat? We broke off. Who didn't hold the line?
Who covering their shorts?
Who's covering those shorts?
Oh, man. Well, that's not going to be about all the time we have for today. You got any closing remarks for the people?
No, that's going to be it for me. We'll see how the market closes out. Volatility down on the day, getting absolutely crushed right now. This uptrend is to not be understated. We'll see what we get.
Yes, absolutely. I'm well aligned with you there. Just gotta wait and see what we get. Exciting earnings coming up this week. That's all the time that we're going to have together here today. But do be sure to stay tuned for some great trades of the day coming up next, being kicked off with a wonderful guest. We got so much great stuff coming. Thank you all so much for taking the time out of your day to watch. We dearly appreciate it. Never take it for granted. Errol and I will be back here same time, same place tomorrow, 10:30 a.m. Central Standard Time. See you guys next time. Thinking we start a show at 10.
Oh, yeah.
Thank you, Ben.
You bring it, we match it.
11:30.
Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us.
Explain pot odds.
Pot odds is my favorite term, but pot odds in the poker world or gambling world refers to having a greater payout than your implied odds would suggest. So let's say I have 3-to-1 odds to win a pot, but the pot is giving me 4-to-1 odds to make that bet. I would have a positive expected value over time. So in trading, let's say you have a defined risk debit or credit spread that's currently at a max loss, and let's say there's 30 days left to go. There's not really a reason to close that position because you're already at max loss. You can only go up from there. So in that scenario, that would be a positive pot odds scenario or something that would give us pot odds to stay in.
It's good to be here in the studio.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80-plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
We're back. You're watching Tasty Live. We have a banger of a market here today. 76.12 here on the S&P 500. Another 1.4% right now on the NASDAQ. Up at session highs. Not sure what Gus and Errol are talking about, calling a line in the sand here. We have calls to print, mouths to feed, bills to pay in this corner of the world, so hopefully this thing keeps running. We have a special guest here today on the show, though. We're going to take a step back from the intraday market action, so to speak, and talk with Amit Kukreja. He is the founder, the proprietor of the YouTube channel. You can find him online, Amit Investing, over 130,000 followers. This is a serendipitous talk. Believe it or not, I just happened to be scrolling through and watched his interview with Alex Karp, the CEO of Palantir, over the weekend, and then I found this on our production list for today. That's great timing. Amit, it's a pleasure to meet you. Good speaking with you here on Tasty Live.
It is a pleasure to meet you as well. I'm just going to zoom out a little bit, but yeah, excited to be here. Thank you for having me on and excited to get into markets.
Yeah, I want to talk process a little bit because you've obviously been doing this for a long time in a little bit of a different way. Your videos are not centered around like day trading, so to speak, but you're having real conversations with important people in the industry, and you're relaying that conversation to your viewers in a manner I think that we're trying to do similar here. But when you start trying to figure out who to talk to and what conversation is important, how do those filter into your investing process? Because there's just so much information out there for people to consume these days. A lot of it can be noise.
Yeah, it's a great question. I mean, I think the epicenter of what makes investing in finance media fun is looking for stories that have been undercovered and trying to exploit the gaps in those stories. I mean, I think that's the biggest way that people find multi-baggers, right? They look at something that the market's not paying attention to and then try to bring more attention and light to it. I think in the age of finance right now, where geopolitics and the macro, Trump, Iran, all that stuff has such an impact on financial markets second by second, especially with Trump's Truth Social posts, you kind of have to look at what's happening from a multifaceted scale. And why are the semis down if oil is down? Well, maybe the semis are down because the hyperscalers are up, and usually when the hyperscalers go down, the semis go up. Like all of those narratives, kind of combining them together and trying to figure out how those narratives can then impact people's day-to-day viewing habits of understanding what's happening in the market. That's been the fun of doing this full time. And it's also really exciting because every day there's a new puzzle to uncover.
Yeah, I mean, there's always people are always focused on the big names, right? But the real opportunity sometimes is in the places where people aren't looking or even talking. So how do you even get to a point where you find a name that you like, it makes it worthwhile for you to discuss or you to investigate a little bit further beyond looking at CNBC, of course, which anyone can do?
Yeah, I mean, for me, a lot of it's earnings growth. So one of the names right now that I've been interested in is Reddit. I bought it at 142 in the Memorial Day. I think it bottomed out at like 127 this year, got a little bit of a jump. It's 142. It actually fell from 180, so it looked kind of attractive. And what attracted me to Reddit was growth. 178% EPS growth, 60% revenue growth, CAGRing earnings from 2026 to 2030 by 30% for the next 4 years. It's one of those things where growth in this stock market is rewarded, but the sustainability of that growth, because there is cyclicality to some of the growth that we're seeing in the semiconductor names, is not rewarded as much. So I think when you find a name that is actually showing real profitable growth with sustainable margins, that already gets me excited. A personal preference of mine is I like to see companies that are founder run. So Steve Huffman, founder of Reddit, him still being at the helm, I think was really important to kind of get me to dive a little bit deeper into it. And then big TAMs, right? Obviously the AI semiconductor space, you're seeing the neo clouds get a lot of love because there's a massive TAM when it comes to cloud computing. You see the memory names getting a lot of love all year, even though they've been struggling over the past couple of weeks because there is a massive TAM for the amount of CapEx that's going to be allocated to these.
Sorry, just for the audience, TAM being total addressable market.
Total addressable market, right? So like there is a lot of TAM for a lot of market opportunity for the Microns, for the Nebiuses of the world to go after. So the names that are profitable, the names that are growing, the names that are sustainable, and the names that are in the right thematic are very exciting. I just want to preference, though, that the thematic of semis has been something that I've not been super heavy in the entire year because quite frankly, I didn't fully understand how incredible the CapEx story was going to be. Really, NVIDIA has been my major exposure, which obviously has underperformed a lot of the semi names. But B, I didn't realize the supply-demand imbalance that was happening in memory or optics. And so those two, photonics and memory have been the biggest sectors to kind of break out. So it's nice to see the software names and the hyperscalers, which is where my portfolios get a lot of love, but it's obviously underperformed massively the semiconductor names. But that also meant that July's drawdown wasn't as ugly for me because I didn't buy Micron at 1250.
So you mentioned, kind of wading into my quarter of the world, being a CFA charter holder. I find myself delving into spreadsheets after these earnings and convincing myself, like, this is a really good story. I need to put more weight behind this idea. But conviction is a dangerous drug, right? How do you figure out sizing when you start to delve into something like Reddit for the first time and you have this longer term view? How do you build into that position over the course of weeks or months?
Yeah, I think it's incredibly contingent on, your portfolio. If you have $1 million portfolio, buying 100 shares of Reddit is relatively easy. If you have a $100,000 portfolio, buying 100 shares of Reddit, which would be $15,000 is, it's 15% of your portfolio. So it's one of those things where I think usually when it comes to sizing for me, especially if it's a new position, it's usually less than like 2 to 3% of the portfolio just as the initial gauge. And then the question is the company executing enough for it to be able to grow into like a 3, 4, 5% position if I really have conviction? Or is there a mismatch between the company's results, which is what I think happened on Friday, and the market's reaction? And so I added to Reddit at 147 on Friday because it was like, okay, stock's down. It went down to 135, so it even gave you a better opportunity. But the earnings were amazing. The stock fell 25%. There's a dislocation there. I don't fully understand the dislocation, and maybe I'm wrong and the market's right, but I want to take advantage of that. I think that's literally what's happened with Microsoft, Google, Amazon all year, Meta not so much. And I think people today at least are being rewarded for taking advantage of it.
So one of the things that you're getting to here is a bit of a process, right? Some folks, when they start trading, at least you hear, what newsletter do I need to subscribe to? Can you send me this scan? Can you just give me the secret formula? And that's not really how all this works. You're on more of the investing side of the time horizon here, but I don't think in terms of sticking to process, it's any different from a trader versus an investor. So just how do you figure out your process? How do you stay disciplined to it? What do you find yourself making a mistake about and avoiding those mistakes in the future? Because I think that's one of the important things that we as traders have to do, kind of be a little bit more introspective and, stop getting into those pitfalls so we stop losing money.
One thing I will say is I have been getting into trading a lot more this year. I've been telling my audience, day trading in particular has really started to excite me. And part of the reason for that, and it's just equity, no options, but part of the reason for that is because the thing about day trading is like you can take advantage of a trend intraday. So last week there were some amazing shorts, right? And it's just like, it's pretty obvious. It's losing VWAP, losing support, hitting resistance, 5 over the 9 EMA, crossing into a bearish downtrend. Like it's pretty obvious this is a good short right here. And I think it's very encouraging if you have a trading account and a long-term investing account where you can take advantage of some of those trades. Because even if you don't want to be short Micron for the next year, if you could be short Micron for the next 5 minutes and make some money, that's not a horrible idea. So I think the process is very similar for investing, right? When you have a thesis on a name, you have that thesis, you validate that thesis, you continually validate that thesis in the midst of the macro uncertainty that may exist. And you also recognize that, and this is the big thing I've been telling my audience, is like, are you buying these names for the next 5 years? Because I've traded Micron many times this year for an intraday scalp. And, you make a couple $100, a couple $1,000 here and there. It's like, wow, it's like you made some good money on a name that had a lot of momentum going up or down. But I personally don't believe in Micron for the next 5 years. I just don't. I'm not holding on to a legacy commodity memory maker that right now is benefiting from the greatest supply demand imbalance we've seen in the history of humanity. It's like, I don't know if I can hold that for 5 years. And when I've asked a lot of my chat, they also are like, dude, I'm not buying it for 5 years. So like Reddit, I can buy for 5 years. Shopify, I can buy for 5 years. Amazon, I can buy I can't buy some of these memory names, semiconductor names. So I think that is a real big part of the thesis. Just like if you're trading, you're usually not buying it for 5 years. You're buying it for the next 5 minutes, maybe 5 weeks, maybe 5 months, 5 days. But staying true to understanding why you're in the position is like the most important thing about trading and investing, in my opinion.
So this is kind of twofold, and maybe it's a little specific to folks like you and me, but I think it does broaden out to the general conversation around social media, right? When you build an audience around engagement in markets, people come to you for takes. Yeah. What's your opinion on this? What's your opinion on that? When you're on social media as a retail trader, right, you're participating on Reddit or you're on Twitter X, and you jump into the stew, you're inclined to give your opinion on things. So when you look at the general sentiment in markets, how do you avoid letting that noise of social media, of the zeitgeist, actually influence your process, knowing that that pressure is always there? And I say this because I know a lot of retail traders, they say, like, what should I find on Twitter? It's like, get off of Twitter. Yeah. Like, don't tweet. It's probably not going to help you as a retail trader make better informed decisions.
Yeah, look, I agree. I think that the larger FinTwit community that's out there is an important community for people to get updates around what's happening and hear different perspectives. I do not think people should blindly follow single individual accounts. And, I've been through this before where you get a few names right and it's working and people think you're like an oracle or something. And then you get one name that doesn't really do what the other names did. In fact, it might go down. And it's like, your thesis on the first two names were sound, but it's really hard to bat 1,000. And so I think from that perspective, and I've also been the victim of that, where I see a name get mentioned so many times and then I dive into it and I'm like, I just bought this because other people were hype about it, not because I love it. So I did that mistake last year, and I think I learned a lot from that mistake, lost some money on that mistake. This year, I really kept myself stringent to not buy the latest bottleneck trade that for some reason is going up 50% in a day. Like I tried to be like, I'm happy if you made 50% a day, but I can't live with that type of volatility. And in July, many of those names went down 70% in a day. So I think it's really important to have your own process to kind of shut out the noise. But at the same time, you have to be able to assume and understand different perspectives, because there's been plenty of stocks that I found on X that people talk about that definitely piqued my interest. It all comes down to like, do you have the independence to like think for yourself? And it's not an easy thing. But I think over time, and it probably involves losing some money, you have to be able to think for yourself, because if you can't, you're just never going to survive as like an investor that has their own opinion on their investments.
I mean, it's crazy that we already have cognitive offloading going on society-wide. People looking for avatars or thought leaders. Oh, this person says this. I like what they say. I like the cut of their jib, so I'm going to repeat what they say in conversation around dinner tonight. Yeah. And now we have AI replacing whatever remnants of critical thinking that were left over. So just, I mean, I find it difficult myself sometimes, but you just stick to your plan, stick to your process, and you have to avoid it here. I want to talk about Palantir for a little bit, though, if that's okay with you, because those earnings are coming up tonight here. Stock's up 1.8% today when we're talking here on Monday, this August 3rd. But you just interviewed Alex Karp, and I got the pleasure of, again, listening to it over the weekend and then seeing you on the production schedule, which is odd serendipity. I think my team may be watching me or having tapped my phone. I'm going to look into that. But the cleanest takeaway seems that he's not talking about AI in the way that most public market investors and company operators are talking about AI right now. You hear people like Dario to some extent, and certainly Sam Altman. The models get better, so the value has to keep going up to a certain degree. What was your takeaway with Karp after sitting with him? How are you feeling about the AI trade now?
I think Karp basically got the entire market with his appearance on CNBC a few weeks ago to start really understanding that the value from AI is not going to the model layer. And genuinely, I'm starting to agree with him. He said this 2 years ago. This is part of the reason I invested in Palantir back in 2024. The value goes to AI infrastructure, the compute that's needed to create the models, and then to the application layer, aka the software companies that have been dead all year because of the narrative that Anthropic's going to kill them, to make those models useful. The actual models producing tokens, in my opinion, based on what Karp is saying, aren't valuable for two reasons. Number one, it's a commodity, and more open source models are coming up to reduce the cost. We're seeing Anthropic reduce their costs. We're seeing GPT reduce their costs. It's because they need to keep people hooked onto the models, and the only way to keep them hooked onto the models is to have it cheaper. Number two, the model companies aren't actually going into an enterprise and creating transformational change. I mean, I think this is pretty obvious. The model companies want to sell you tokens, and they're going to sell you a process or a subscription or a workflow that helps you sell more tokens, use more tokens, not actually deliver outcomes. They're not judged on outcomes and business results. I think Palantir is. And so as a result of that, I think the AI trade, once again, is bullish for the semis because you need the compute. It's bullish for the application layer. I really am not that excited about the model layer. And I think when those companies go public, their S1s are going to be pretty interesting because people are going to finally find out where is this revenue coming from and is there an actual path to profitability.
One of the topics that I heard him discuss, he's been talking about this for a while, is the idea around sovereign AI.
Yeah.
It's not the most popular investment theme in the cycle right now. Obviously, everything's on semis and what the latest Kimi model out of China is doing right now. But how does sovereign AI become something that comes in a little bit more focus? And how do you think that the market adjusts to that type of narrative shift?
Well, sovereign AI to me is, once again, bullish for the semiconductor stack, because if you're going to be hosting your own models locally, you're going to need GPUs, you're going to need compute, you're going to need on-prem. That's why Palantir has this partnership with NVIDIA and Dell. So I think the market will think AI infrastructure should go up over time as sovereign AI and actually building your own models, hosting them locally is relevant. But I also think the application layer will benefit from that in and of itself. The problem with the foundation models like OpenAI and Anthropic failing, which I don't think they're going to fail, but like not really succeeding as well, is because they have so many spending commitments. There's so much of the RPO of the Max 7, Oracle's basically 50% of that is OpenAI. So that's the fear. Like if an OpenAI and Anthropic fail, I think the AI trade will continue because like there's plenty of demand for AI writ large and there's plenty of models to provide it. But if the valuations in the public market are rooted on the expectations of spending commitments from the foundation labs, that's where things get a little bit funky.
I think Karp's point about the labs or rather the models themselves, that layer not being the most profitable. I mean, the advent of the refrigerator was hugely important, but it was ultimately the companies that were able to produce the goods that were stored in it that made more money. I mean, like Coca-Cola made more money than anyone else because of the refrigerator, not the refrigerator company at the end of the day here. So maybe that's perhaps a proper corollary. You mentioned tokens here, though. What do you make of these consumption models right now? I know Karp's been very critical of the way that the AI industry has shifted around token consumption. Is this broken? Is this model broken for enterprises? I love going over to Reddit as an aside and seeing these engineers who are like, I'm at the top of my company's token user board. I cost my company $1.4 million this month. I know I'm not getting fired. It's like, is that the right set of incentives that we want?
I think that lasted for like a week and now that's over. I mean, like, I think token maxing cannot
Too
happen.
bad.
Yeah, like it's unbelievable that companies were excited about their employees using all these. Because I think companies were like, okay, my employee will become 10x more productive, so just let them spend the tokens. And then they realized, wait a second, we've got to orchestrate and govern these tokens in a much more sophisticated way. So yeah, I think the era of token maxing is over. It lasted for about a week. The market needs to actually see results from the tokens. And I think internally companies are like, dude, if we're going to spend billions of dollars on this AI stuff, we need to make sure we're getting the output that is required. That doesn't mean the ROI needs to be direct immediately, but there needs to be a path to an ROI, and token maxing, doesn't give you that type of path.
So what's the next step for AI here? We just got through, you've probably been following what happened with Leopold Aschenbrenner's situational awareness. He's been the poster child for running up the scoreboard in AI. And I know that he still finishes the year with an 80% year-to-date up move when his public book is sold, but it does appear that is mostly from Anthropic's private holdings.
Yeah.
Is that trade done right now, or was this just a case of over leverage? Perhaps there's a story in there. Amit.
The honest answer is I don't know. I want to say that the AI trade and the semiconductor trade will continue because the demand for compute is monumental, and the hyperscalers last week told us how much capex is being spent. And I want to say the Leopold leverage situation was just a small situation, and it happened, and it's out of the system, and we can move forward. And that's what the stock market's kind of showing us right now as these prices are rebounding. The problem is, what if it's not? Like, what if there was a little bit deeper of a concern around capex, ROI, et cetera, and this is a bounce that's a needed bounce, but a lot of these names are still down significantly from their all-time highs. Again, my default is to be a bit more bullish here because when Amazon, Microsoft, and Google say they're going to be spending close to $1 trillion of capex next year, you start to think, okay, like that money's going to go somewhere, and that's going to go to all the names that Leopold was holding, and hopefully the leverage is out of the system. And if there's not that much leverage, these names have the room to go higher. But if that leverage gets back into the system, or if the system's not fully okay with the sustainability of the earnings, and you got the midterms coming up, you generally have some seasonal weakness that could all push things down. So I'm really impressed by the price action we're seeing today. It's rebuking Friday's rejection of the Thursday price action that we got. That was monumental.
Sure.
But I think we need at least another week or two to see like these moving averages can be sustained.
Listen, I got sucked into a long S&P 500 position on July 6th, and it has been a terrible month just holding on to that. I can't believe we're back to break even today. So now the question is, well, now that I'm here, am I going to stick
get
around?
out? Right, yeah. Well, let me ask you, are you thinking of getting out or letting it ride?
I'm thinking about it, but I just kind of like the way that the stock charts are moving right now. I mean, like the indexes are shaping up. RSP has just been at all-time highs. The valuations in this market have come in substantially.
Yes.
I mean, you look at the PE ratios for the Mag 7, for the S&P 500, large cap, the mid cap. They're all sitting at levels that they were at last April. We'll just call it this April. This April's lows, right? March, April. And we're how many points higher? 16, 17% higher in ES at this point in time. So to make the overvaluation argument for this market to me is very difficult. And I hear all those people from last year saying, oh, it's just the Mag 7 lifting the indexes. As of Friday, the Mag 7 year-to-date return was 0%.
Yep.
So all of this is all the breadth that everyone's been complaining about wanting. It's here. The earnings growth is there. I know the earnings growth right now is fantastic, by the way. I was checking out FactSet's report at the end of last week. They have a great earnings insight report. They said that the blended earnings growth rate for the S&P 500 is 47.4%. Now, granted, that's huge, and a lot of that's Alphabet. A lot of that's what we saw last week with Amazon. If you take out their contributions, we're still looking at 28, 29% growth for the quarter.
Right.
Which you say you start with earnings analysis, Amit. Can you just contextualize what those numbers mean? I'm looking at this from I remember in 2014, 15, 16 studying for the CFA charter and thinking stocks return 8% a year and earnings growth is maybe around 10% a year. So some of these numbers just seem impossible from what I know.
Well, 88% of companies so far in the S&P 500 beat earnings. They beat by an average that is higher than the beats over the past 10 years. So it makes sense why the multiple on the S&P is basically at an all-time high and beginning to expand because the multiple on stocks are expanding because the earnings estimates keep going up. The story of the entire bull market, at least for the past year and a half, has been earnings. Like 2023, it was getting out of the rate hike cycle. 2024, it was more liquidity entering the system because we finally got some cuts. I think 2025 was like, now we're seeing the earnings inflection. 2026, we're continuing that earnings inflection. Just comes with a lot of leverage because that's part of the bull market. And so this is historic earnings growth. We've never seen this type of earnings growth. AI is the culprit for it. 50% of our GDP is CapEx. That CapEx is leading to a lot of earnings growth. We need to see the eventual ROI of that CapEx in a meaningful way. But as long as that continues, maybe it really is that golden age for earnings in the S&P.
Did Microsoft and Amazon give you that last week? The market clearly thinks something changed. But Microsoft and Amazon, are we finally getting proof of work that you can make money when you build out your AI offerings?
I think so. Azure just hit $100 billion. Copilot's growing 30% quarter over quarter. Amazon was the one that's, Microsoft's a positive free cash flow. Amazon and Google are negative. Amazon increased their capex by $20 billion. Google and Microsoft did not really increase it for this year. And the stock went down a little bit and then it went right back up because Jassy throughout the call was communicating why they are increasing their capex. And part of the reason was he said, look, if we see demand slow off, we're going to stop our capex. but we have demand booked till 2028. We can't stop our CapEx. And if you guys want us to accelerate AWS at 37%, the highest in 5 years, I mean, yeah, there's the ROI. It's coming through. Now, the ROI is in the cloud. We're still yet to see it in robotics and self-driving and all that stuff, but at least on the cloud layer, the most important companies in the world are showing that ROI, showing the return on CapEx. And as long as that continues, I think the market will reward them.
Okay, so we've hit Palantir, we've talked Microsoft, Amazon. Let's do one more question as we go out the door. I'm thinking of Elon Musk and SpaceX this week. They have earnings coming up, of course. SpaceX is heavily shorted right now. About 25% of the outstanding float is shorted. It's not a must bet because it's only 2.5% short float in Tesla, as it were. But there's been this talks of a merger. One of the ideas that a few people that I work with around here have been circulating, and I know someone who's monetized this view quite handsomely since the IPO, Mike Butler, has been that you now have Elon Musk's fan base divided.
Yeah.
Before, if you wanted to bet on Elon, you only had one vehicle to do it. Now, depending upon what you like, if you're there for the robotics or for the AI or the space stuff, you can pick and choose what you want to eat. Does Elon need to shut down one of these restaurants so he's overcrowded back at one, basically, is what I'm asking? We're going to see a merger?
Well, there is an argument that he wants Tesla stock to go down so that SpaceX can buy it on the cheap. I mean, there is that argument that's hard to avoid. You got a lot of Tesla bulls that obviously don't want to see their Tesla positions go down. You have a lot of SpaceX bulls that are upset because the IPO has not worked in any meaningful way, that would love to subsume Tesla and have just like Elon Enterprises. I think it's a weird situation because Tesla has a lot of business in China. And obviously combining that with SpaceX isn't really, from a national security perspective, something that makes sense. Tesla's not growing earnings. They're spending a lot on CapEx. That's why that stock's not getting rewarded that much. SpaceX, I don't understand how anyone could buy that stock with 96% of shares getting ready to enter into the open market. So I think both are like really tough things to touch. I think if we get super euphoric again, they both go up. But right now, with the Mag 7 trading at the multiples that they're trading at, they're a bit more exciting than Tesla. And then SpaceX, it's not even anything against the company. It's just there's 96% of shares. I have friends personally that have been in SpaceX for 5 years. They have told me, Amit, the day our brokers tell us we're allowed to sell because they've all been in a lockup, we are selling. we're up 80x. Like we don't need to be up 120x. Like we're taking our profits. And so that's the part that scares me right now for SpaceX.
Amit, this was a fascinating conversation. So glad that you joined us. So what's your YouTube channel? Meet Investing, is that right?
Yeah, Amit is Investing. You can type it on YouTube, and I do a live stream every morning and in the afternoon, market open, market close. So if anyone wants to check it out, I'll be there every day. Amit
is Investing. Go find him. It's 130,000 followers. You don't just do that on if you're not producing good content. And certainly go check out that interview that he had with Alex Carr. Palantir earnings are later today. Amit, we'll hopefully do it again.
Thank you, Christopher. Appreciate it. See you next time.
We'll talk soon. Hey, before we head out the door here, just a quick break at the bottom of the hour. We do see S&P 500 up 1.26% right now, 76.14 here. NASDAQ 1.5% higher right now, 28,828. Oil prices are still down 6%, giving you a 79.52 handle here on your screen. Overall, this is a market that's holding up here as we move into the second half of the session. The question of the day was, is it worth getting out of this MES position before we hand this off? I do see that we have our friends Gus coming up here at the bottom of the hour. I'm still sitting in the 7,600 long from beginning of July. Can this thing start to move higher now after several months of consolidation as we're in the midst of another earnings season? Maybe. It kind of feels like we're trying to make a move to break out. So I think I'm just going to chalk this up to, how do we close today? If we're able to close up here, heck, if we're able to close to some of the recent highs, 76.28 or so, 76.30, I'm going to feel a lot better about holding on to this thing and letting it run for a little bit longer. The other side is if we fall below 7,600 and I got like 5 or 6 points, I may just take this off and revisit the market tomorrow. This has been enough indigestion. I don't have any more Tums on my desk because of this nonsense over the past month. Elsewhere, though, gold's off a little bit. Dollar is up. We do see yen intervention in play again. 6J here, 63.97. So that's going to be $1 yen if you flip that over. Going to give you something in the 156s now, 156.83, as it were. The Treasury is officially intervening alongside the Ministry of Finance. First time in 15 years that's been made public. But you know what? We are going to take a brief break here now on Tasty Live. We're coming up to our trade idea of the day segment. We have Gus, Mike, Errol, and then Errol and Kevin Steuer, our guest trader for the day, coming on up. So be sure to stick around for that. Of course, Glen and I will be back for Futures Power half hour, 1:30 Eastern, 12:30 Central Time. So go grab lunch, come back, more Tasty Live trading coming at you. See you there.
It's good to be here in the studio.
All right, so I've got some good news, and I've got some bad news. Let's get that bad news out of the way first. You are going to have some losing trades. Like every trade you place, despite your extreme optimism that it's going to work out, it's not going to work out. That's the bad news. The good news is at Tasty Trade, man, we are ready to adjust and defend and roll our positions if that's what it takes. And that's what this entire crash course is all about. A 5-episode crash course all about rolling. So I will see you inside of episode number 1.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Investopedia says we're the best for options trading. Stockbrokers.com says we're #1. And Broker Chooser raves about us too. So what else can we say other than boom? Trade like a trader. Tasty Trade.
Tasty Trade has crypto, and you can trade with 0 commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Investors Business Daily raves about us. Stockbrokers.com says we're best in class for futures trading, and Broker Chooser thinks we're pretty great too. So what else can we say other than boom? Trade like a trader. Tasty Trade.
Howdy, everybody. Welcome back to Trade of the Day. What a great opening segment that we had, and I hope I can keep up with that level of intensity here into this one. I have a very exciting trade to discuss today, one of the trendiest products that we have going on, and a product I don't typically trade. It's in oil. You can see the details of my trade here. I'm going in on USO as my preferred vehicle, which is always my preferred vehicle for oil exposure. Futures products move really fast. There are options available, but that scares me away sometimes. USO has always been my preferred vehicle, much in the same way that I choose SLV for silver or GLD for gold. You can see the setup here. I'm taking a bullish put spread, and this is very aggressive. This is expiring this coming Friday. I've sold the 121, bought the 123 put. Other way, I apologize. I've bought the 121 put, sold the 123s, obviously. Break-even price comes in at 121.80. Should we land in the middle of these, I would simply be assigned 100, well, I have 2 of these on, but I would be assigned 100 short shares per contract at 121, which I would also welcome, but I don't mean to get ahead of myself. I'll talk about that line of logic in a little bit here. So let's jump over, take a look at the chart here. Here's the position itself. And you guys may recall, I do have two naked puts on USO here, both of them bleeding horribly. But I do have two naked puts present. I've had some short bias here for a little while. I'm choosing to get long into the end of this week just because what we've seen time and time again with oil throughout this whole Iran conflict situation, what always has happened to this point is whenever we get some headline like this that makes us think that the war is going to end and that oil prices are going to collapse and that it's going to be euphoria in the market, there's always something that pops up and just sends us right back to the highs. If we look at this chart here, you can just see this exact trend pan out over and over. We obviously have the initial run up to these local highs. I got short at these levels, and then we had a fake out headline that took us, a considerable leg down. I exited my shorts. Then we go climbing back up. I got short again up here at around these levels. Oh, it looks like things are going to end. Oh, no, they're not. We're back at the highs. And then here again, oh, it looks like things are going to end. Oh, look at that relief pop. And then we did get a little bit of sustained drawdown for a little bit as it seemed things were cooling. And then wham, we're right back to the local highs. So this trend has persisted where if you just, and I don't have a concise research piece to back this, but I am confident, abundantly confident, that if for the last 2 months you just faded USO every time it does a $5 or greater move in a single day, you would be profitable. That's the way that this has kind of trended. So I'm going to lean into that trend here. I'm going to assume that these headlines are not fake, but not entirely real either. That we're being a little bit overdramatic as the news tends to, as the president tends to on Truth Social. And as I talked about on Morning Movers today, Trump this morning put out I guess it was yesterday, over the weekend, put out a very, confident tweet that things were over, saying the Strait of Hormuz would be fully reopened, the conflict was fully resolved, he was calling off the strikes, they're agreeing to parameters of a deal. All these things sound very good, and I understand why oil is at the level that it's at today. However, at the same time, the Iranian, foreign ministers, I forget the exact title, but high-ranking people in Iran are posting on their social medias saying, basically, that the U.S. thinks this is over and it's not, in much more eloquent terms. I read the exact tweet earlier this morning, but something to the tone of, the enemy is overly confident when we are not sure that this conflict has yet ended, or something like that. The market seems to only be reacting to the U.S. side of that news cycle and not acknowledging the fact that Iran is basically on Twitter saying, not so fast, hang on. We don't know that this thing is over yet. They're too confident. And when I hear things like that, it just makes me believe even more that this is going to be a good trade and that we'll see a bounce on USO by the end of the week, because all it takes, I need this over 123. I took my bottom strike, just barely out of the money, and then my top strike considerably in the money, obviously. All we need is 123. That's not a full gap fill. You can see that level on the chart right here. Just a little baby move higher in the next week here. And I think that that's very plausible. All it takes is the tiniest little crack to emerge in this. I don't need full re-escalation. I don't need us to drop any bombs. I don't need anything crazy like that. I just need the tiniest little thing. I need one little report from a U.S. news cycle or a U.S. news provider that says something to the tone of, this might drag on for 2 more weeks, and we'll get the little tiny pop in oil back up over 123, I believe. I'm getting a 1.5 to 1 risk profile on this, which I will say I was teetering on that. I would kind of like 2 to 1 when I'm putting something on in the money a weekly that it expires at the end of the week. You'd like to see a little bit more than that, but the volatility is just keeping that from being possible, because the market is also acknowledging that there's a very real chance that we see USO just all of a sudden jump back up to 130 before the end of the week or something like that, much in the same vein as we could easily be at 110 by the end of the week. So it's a not quite the risk reward profile I would usually seek out on a trade of this caliber, but I just find myself very confident that something happens to pop this miniature euphoria bubble that we're seeing market wide and relief that we're seeing in USO today. I think that we'll see and like I said, it just takes the tiniest thing to pump this a little bit higher. Now, this extends to my sentiment about the broader market as well. To call back to a previous trade of the day, I have this iron condor on an SPX. Find it right here. We are testing the upside on this iron condor now. All of last week, I was talking about how we were testing the downside, and I was okay with that. The natural trend of the market is to move upward. And so I was fine with that when we were down here at 73.20. I was like, this is no big deal. There's plenty of time left on these for this to recover right into our range. We've rapidly recovered to testing the upside. And I say all of this to say, I'm going to extend the same sentiment here. We're leaving SPX on just because I think that something will happen in the coming week, or in the case of this contract, in the coming 2 weeks, that knocks us back down just a little peg and keeps us in this range. Not to mention that all-time highs present inherent resistance at what is all-time highs right now? 76.21, something like that. So I think that there's good resistance at the top as it pertains to this iron condor. I think that resistance extends as well into USO, which obviously is not a vehicle that tracks SPX very closely, but they play into the same vein. I'm expressing the same sentiment both ways, that I just think that these headlines are being bought into a little bit too quickly. We've seen the market do these fake outs with headlines that don't wind up entirely substantiated 100 times over the past few months. And this time, I'm going to put my money where my mouth is and not trust them. This gap simply feels like it must be too big to me. And I think a small bounce in USO before the end of the week is highly, highly likely. Now, there is a world wherein this is actually the end. These headlines wind up substantiated and USO just continues to sink. In that world, I say, that's fine. Have my $80. I'm willing to post up this risk for this return, 80 in, 120 out, for the probability. Because I suppose a better way to say this would be, I think it's 50-50, if not slightly better than 50-50, that these headlines are fake. If anything, it must be slightly better than 50-50. But at the same time, I'm getting a much better than 50-50 price on this. I'm getting a 1.5 to 1 return on this, plus 150 for my sports bettors out there is essentially the odds that we're up against here. And any good sports bettor would tell you. Ask Chris Vecchio's brother, an illustrious sports bettor. If you have something with a 50% chance and you're getting plus 150 odds on it, that's a bet you're going to make every day of the week. And so tying it right back into this trade here, that's essentially the bet that I am making. I'm seeing something that I believe is actually closer to 60-40, something like minus 150. And we're getting a plus 150 price on it, so to speak. So I'm willing to take that swing. It's a small enough trade that if I take a total loss, I'm just okay with that. I'm not going to mess around trying to roll or do anything get cute like that. But for $80 notional value, I'm more than content to jump in on this one and deploy that buying power in this way. Furthermore, oil has kind of been doing the same thing as SPX, really. I have a broader thesis about this, but since we put in these highs, this range is a little too wide to feel comfortable putting on iron condors in. But in this like 120 to 140 range, a lot of volume has been coming in there. We've spent a lot of the last few weeks chilling right in this range. And barring this, the war totally being over, and like I said, I don't even need a crack to emerge, really. I just need this to drag a little bit. Even if we just have 2 days of silence with no updates, I think USO could grind back a little bit higher. I think even that uncertainty would be enough to push us up a little bit. Oil wants to go up right now. Take it from somebody who's been short for a month and a half. Oil doesn't want to come down, all right? Those shorts, they're hurting me. Every time it seems like we test these lows, we pop right back up. We've had the one sustained drawdown that lasted longer than a week, but aside from that, every single drawdown has been met with a quick recovery back towards the highs. I need $2 out of a $120 product. We're creeping higher as I sit here talking. We're 40 cents higher than when I started talking about this trade. Moved from down 6.2% to down 5.8%. There's a reasonable chance this is back over 123 by the end of the day. So I feel very confident about this trade given the risk profile that we're getting. If you want to follow this trade, let me go ahead and pull this up right now. Similar. Yeah, we're at a 115 mid price. So this is, I did put this on a few hours ago, full disclosure, but 115 mid price, you're very close to what I'm talking about here. We're looking at 85 buying power for 115 in credit. So just slightly worse than that 1.5 to 1 that I'm getting at. But as I said earlier, the tasty way, trade them small, trade them often, the law of large numbers. If I see something that I believe has a 50% chance probability of profit internally, and obviously 48% probability of profit is what's being shown on the platform now. That was closer to 44 when I put this on, but I'm seeing expected value there. If you make enough trades with this type of expected value, assuming the expected value is actually there, which I presume that it is in this case, you will wind up up in the long run. It's inevitable, provided that the expected value is actually there on every trade that you do, which is why due diligence is so important. But to me, this is as clear cut as it gets. I don't like to trade oil, but I'm convicted enough about this that I'm nominating it as the trade of the day for myself. We have Trump shouting from the rooftops that this thing is completely over, everything to the moon. And at the same time, Iran is saying this isn't completely over yet. We don't know why Trump is so excited. That's the clearest buy signal I've seen in some time on oil. There is a disconnect happening here. I think uncertainty continues into the end of the week, drives oil higher. There's the trade on screen one more time for you to round things out here. 121, 123 bullish put spread expiring this Friday, August 7th, 4 days to expiration. Good luck to anybody who decides to tail this one along with me. The previous trades of the day have been working out swimmingly. Shout out to anybody who's still long Rocket Lab alongside me right now as well. And yeah, just gonna look for the quick bounce. And like I said, if $80 gets wiped out of my account, oh well. I'm happy to have taken this swing, given this uncertainty environment. If I happen to be long the one time that the headline is real, sometimes you just got to take that on the chin. So that's my trade of the day. We're going to kick it over to Mike Butler, who is 30 feet away from me in real life in another studio for his wonderful trade of the day. Take it away, Mike.
What's up, everyone? Welcome back. We've got another trade idea for you today, and it might not surprise you, but I'm going with Palantir. They have earnings after the close today, and I think it's going to be a big one. When you look at implied volatility relative to the notional value of the stock price, you've got huge implications for some fireworks with almost a 15-point implied move in the 4-day cycle relative to the current stock price of $125 per share. So anytime you see over 10% of the notional value of the stock price being priced into the expected range for the week, you've got yourself some potential fireworks here. So Palantir, going to be wild to see how they shape up for earnings. We've seen a mixed bag of results, right? We've seen Palantir get as high as $165 all the way down to $100 per share, and now we're sitting at $125. So the realized volatility has been huge here. Just late last year, we were sitting at over $200 a share in Palantir. So plenty of room to run if they do post a good number and the market wants to bid it up. I think what's really interesting is just taking a look at the previous moves and see if they matched up with anything last week. So when you look at Microsoft, for example, Microsoft had their big gap up after reporting earnings. They opened up on the 30th. They reported after the close on the 29th. And you can see it's just been an absolute tear on its way back to $500 plus. We'll see if they can get there by the end of the week. But I think this is interesting. So on the 30th, we saw the big gap higher on the opening for Microsoft. What happened in Palantir on the 30th? You saw a little bit of a dip there. So interesting enough. When you look at Meta had a move in the opposite direction on the 30th. You saw a sell-off to the lows of around 500, 520, and we've completely erased the entire move in 3 days. So this just goes to show, and this is one of the reasons why I like to place diagonal spreads and calendar spreads for earnings. When you're long an option in the back month and you're short an option in the weekly, like in Meta, if you had a call diagonal spread or call calendar spread in Meta and you saw the initial drop, your short option that you sold in the near-term cycle is going to go to zero. You can hold on to your long option, and just within 3 days, obviously, no one's playing for a 3-day reversal of the entire move. That's wild, but still, you would be at a net profit right now if you just had the long option remaining there as a part of the trade. So another reason why I really like the defined risk debit side for earnings announcements, but I think it'll be interesting to see if Palantir can right the ship here and catch a bid after earnings. So looking at the implied volatility and the trade setup here, when I look at these earnings announcements, I always look at the implied move for the week, and I weigh that against the stock price, of course, which is what I mentioned at the start of the show here, but also what is the implied volatility for the weekly cycle against August, what is August against September, and so on and so on. So generally speaking, a prototypical earnings announcement is going to be a weekly expected move that falls within 5 to 10% of the stock price. You can see here we are dealing with an implied move that's more than 10% of the stock price, so you've got big implied volatility there. Another kind of cookie cutter setup is where the weekly is about half of the implied move of the monthly cycle, around 45 days or somewhere in that range. We're seeing much more than that. We're seeing almost a 14-point implied move for the 4-day and only a 19.99 implied move for the 46-day. So going back to my initial statement, if this was half of the monthly cycle, we should see the monthly cycle at like $26, $27, $28 of an implied move. We're not seeing that. So this tells you and re-emphasizes the fact that the implied volatility and the premium you can collect in the 4-day cycle, if you're selling that cycle, is very similar to the premium that you're buying in the 46-day cycle. So we can exemplify this with a couple of looks here. Let's look at the 130, 140 options in the monthly cycle of September. And let's look at the 130, 140 options in the weekly here. Just to give you another analysis, if we look at the curve mode, we can see here the 130 and 140 in September are trading for about $1,000 at the 130 strike and about $600 at the 140 strike. Then you look at the 4-day and you can see, wow, the 130 strike, 4 days to go, is trading for $500 this week. The 140 strike is trading for $225 against that $6 debit. So plenty of premium here to sell against any long that you purchase out in September or even October. I actually went out to October and I looked at that cycle, but it was a little bit expensive. Now, you do get what you pay for. My favorite phrase when it comes to buying options, the further out in time you go, and you can see this visually here, the further out in time you go along these expiration cycles, whether you're looking at September or October or November, you get a lower and lower implied volatility reading. So 66% in September relative to 62% in October. What this tells you is you're going to get about a 4% greater implied volatility crush in September than you will in October. So if you're buying an option in the 46-day cycle, you're going to get hit harder with an implied volatility crush compared to the 74-day cycle. Now, all of these expirations are going to drop down to, let's say, 60%, 55%, somewhere around there. I would say within 55 and 60% is where I'm expecting all of these implied volatilities to drop to along the right-hand side here, because you can see we flatline as you get further out in time, where you're really looking at the pure implied volatility of this product. Around 60% is what we're looking at with this current implied volatility for the earnings announcement. We can look at Microsoft, Meta, some of these other companies, and as you might expect, we've got flatline implied volatility across the board. Nothing is outside of the 32 to 34% range if you go from the 7-day cycle all the way out to the next earnings announcement, which will be later this year. So this is what we're expecting. This is what happens for all earnings announcements. You get a big flat volatility crush, even though in Palantir and every other earnings announcement you look at, you have this heightened and increasing implied volatility reading. And that just tells you that the implied volatility relative to time is super high. It doesn't mean that the 4-day cycle has more premium than the 18-day. And it doesn't tell you that the 18-day has more premium than the 46-day. It's all about what is this premium relative to time, and the fact that implied volatility premium is heightened relative to time is why you get this high IV reading. So I hear this all the time, like implied volatility increases leading into earnings. No, the implied volatility reading increases leading into earnings. The premium still decays a little bit, but not nearly as much as if you didn't have a binary event that's kind of blocking this premium from decaying. So I don't like to do neutral trades leading up to earnings with an earnings announcement like a Strangler Iron Condor, because I know that the implied volatility reading is going to go up, and that just means that premium isn't decaying as much as it would normally. So with all that said, I went out and I purchased the 125 strike out in the September cycle. So like I said, I went out to the September, I went out to the October, I did a little cost analysis here. And the October cycle, while it's totally acceptable to go out here, it's still a little expensive here. It's $240 more expensive than going to September. September still has plenty of time. And really the reason why I went with September instead of October is because at the end of the day, this is going to be a high flying stock that still moves every single day, right? Even though I have a shorter time frame in September and I'm accepting a larger volatility crush in September, I also know that I'm collecting a lot on the short option in the weekly cycle relative to a different environment where we might see lower implied volatility readings in the weekly cycle. So I went out to September, and again, I'm totally fine if this thing goes nuts and drops to the downside, because I know in a week or so, you could see this go from 100 back up to 125. So I went with the September cycle just because 45 days in a product like Palantir is such a long time. Over the last 45 trading days, we've seen this thing drop from 160 all the way down to 100, back up to 130. So the realized volatility is there. I would expect that it would remain there. But obviously, I'm hoping for a rally in Palantir. But I went out to September, bought the 125, and then just did a cookie cutter setup where I am selling the orange bar expected move here, which always brings you to around a 20-25 delta on the out of the money option. Plenty of premium here relative to what I bought this option for out in September, collecting $200 for the 4-day 140, paid $1,100 for the 125 September long. When we look at the curve mode here, you can see this is a pretty dramatic premium profitability standpoint if we do get the move right here, because this is, and I need to isolate this correctly. Yeah, 125, 140. Let's go to the analysis. Let's go to Theo, and let's make sure that these are highlighted for you so you can see it. So without changing implied volatility or time at all, I have a 15-point wide call diagonal spread here that I purchased for $9.15. That's a huge upside profit potential where I'm paying way under the width of the spread. I was going to go with a 130, 140, but it was trading around $7 against a $10 wide. I wanted to pick up a little bit more profitability in the standpoint of getting a wider spread relative to the cost on this trade. So let's mess around with implied volatility and see what we could be working with on Friday. If I were to hold this all the way to Friday, this is going to give me all of the premium out of this short option here. You can see this huge profitability peak. But like I said, we have to crush implied volatility in September. Let's bring this down to 55%, which is an 11% crush in that September cycle. I think it could hang around 60%, but the fact that the current implied volatility is around 60% makes me want to be a little more conservative with this analysis. Drop it down to 55, because I would not be surprised to see these back months drop 5 percentage points after earnings. But I do know all of these implied volatilities are going to have a similar reading around 55 or 60%, maybe a little bit more, maybe a little bit less, but an 11% contraction in September I think is fair. So that brings us to our theoretical P&L. If we get this move right and we hold it all the way to Friday, we're going to be looking at a $800, $900 max profit. Yes, I'm paying $9 for a 15-point wide spread, which is about $600 in max profit of intrinsic value. But I know that this 125 out in September is still going to hold on to a couple of $100 of extrinsic value, which is just added to that max profit potential. So from a Theo standpoint, we're going to be looking good if we get any kind of rally here. But if we evaluate this more near term and we go to tomorrow, you can see my P&L is still healthy, but it's not nearly as good because this 140 call isn't going to go to zero in terms of extrinsic value if we get a rally after the close from 125 up to 140. But still looking at about $550 of max profit, which is plenty of return on capital considering I paid $9 for this thing. Another nice aspect of this trade is, again, let's say Palantir stays flat or drops a little bit. What I'm dealing with is a current setup of a 15-point wide call diagonal spread that I paid $9.15 for. So what that means is if Palantir drops down to 120 or 115 or wherever it goes, what I can do is I can buy back my 4-day option at the 140 strike for a few pennies. I'd imagine this is going to go to zero if Palantir sells off with 3 days to go starting tomorrow. But I'll have the ability to roll out to August. I can move that 140 down to the 135 because I have a 15-point wide call diagonal on. I can reduce it to a 10-point wide call diagonal on and put it on for 10 points wide or arrive at a 10-point wide diagonal and pick up, let's say, $200. If that's the case, I would arrive at a 10-point wide diagonal, long September, short August, with a cost basis of around $700. So lots of flexibility here. I could even go to a calendar spread if I really wanted to, but again, with a high flyer stock like Palantir where it's moving around like crazy, I want to have some kind of intrinsic value potential, and that's probably where I'd land, is the 135 short option in August, assuming Palantir doesn't go, down 30 points after the close. If that's the case, I'd probably just hold on to the long option that I've already reduced cost basis on and see what happens over the next 2 weeks or so. So that's the trade in Palantir. I actually also have this 160 call out in August. So Hail Mary here, 160. Maybe we see it, maybe we don't. But with an implied move of 15 points, a 30-point move to the upside would bring us up to 160 tomorrow. or around there, and that's just twice the expected range. We've seen it happen before. We'll see it happen again. Maybe it'll happen in Palantir, maybe not. But either way, I've got this dollar option here that's just a nice kicker if we do get that upside move over the close or after the close for Palantir earnings. But that's the trade. Let me know what you think in the YouTube chat in the comments. But again, bought that 125 call out in September. I went to September instead of October because it was about $280 or $240 less. And Palantir's been moving around. I don't expect that to change at all. So even if we get the sell-off, I'm happy being in September. But the near-term stuff, didn't want to mess around with that because you're going to get a massive IV crush in the near-term stuff. The only exception would be like a near-term calendar like we've done with Jamal, where you're long the 11-day, short the 4-day for $1 or something like that. But went out to the 125, bought the September 18th call, sold the August 7th weekly, the 4-day cycle, the 140 strike for about $200. Total package is $915. That's what I was filled at. So I've got a $900 debit on a 15-point wide call diagonal. I like the upside profit potential. If we get the big rip in Palantir, it's going to be a great trade. If not, I can buy back that 140 in the weekly, move it to the 135 or around there in August, pick up another $1 or so. We'll see what the premium is like tomorrow. But that's the defensive mechanic that I can deploy because I have a $9 debit already. I know I can go to a 10-point wide diagonal and still have a max profit that exceeds the debit paid or the width there. So that's the trade. But we've got another trade coming your way with E on the other side of this break.
What is going on, guys? Welcome back to another trade of the day. I know we just had Gus, we just had Mike. We got a lot of trades coming at you, and I'm not going to lie, because of what we've seen in the market so far, it was really difficult to choose what our trade of the day was going to be. But with that being said, we have the USO chart pulled up. I was just looking at some oil over here. We can dive into the Tasty platform. I am curious, as we give my trade of the day, I'm curious to know what type of new trades, you guys are putting on and kind of what you're managing headed into this week. I know we have 20% of the S&P 500 earnings coming out this week, or 20% of the companies reporting earnings this week in the S&P 500. So curious to see how these trades are going to pan out as we deploy them at the beginning of this week here. But something that just has caught my eye and I can't take it off of is this oil market. I mean, it's been extremely volatile. It's extremely headline sensitive. I know Gus was looking at the USO. I'm going to do something a little bit different, but it is going to get some oil exposure. And just a quick update for anybody else that has been following along with some of these trades, just to give an update on how we've been managing some of them going forward. We did a little bit in the micro NASDAQ today, which is nice. That always kind of hedges the rest of the positions that we have on in this portfolio while we temporarily sit through some drawdown on some of the trades. But one of the trades was a Google earnings trade from a couple of weeks ago. We had sold an iron con there, pretty delta neutral. Delta neutral isn't a theme that I've really wanted to play into, especially when it comes down to these earnings, because we're typically getting a lot of directional moves, whether that's to the upside or downside from what we've seen lately. But we did get a pretty big move to the downside on Google. So we rolled the untested side down a little bit, which was the call side, collecting an additional 50 cents of credit, widening out those break evens a little bit. So this is going to be a position that we're just going to have to be patient for. I know we put this one on 7/22, so it's been about almost 2 weeks now. And again, like I've said before, an iron condor is probably one of the most boring trades that you could possibly put on. But it's a patience position, right? Because you're pretty much capitalizing on time passing. So that's Google. Bonds have been a little bit more exciting. We got a zebra on in bonds. Not an extremely volatile asset. That's why it was more attractive to get on such a directional exposed position like a zebra. No theta to worry about on that one, so we can let that one go as far as we want into the expiration cycle. So we got 18 days left. 18 days left till expiration. Another name we've been keeping an eye on today was Micron. This was one I was really trying to get out in the morning, but I'm gonna leave this one on a little bit longer. My overall position is still pretty bearish, and whenever I was deciding on the trade of the day, I really wanted to get a little bit more short delta on some of these memory names, and I was like, you know what? I already have short delta on in Micron. I don't really want to double down by getting some short delta on in SanDisk or Intel or any of those other names. So I wanted to be a little bit patient here, especially because, the memory names are recovering just a little bit today. We've seen a little bit of a gap down from last night, right? A lot of the tech names in NASDAQ is recovering off the rally from today. But for me to continually get a little bit more short delta, I'm going to need to see Micron at around 915, 920, 925, 960. even $1,000, then I think some more short delta is going to be more attractive to add to that position. But I think based off of where we're at so far and the downwards pressure we've been seeing, it wasn't a very attractive spot to add short delta to those memory names. So we're going to keep rocking with the Micron out of the money call spread position that we already had on. This one is a out of the money call spread that we sold at the 925 strike, bought the 930. It's just a $5 wide. So a little bit of a cheaper position. We collected about $1.78 worth of credit on that one. And again, I am 100% willing to get on more risk in these memory names once we can pop to the upside a little bit further. And then we're going to use the market putting in a new all-time high in these memory names as a gauge for invalidating our trade thesis. So as we stand here, it's looking like we're starting to trade on the backside of this move over here. That's this vertical line we have here, just starting at the top of this move, splitting that right down the bottom. And you can see over here on the left side is more so the front side of the move where we were continually putting in higher highs and higher lows. And then the back side of the move is whenever we personally deem, and the backside might be different to you, but when we personally deem the top, quote unquote, top is put in for the time being at least, I'm going to try and get some short delta on the backside. So the better of a pop on the backside that we get, the more attractive the risk to reward is going to be to get short to the downside. And there's a little bit more room to the downside than there is to the top. So was debating on that one, but we ended up going with oil today. Oil is going to be another position we've been keeping a close eye on. And if we jump over here, you can see our average entries are about 79 flat. And if you're somebody that trades these micro crude oil products, just a quick reminder, for every 1 point move in the micro crude oil, that's going to be about $100. So if you have on one contract, if it moves from 79 to 80, that's going to be $100. If it moves from 79 to 81, that's going to be $200. And it's going to be the same way on the downside. So right now we're up about a full point, which is really nice to add a little bit of a cushion to this extremely volatile oil trade that we've been in, because, earlier today we were sitting in a little bit of drawdown. If we were to do the math for that, I think we were down, maybe around 40 something bucks at the max point of drawdown on this specific position. But we're going to let this one ride a little bit longer. $100 per point, I don't think it's too bad. It really reminds me of those zebra trades where it's like, it's aggressive, but it's not too aggressive. You know what I mean? Like we can risk 2 points. You can risk 3 points on this. That's going to be $200 to $300. Oil is a name that's known for trading these pretty wide ranges. So even if we made it back towards the Sunday highs at around 81, right? That's going to be a couple $100, right? We're just using one contract, nothing too aggressive. It allows us to stay in these, short amount of time, or these short drawdowns that we're in sometimes whenever we're finding that order entry. But we're going to let this one ride. It seems that the volatility is turning around a little bit more for us today. So I think it's attractive. I think it's an attractive look, and I know Gus brought up USO today, and I think USO is still an extremely attractive product to get a little bit more exposure to as well. So regardless of if you have a long bias or short bias, the range is absolutely there. And if we go to forward/CL, you can see we put up that volume profile just encompassing this entire move that we've seen from the beginning of this rally, the pullback that we've gotten all the way up until the current prices that we're trading right now. This volume profile gives us a little bit more context as to where buyers and sellers are comfortable, right, with where, the oil price has been trading. And this really lets us know where that fair value, given the data set that we have, where that fair value lies in the market. And you can kind of see over here with these higher volume nodes off to the right side, you can kind of see, right, this price point in between 84, 85, and 77, 78 is about where, I'd say that's about where 80%, a little bit more than that, where 80% of the volume is traded on oil. So we're kind of sitting in a place right now where we're just trading below the point of control. But we're sitting in the same range where oil feels comfortable. So I wouldn't be too surprised if we could get a little bit more of a pullback. We'd still be sitting within our value area. But at the same time, we're trading just beneath that point of control. So 83.75 is going to be the point where there was the most interest in this oil product from whenever the rally had started. So I think if we can get above 83.75, I'm going to feel a little bit more confident to potentially let this one ride a little bit longer. But if we start getting rejected off of 83.75, we're going to keep an eye on where this point of control shifts, because it's very dynamic. As we get more traded activity, the value area and the volume profile and those high volume nodes is going to change and shift, because the market is always getting new information, and new orders coming into the market is new information. But 83.75 is going to be interesting, right? Again, it's the price level that had the most trading activity around it, whether that's buying, whether that's selling. And we'll keep an eye on it, right? Oil trading at 80.01 right now. So it's been a little bit of a reversal we've seen from the gap down over the weekend. coming into today. So another thing we've kind of been looking at, right? It would be more attractive to be able to get long at these value area lows, or to be able to get short at these value area highs. And it's very similar to this NASDAQ trade we took earlier today, right? The NASDAQ scalp that we had taken. Now we're taking this trade off of a larger time frame, right? Because this is going to be a little bit more of a swing trade that we're taking. But if we just look back at the idea of trading off these level of values like we were talking about, I'm going to take off these price targets that we were looking to target. And the last line I'm going to leave is that value area high, just to show a little bit more of the logic, because it's going to be the same logic we're using when we trade the micro NASDAQ that we're going to apply or implement into the oil products. But you can see over here at our value area high, and I wonder if I can label that. You got it labeled. This value area high, we were looking to get short initially, right? I mean, we've seen this a ton of times before. I apologize for this going from black to white. Hopefully nobody's getting blinded right now. But seeing the value area high, seeing the market trade at the value area high, you can kind of see the response or the lack of buying we typically get around these areas. If you look at the volume profile, you can kind of see how that volume tapers off, letting us know that interest is really dwindling down. So anyways, with that being said, if the market can get down to this value area low, it'll be very attractive to potentially get long. But if the market can get back to this value area high, maybe we get higher highs in oil. But that's going to be one of the main targets we're going to have with this position here. And you can kind of see here at this value area high, we were looking to get short initially, but whenever the market is letting us know it's going to go or it wants to go and seek prices higher, that's when we'll flip our bias, either stay hands off or pull the trigger on the trade in the flow of the order flow that it's letting us know at this point. So with that being said, guys, we got on a long micro crude oil contract. Be patient for that one. We have a handful of positions on in here. Doing these trade of the days pretty frequently has us stacking my portfolio quite a bit. So I just want to make sure we can manage, the P&L on the overall position, and continue to use some of the profits we get out of the micro NASDAQ and these other futures products to help hedge some other trades that we might have to. So with that being said, we have the micro NASDAQ position on. We have the micro crude oil, a little bit of bonds, a little bit of long delta on in bonds. We got the zebra position. We have Google, Iron Condor, Micron. We got more short delta on in Micron and some of the memory names. SpaceX earnings coming this week. We've spoke about it 1,000 times already today, but I'm excited to see how that pans out. Increased float, so maybe a little bit more supply. We'll see what happens. QQQ, SPY, and Meta. Meta being the absolute beast on the day with the continuation to the upside. But with that being said, guys, we're going to go to a quick break. We will be back here with an awesome guest and another potential trade of the day on the day. So that being said, we'll see you guys here in a quick second. Stay tuned.
It's good to be here in the studio.
It's time to trade smart, post-PDT rule elimination. And Tasty Trade has the tools traders need. The Active Trader tab's comprehensive market data is designed for rapid order placement in a single click, while bracket orders let traders set entry, profit target, and stop loss all in one ticket. From the Positions tab, you can monitor positions, roll trades, close positions, and create conditional orders. Now, traders of all account sizes have more flexibility than ever before to engage in the markets. Smart tools for smart traders. Tasty.
All right, so I've got some good news, and I've got some bad news. Let's get that bad news out of the way first. You are going to have some losing trades. Like every trade you place, despite your extreme optimism that it's going to work out, it's not going to work out. That's the bad news. The good news is at Tasty Trade, man, we are ready to adjust and defend and roll our positions if that's what it takes. And that's what this entire crash course is all about. A 5-episode crash course all about rolling. So I will see you inside of episode number 1.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
So you're an active trader, looking to increase your return, decrease your risk, or quite possibly both. Sure, you've heard of the Greeks. You know, your deltas, your thetas, your vegas, your charms, your vamas, etc. And you're wondering, hey, how do I use these guys to improve my risk-return relationship? Well, join me for a 10-episode crash course, and I'll show you exactly how to do it with all the gimmies and gotchas, one Greek at a time. We'll see you there.
Why do you want high IV rank when you sell options? Because you get more money when you open your trade. People get all tweaky when they don't know how a stock is going to act. They'll pay more for guarantees that are written into options contracts. And if they're getting super scared about it, they'll pay a lot more for the options. If you're selling those options, that means there's more credit you might keep at the end of the trade. Since IV rank measures today's IV against where it's been in the past, high IV rank tells you if people want to throw more money at you now. So look for high IV rank when you sell options. Pretty simple.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
What is going on, everybody? Welcome back, Tasty Nation. We are here with a guest today. Gonna see what's been on his mind, see what else has been perking its ears in these markets. But with that being said, we got Kevin Steuer with us today. And what's going on, Kevin? It's great to have you.
Hey, how are you? Thanks for having me. You got a little echo on your mic here. I don't know if that's coming through the stream at all.
I gotcha. We'll let production know there. Hopefully it's good enough there. Hopefully the audience can read lips. But okay. With that being said, Kevin, what's going on? I know a pretty big gap up over the weekend, pretty big gap down in oil. We got a lot of names moving, a lot of volatility into the market. What's been on your mind so far this week?
Yeah, it's funny. So our platform, I look at it kind of from a top-down perspective. So I look kind of like the bigger indexes first. So we measure and map everything, but I was looking over the weekend at SPY, QQQ, DIA, and IWM. And if you look on our screen here in the top right, DIA had the strongest signal coming into this morning. So I'm not shocked that it was kind of the leader this morning at the opening bell. Just with how everything's set up right now, like if somebody asked me after the close on Friday going into the weekend, which of those four would you bet on? It would have been DIA. So it's nice to see, that's performed well this morning.
Oh, 100%. I know, especially over the weekend, we've been seeing a little bit more volatility over the weekend with pretty large gaps, the upside and downside over the weekend. But it is nice to kind of have a little bit of a gauge to at least be able to gauge expectations on where things might be, into the Monday trading session coming on up. But any other specific underlyings you have kind of top of mind here? And
yeah,
what else you got over there?
Fun. Yeah. It's funny. Like, I think there's a lot of noise and a lot of narratives in the market right now. So that's where I think our platform is really good, is we have a lot of numbers. So I'm a big believer in the numbers over the narrative. So that's where I kind of use this software to see where we're at. So like Google was set up really well for us going in the open. So a confluence of 23 is like really heavy support. So I look for asymmetric bets, right? Something with heavy support underneath it and not a lot of resistance overhead. So Google, it's starting to show some more strength. And I mean, it had an unbelievable spring, and I'm not saying it's going to do that again, but it's in our system. Like Microsoft's done better lately. Apple's done really well lately, but a lot of the Mag 7 stocks have kind of been a mixed bag, and Google's starting to turn back into the positive camp in our software.
Yeah, it does seem that way. I know one of my calls, I had sold an Iron Condor in Google not too long ago, and I think that call side is already getting tested, really emphasizing that upwards momentum we're starting to see very slowly in Google there. Out of the Mag 7 stocks, I mean, what's been most impressive to you lately? I know we had a lot of earnings from last week, but any of them kind of surprise you? I know Microsoft was really, the big dog in town there with the aggressive moves to the upside we've been seeing over there. But do you have a specific favorite out of them?
I like Google now. Like I'm long Google.
Okay.
Full disclosure, I'm long some of them, but I bought more Google this morning just because I think with how our software is reading, like it's neutral now, but I think as it gets through, if it can get above that 371 level, I think it'll flip back to probably bullish, and then there's a lot of room for it to run overhead.
I got you. No, that'll be nice. That'll be nice to see there. We'll have to do some trade management on one of the positions that I have on here if we continue to see that upwards there. But any earnings this week you have your eye on?
I don't trade earnings a ton. I mean, the one thing I am watching a lot of is oil, just from Trump's, his tweets this morning about Chevron and getting oil down and the Iran stuff. But yeah. I mean, I've been long USO for a bit, and that has heavy support at 125.59. And before we went on this call, it's below that. So I'm really curious to see if that'll close below that today, because if that does, I'll probably get out of oil. And that's been really hard to trade right now just because it's been so narrative driven. And I'm not a geopolitical expert. I have no clue what's going to happen with these negotiations or non-negotiations, but I just look for entries and exits in the chart, and I've done well on USO in the past couple of months, but it might be time to get out of it right now.
Yeah, I don't even think the geopolitical experts know what exactly is going on in oil either. I think it's a surprise for everybody. So I hear you to that point. What else over there you like to look at? What kind of metrics are you a little bit more fond of?
I mean, we use a lot of, the Fibonacci, the EMAs, we measure map all those different things. We have a trend score that we look at to see if something's trading within a channel. And we give, scores on that. So I went long IGV this morning. Again, full disclosure, I'm not trying to pump my book here, but I just like it. It has heavy support here and not a lot of overhead resistance. So it's neutral. Like the RSI is not, RSI is at 58, so it's not overbought yet. So I'm looking for, I'm not an options trader. I'm a swing trader. So I don't know what the options, that value looks like. But I think software and tech has sold off so much. I think it could be due for a little bit of a course correction here. So I'm kind of betting on that to the upside in the short term.
Okay. So I know you said it was a trend indicator. Correct me if I'm wrong or misquoting. So I can imagine there's a handful of different, I guess, metrics or data points that you might put into a criteria to figure out if this is something that we deem is uptrending right now or downtrending. Is that kind of the case, how it goes with that?
Yeah. So we update our charts and our support and resistance, all those levels. We update them at the end of the market closing. So we're not trying to constantly update the data because we found that there's a lot of fake outs during the day. So we take all the price data during the day, and then after the market closes, we run it through our algorithm. And we have, I think it's like 166 million rows of code. So it's a very advanced, very sophisticated algorithm. And basically we try to do a lot of the heavy lifting of understanding and interpreting all that data. And then we put it into these numbers and shoot them out into, easy to understand. For analysis, it's basically very bearish, neutral, bullish, or very bullish. And then we have support and resistance levels. So what our community really likes is, we have very easy to understand. Sometimes you see people and they're drawing charts and there's a million lines on it. It looks like I have a 2-year-old at home and it looks like he was drawing on some of the stuff because it's so hard to understand.
You got a hold of your charts. That's what happened.
Yeah. So it's kind of like, what do you want me to read with this? What do you want me to do with this? So we try to take all that out of it, and we do a lot of that hard math behind the scenes, but we try to present it a very clear way to understand of like, hey, like if you buy here, this has a chance to run above if it gets above this level. Or if we have some of our users are short-term traders. So like they've done really well with Bitcoin because our software got people that transition from Bitcoin earlier this year. I think we did a really good job of switching out from being long to it to short to it to staying short to it, where other people have been kind of faked out in between.
Have you noticed a little bit of a shift in sentiment when it comes down to crypto? I don't know if it's just me, but I almost feel like over the last 16 months or over the last 6 months, it feels like crypto has slid into a little bit of, I don't want to say irrelevance territories, but it's not being talked about as much. It seemed like crypto was such a bullish asset class. It almost seems like people's perceptions and viewpoints and perspectives of value on the crypto markets has really shifted in such a short amount of time. Have you noticed something similar, or how have you perceived those crypto markets now that you touch on Bitcoin?
Yeah, I thought it was really interesting when the narrative around it started shifting more to stable coins and how the US government was going to get involved in the treasury and how that was going to be how, different money was moved around. And I'm like, it seems like I'm not a Bitcoin expert, but it just seemed like we're kind of entering a different phase of it. And then I have no clue. I own some of it in various different parts of crypto, but I'm not a stable coin expert, so I don't know how well that's really gone. But I think it's been interesting to see like MSTR sell off and how
what an
they've
interesting
been.
strategy, right? I mean, to buy so much of your so much of your portfolio in crypto.
And now they're trying to pay preferred dividends and they're underwater. So like that's the part that I'm really watching closely, because I feel like that there's so much concentration in Bitcoin that it doesn't take much, I think, to move the sentiment. And I think the retail people could get really hurt there. And I think some retail people have really gotten hurt there because, I think how it was pitched when it was created 10, 20 years ago, whenever that was, to kind of what it is now, I don't know if it's still that same mission as what they originally intended it for.
I could imagine when we'd seen that pullback in crypto, MSTR probably popping up into the category of downtrending stocks on that software over there.
It was rated the most bearish stock in our entire database for a long time. Okay. Like it's hard to stay number one for a long time, and it's been in the top 5 or top 10 now for a while, and it's kind of scary to think about that. If you're a shareholder of that company, like I feel bad for people who, I'm sure there's some, average Joe or average Jane out there who've invested some of their retirement or some of their, regular salary from their job. Like they weren't gifted options because they're not management of that company. And I feel bad for them if they're, significantly underwater on it now.
Yeah, you could imagine. I mean, especially whenever it was so hyped up. And I mean, it seemed like such a bold strategy. But, hindsight, probably not the most effective way to structure a portfolio. But we'll see if it turns around. We'll see what the overall sentiment in crypto is going to be. I know you touched on oil. I know you touched on some of these Mag 7 companies. Do you have any thoughts on SpaceX? I usually ask everybody just on their thoughts. It's always nice hearing different opinions, different perspectives, even if it's on the same topic. I know we got SpaceX earnings coming out this week. They're also going to be increasing the flow, so adding a little bit more supply to the boat, which could cause a continued downside pressure we've been seeing in SpaceX. But nonetheless, we have earnings this week. What runs through your mind when you hear that ticker?
Honestly, what runs through my mind is I was on your guys' show and somebody else's show when that ticker came out that Friday.
Oh, did it IPO'd about 9 weeks ago? Yeah.
Yeah, and on IPO day, I said that was retail being stuck as the bag holders because they're going to be exit liquidity. And
did you also have that opinion? Don't mean to cut you off there, but because I was around when we lifted the PDT rule, I think it might have been the same week. Did that add to your bias or your inclination at all, or not really?
A little bit, but I just felt like there was just so much hype around it, and I feel like it's hard when you have an IPO that's that talked about and that hyped, and I saw it starting to suck the volume out of every other space stock. So that's where it kind of worried me, is like, I think the whole space sector could be in trouble here. And I said that on a couple podcasts that day, and the commentary after was a little rough. And there was a lot of commentary about somewhere villages missing their idiot. But here we are 9 weeks later and the stock's down significantly. And, it could be a great bet long term, but I just think they've over promised and under delivered. So I think earnings this week will be really interesting to kind of get a look under the hood to see what's really going on there.
No, I think you put that really well. And it's hard not to say, especially seeing this pan out. It almost seems like a lot of the hype almost to me feels fixed and almost like a constructed hype for SpaceX into the IPO. Because one thing that I was asking myself was, it's like, what's the rush to getting into, SpaceX or the IPO? Like, what is the big deal about the IPO day, unless you're somebody that already has shares on the inside and you get to sell them, once it's publicly released onto the market. But just seeing these IPOs come and go, it's always nice to just see how they pan out, even if you're involved or not. But I know we're coming to a close here, Kevin. Anything else top of mind that you might want to leave us with? Wrap?
Yeah, I just think this will be a really interesting week now that we're through some tech earnings. I think obviously what goes on with Iran is going to dictate some of the general market sentiment, but some of the tech stuff is starting to look better. Like some of the AI plays are starting to look like they've bottomed a little bit. Like Dell's consolidated really nicely. Baba, the Chinese AI plays, done really well today. And, our system is, thankfully tracked those really well. But I think there's a lot of opportunity out there, but I think you just need to manage your risk correctly too.
I think you leave us on the best note that any trader could be left on, managing our risk, regardless of what happens. That being said, Kevin, we appreciate your time. It's great to see you.
Yeah, thank you so much for having me.
Everybody, that was Kevin Steuer. And always some great takes, especially with some of these Mag 7 companies. I mean, we've seen a lot of volatility into these markets, a lot of Mag 7 earnings from last week. It's going to be interesting to see how these pan out for the next few days. I know, Microsoft, Meta, I'm of the camp right now where I don't want to necessarily chase these names because it does feel that they are beginning to get a little bit overextended. And it feels like one of those names where if you weren't able to take advantage of the initial move, it'd be tough to chase those ones. So with that being said, guys, we are going to be going to a quick break, but I just want to say thanks for taking the time to hang out. Again, always let us know what you're looking at. Let us know what you're managing in the chat. But with that being said, guys, we'll see you here in a moment. Stay tuned for some more amazing content. Guys, in a little bit.
Good to be here in the studio.
It's time to trade smart, post PDT rule elimination. And Tasty Trade has the tools traders need. The Active Trader tab's comprehensive market data is designed for rapid order placement in a single click, while bracket orders let traders set entry, profit target, and stop loss all in one ticket. From the Positions tab, you can monitor positions, roll trades, close positions, and create conditional orders. Now, traders of all account sizes have more flexibility than ever before to engage in the markets. Smart tools for smart traders. Tasty.
All right, so I've got some good news, and I've got some bad news. Let's get that bad news out of the way first. You are going to have some losing trades. Like every trade you place, despite your extreme optimism that it's going to work out, is not going to work out. That's the bad news. The good news is at Tasty Trade, man, we are ready to adjust and defend and roll our positions if that's what it takes. And that's what this entire crash course is all about. A 5-episode crash course all about rolling. So I will see you inside of episode number 1.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
We are back. You're watching Tasty Live. I'm Chris Vecchio. He's Glen Frybarger in the middle of the frame. Hey, buddy.
How's it going? Chris, I'm a little upset. I thought we'd be face-to-face today.
No, they don't like that. Why make it easy?
The state of Illinois didn't okay your travel visa? Pritzker said no, papa.
He turned me out. JB called me up and said, "I saw you were coming in. Get out of my state." No, it's just I'll be there in a few weeks.
All right.
Yeah, just there's a few people who I'm supposed to be meeting with that aren't going to be in the office this week, and it's like, okay, so I'll come back a different time. That's all.
Fair enough. Well, I will be here to receive you with open arms whenever the time may come.
I appreciate that. We're going to have to head out to Wrigley Field because I still have yet to be at Wrigley Field at any
Big
point.
time.
Hey, Glenn, we have just 25 minutes together here today, which is why we got to get to it. There's a lot of things happening in FX markets today because we have some confirmed intervention in the Japanese yen. Before we get there, equity markets are sitting at session highs, 76.23.5 right now in ES. NASDAQ up 1.7% now. That's 28,884. A nice little move to the upside. Even crypto's participating, Glenn. Can't keep down Bitcoin today, 1.5% higher. And then maybe something adjacent to what's happening in the currency space. We have gold a touch lower, silver a touch higher. And then, of course, we have our bonds. Yields are down across the curve following that move that we have here in oil. So let's just start there, Glenn, before we hop on over into the world of this yen intervention, which may be working or not working for various reasons. What do you make of this move in yields the recent days? We saw that big push higher the last few sessions. Today they're off substantially. How is this impacting our beloved King Dollar?
Yeah, I mean, it's a super interesting story and one that is more connected than may meets the eye. Of course, we know that an interesting dynamic as the FOMC meeting shook out, steepening in the yield curve, and those farther dated treasuries getting into some problematic territory, down bonds, that is, down to levels we hadn't seen since, 2027? And that has been a pressure point for this Trump administration, as we can all remember, the tariff pause of, 2024? 2025?
April 9th, 2025.
Yep, and that explicitly calling out bond markets were getting in trouble. This not as explicit, but could be a very likely precursor to the U.S. participation in the yen intervention that we are to talk about. Is that ridiculous to draw those parallels? Because when the Japan steps in to buy yen, as we know they were waiting to do, they often finance that by selling U.S. treasuries. That is not what we wanted, so we'll lend a hand. We'll be a little friendly. We'll shave off some of our euro, sell some of that to buy some yen for Japan. Is that the correct read?
Well, they definitely sold some euro to buy the yen, but the timing of all this is really interesting because it comes on the other side of a retrenchment in Fed hike odds at the end of last week, and they've edged up a little bit here today, but they did gap open lower thanks to oil prices, perhaps. And so you have this retrenchment in U.S. rate hike odds, you have oil prices collapsing, and then you have this intervention coming in. There is word out there that instead of selling dollars and buying yen, which the Treasury could help do, it appears that the Treasury was selling euros to prop up the Japanese yen, which is an interesting mix decision to do, to drain one's FX reserves to help facilitate such a movement there. But Glenn, I mean, that's the gist of it here. We've seen now the past three sessions, 2 days ago on Thursday, and I say 3 days ago in market terms, 6J had a nice jump, and we should do some dollar yen. You're here for Forex Focus. This isn't Futures Power Hour. 156.98, just same chart inverted. We got the move Thursday. We found follow through Friday. Today we're a little bit off the lows, as it were. How do you square the circle? I have my own ideas, but how do you square the circle of trading anything yen related right now if we know the Treasury and the Japanese Ministry of Finance are on tilt trying to slam all of the currencies but for the yen?
Yeah, I mean, in terms of price action overall, this is a super exciting market. In terms of tradability, gets a lot dicier, especially in the short term. I mean, we were even talking on Friday around here, looking at the spot market, looking around 159, saying, this is a tough one to try and chase, even though further intervention may come. You got a full 300 pips further to the downside right away, but a bit of a balancing for now. I'd say trader takeaways for this, if you're trading this directionally, would just be to remember that what Japan really doesn't want to see is quick moves that revert the efforts that they've been conducting to try and get this down. So if you are trading some of these pullbacks, some U.S. dollar strength is what you're anticipating against the Japanese yen, then I think there's definitely room to do so. But when it starts moving in your favor at a rapid pace, might be smart to take some profits then, not trying to trace a full retracement, because that's when some yen buyers could step in at a very high institutional level. And similar, as we navigate through some of these organic sessions and you see a retracement higher, if you think fundamentally this has changed the picture for the Japanese yen, I mean, coming off of some fundamental tailwinds from the BOJ's guidance and perhaps some U.S. weakness, then you'll get a much wider range of potential pullbacks here to the upside in the U.S. dollar's favor that you could get a better price at. That's still historically very cheap for the yen if this is more of a long-term reversal and not just a frenzy of yen buying one time.
I think one of the instructive developments here on the other side of this yen intervention the past 3 days is how insensitive broader markets are to it. I remember it was literally 2 years ago today, the first Monday of August 5th, when the market was bottoming out because of those Japanese carry trades unloading, right? The yen goes haywire, better to show than tell, and thankfully this is a 3-year chart, so we don't even need to scroll all that far back, but here we are. This is July 24 into that low that we have here on Monday, August 5th. And what happened to the NASDAQ during that time? That was a very different set of circumstances for the NASDAQ back then, my friend.
100%.
That was, that's different. That's this. July to the August low, 15% of the NASDAQ. The market was really levered up. There were some apparently Japanese funds, right? People are dismissing the Leopold Aschenbrenner situational awareness blow up as like, how could one fund drag down an entire market? Apparently it was 2 Japanese hedge funds that went bust in July 24, and it was the unwind of their highly leveraged positions in U.S. tech stocks financed in yen that facilitated the whole move. Obviously the market jumps on and gets on board, but that is like the spark that catalyzes the whole thing. And so we don't see that happen here this time. The yen has not been used as a vehicle for carry trade. Glenn, you pointed out something different, which is maybe where the opportunity lies through all this intervention. It's in the Swiss franc. Because dollar Swiss took a step back a few days ago amidst all this intervention talk. But unlike dollar yen, which is falling each of the past 2 sessions, dollar Swiss is starting to find a little bit of stability here at its 50 EMA. You pointed out astutely, 0% interest rates. S&B is not looking to raise them. They are loudly telling the market that if anyone dares to strengthen their currency, they will step in to weaken it. They don't have an inflation problem right now. They don't have any geopolitical issues to speak of. Is this the opportunity for this dollar rebound trade? Forget the yen. Should we be looking at the Swiss franc?
Yeah, I think you see more and more people looking at the Swiss franc and particularly selling the Swiss franc because you just called out all the factors that are present in betting against the Japanese market that aren't there for the Swiss franc. Now, of course, if you're trading this from a retail side, retail carry trading, even though you are leveraged to an extent here, getting 33 to 1 leverage, you still have outsized price action in the exchange rate itself will often outweigh the accumulated carry. So you still do need price action to go in your favor. You still need this dollar to be very supported. But the backdrop is, if you zoom out from longer than 1 year, when we had extreme Swiss franc strength and U.S. dollar weakness, you have a ton of price action the past decade plus, where the majority of the time this exchange rate is much more in favor of the U.S. dollar. So that's where, even though you're looking at relative strength over the past 6 months, that might cause some hesitation to say, why would I get long now? When you zoom out and you start thinking about what this carry trade could mean long term, you're really only accumulating those pennies in front of a steamroller if your time horizon is longer than a few days into weeks and months. So along that time frame, could be seen as historically still a cheap price for this dollar in this market, with less fundamental wild cards than the yen presents at present.
Right. And so one of the reasons why I go over to 6S is because if we were to go into the future side of this, I like executing ideas with defined risk.
Mm-hmm.
Glenn, you could do this through spot FX. You could just set like resting orders there, and if the market goes down to that level, you get knocked out. 6S, for example, does not have any options. So 6E does, 6J does, 6B does, C, A, but not 6S. This was franc futures. These are tradable, but if I were to go into the futures market here, there's nothing to do.
Yeah.
There's nothing to do. So you have to go over to dollar Swiss, which if you're on the platform, you see Tasty FX tab, you can get that enabled. But Glenn, I'm thinking that we have a market that's in a steady uptrend right now. We have a market that looks like it's trying to bottom here on some of these charts. It feels a lot like the Dixie chart that we were just looking at, so broadly reflective of what we're seeing with the U.S. dollar. Dollar today is bouncing right at the uptrend from the January and the May lows. So it's tough for me to say that the dollar is done. And when I see the Swiss franc bouncing from its 50-day moving average and trying to pull back through the 1 week and through the 1 month, all in one fell swoop, it does feel like there is a desire here for the market to start picking up the pieces after this dislocation. And plus, if they're selling the euro moving forward, and not dollars, what's the problem?
Yeah,
so
whatever.
Dollar Swiss is my vehicle if I'm looking dollar longs right now.
Agreed. Yeah, a great choice. And yeah, we'll see if there's anything further from the euro decision. It's not as interesting as I'd like it to be anecdotally, and I know you're holding some short euro exposure, so I'm sure you would have appreciated a little bit more reverberation in perhaps a cascading effect of euro selling on their decision to do so, but not really the case right now. Euro holding up relatively strong. But the biggest surprise other than that to me today is the U.S. dollar making a comeback against this Australian dollar, which you noted this morning, a pretty strong risk backdrop now from a macro perspective. I'm surprised to see this Australian dollar as far down as it is, and I'm looking at this in the spot market, this 70-cent level, as a key anecdotal indicator of whether this Australian dollar can resume its 2026 strength against the U.S. dollar, and right now we're dipping below it.
We are, and a lot of the inputs that help inform the Australian dollar's strength are not exactly doing well here today. Oil, for example, some of the metals. A little bit surprising because you go over to copper. Copper's having just another fine day, ever so quiet. This is the one thing that just, I've talked about this with Ilya for weeks here. You said the beach ball underwater analogy.
Yeah.
Copper didn't have that big boom and bust cycle like gold and silver did. It certainly is nowhere close to 30, 40, or 50% from its January high. Silver is basically 50% from its January highs still.
Wild.
Copper, on the other hand, is just a few pennies away. We're talking about 2%, 3% here, maybe. It's not all that far off. So the base metals are actually holding up. That is usually pretty good for the Australian dollar. So yes, Aussie is in a little bit here today. I would just keep an eye, Glenn. I'm looking at this from the futures perspective. Similar situation if we head over to Aussie dollar here on the chart. Below the low of Friday, 69.92, you then get your key reversal because technically this is after an uptrend, bearish engulfing bar, and it's a close below the 50, it's a close below the 1 week, and if you drop below 69.84, it's also a close below the 1 month. That does feel like, okay, maybe we're going to reverberate back down towards the low 69s or so before it feels like we can maybe cherry pick a little bit of a better low down there. Just watching the market, and FX tends to be quite technical for what it's worth. It reminds me a lot of crypto in that regard. Borrowed that from standard currency. Technicals do matter here. I just want to quickly go back over to dollar Swiss though. I'm not sure if you caught that when you were talking there, but if we go over to the Tasty FX tab and we hop on over into just positions here real quick, I did put on a lot trade of dollar Swiss here, long dollar Swiss. I'm going to hold on to this until let's go back to the watch list here, load up the pair. Let's see, where's our 50-day moving average? Yeah, that low that we had last week, 80.39. Okay, I'm going to keep my risk contained down to there. So we'll call it 80 pips, about 75. Obviously, if the market flashes down there and bounces back, I'm not going to get out. But that's kind of the closing point. If we get a close below there, I'm gonna dip. I say that because we could see another intervention effort in the yen that ultimately pushes down the dollar. And certainly there have been intervention efforts the past 2 days that have been going on quietly. We just have one confirmed today and yesterday. So if this were to continue, maybe the dollar can't rally substantially out there. If there were 6S options, I'd much prefer to do this with a 6S and sell like a call spread in 6S. But we got to do with what we got. So dollar Swiss here, a lot of resiliency, holding up. Dollar index bouncing at the trend line for the January-May swing lows. And you have a currency here that's not dealing with the inflation and rate hike agita like the yen is. So this is probably, to me, I don't want to say safest, but I'm looking around the board, and the Swiss franc really has no inputs right now. It's a blank slate.
Yep.
So it's clean. Whatever's happening with the counter currency is really driving the boat when it comes to that pair with the Swiss.
And at your one lot size and the current indicative swap offer, you're getting around $3 a night at current levels, credited to your cash balance by trading this spot FX. I know in the futures realm, there's no free lunch. It's baked into the price there.
No.
But the separation of church and state, when you are able to get that positive carry, it does look nice in your spot FX account to have that accrue while you hold on to this long dollar Swiss franc position.
Yeah, and well, if this thing just chops around sideways for the next, realistically, let's say it just pins here for the next month, I may just be able to get out and take some profit because I collect the positive.
100%.
Yeah, that's it. We'll see. But I like dollar Swiss. Dollar Swiss is interesting. You and I were talking about it last week. It had its pullback, and it's holding up in a series of higher lows here, and the series of higher highs has technically continued. So we're not going to look the gift horse in the mouth. Maybe this is us turning a corner. A bottoming process can take some time, but it definitely feels like, in my view, in my experience here, I'm just going to draw a quick line across this chart. It feels like we have turned a corner. No, I want you back up here. We're going to put you right there. Okay. It feels like we're turning a corner here against those pivot highs. So intervention only took us down 100 pips or so. That makes me feel a little bit more comfortable about operating on this. And we've had the retrenchment and Fed cut odds, and that's the best that you could do. All right. Okay. Let's talk about intervention, though, here. We have about 5 minutes left in the show. So this is something that I've been doing through 6J. Both here, foul page, elsewhere, 0065, 0066. These obviously are not in the money yet. And while I could flip these today for a profit, right, I'm inclined to think that there's maybe a little bit more coming in the next few sessions, because if you just do one intervention and then you don't follow through on it, the market's going to start pushing back immediately. So maybe a little bit, another push higher here, per se. I'm inclined to think that maybe, just maybe, we have a floor with which we can operate around, which at 4 days to expiration, that's not something that we could trade with. And this isn't necessarily your forte or cup of tea because it's in the option space. But we'll call this a defensible line in the sand down here.
Interesting.
I will treat this as a defensible line in the sand, like I have done previously over the years where we have an intervention level. Like if we get down to that level, like they've intervened there before, buy some calls, sell some puts, a mix of both, one or the other. If you get lucky, then they've clearly outlined the line. So whatever this is, they've outlined the line here. 164 is the new line in the sand in dollar yen spot. Maybe it's 0061, we'll call it, in 6J. Is there an opportunity there now in the futures? No, because we're going, 100 pips wide and we're collecting 10 pips of credit? No, we'd want at least 33 pips of credit. So I don't think there's anything else to do besides see if we can squeeze a few more dollars out of this position. Glenn, I certainly wouldn't be chasing here, though, really in either way at this point in time, because we've had such a substantial move. The prudent thing to do for the yen, and having been involved in the market for so many of these interventions over the course of my professional trading career, if there is going to be a fade, it's going to happen immediately if the market isn't buying what the BOJ and the Ministry of Finance are selling here. So is that already happening today? We could make a case for that, Glenn. The low is what, 155.23? We could make a case that we're already starting to see a fade in this market. I would much rather look to either get long the yen closer towards 162, 163 and see what happens, or get short the yen maybe closer to 153 or 152. But this kind of feels like a no man's land down here. I mean, the yearly lows near 152, you are basically placing a bet that we are halfway between the low and the high right now, and you have a strong directional bias here after they've already intervened and made the big move. I'm not sure that's the risk to reward there is so fantastic. There you can see the halfway mark in this 2026 trading range right now in dollar yen. So,
yeah, I mean, what you do have on your side, however important you want to weight it, is a few recent historic examples of how markets have treated past interventions. I mean, we have one or two confirmed or all but confirmed this year so far, and what they tell me is one was bid back up almost immediately, like you said, and that is one where you're equally in no man's land because it was bought up so fast. And then you also have a shakeout here in this market at the end of April, start of May, where markets hesitated a little more to gauge what fair value was, and what that can do, that mirrors kind of how we're situated right now, is we've had continuation. We've had 2 or 3, 4, if you kind of count the Sunday open, of saying, okay, this could be categorically different. You have U.S. stepping in to support. We've seen a huge amount of price action to the tune of 700 pips already taken out of this market. What you could do here is, speculate on further yen strength. And if we do just kind of chop around here, you could be more confident to get out or even reverse, just using time as a variable, because if there's no stronger pull towards the yen, at least historically, the market outside of these interventions have been very willing to bid this back up. So I think there is an interesting exercise there when you think directionally about time frame and how we're situated 2-3 days after this initial move. And as long as you're willing to actively manage your position, there could be some potential opportunity. The range of price action is certainly there.
I'm looking at this range for the year to date so far, and we are pretty dang close to the halfway mark here, my friend. In 6JZ6, the December expiry, that range basically runs just north of 67 and just under 62.
Yeah.
Is there pricing out there to basically play a move around the yearly range? It's close. I'm surprised there's actually not a little bit more volatility in this market right now. Only a 49.5 IVR. It almost makes me think the market is starting to say here, there's no reason to price in more vol in the short term. So if we can get a little bit better pricing, if we were to go out to say 67 days and we can get something like the 61.62 or like the 67.68, that's only 21 cents credit right now. Not worth it, particularly in the face of intervention risk. I mean, if that was 51 cents on a dollar-wide strike, 51%, we would take that even if there's intervention risk because it's 67 days and the odds are that this thing would calm down perhaps in that window. But not for 21 cents. Not yet, but I think this should be radared here because if we can run the course of intervention, right? I mean, this is why I so much like these FX futures, folks. I come from the spot FX world. I hated having to range trade. It's so mechanical. Buy low, sell high. Why can't I just place a bet that it's not going to break? I try looking into currency options. I have a currency options book right here on my shelf. I can see it here. I'll pull up on screen later. It's like I can't do this without a private bank. I don't like this. The futures solve that problem here. So if we want to play a view that like they're intervening, it's going to chop around, 6J can be that place for you. But Glenn, we got something off in dollar Swiss today. Not really sensitive so far to what we're seeing. But hey, broader markets here as we close out the door. 76.29 in the S. That's 110 points now. NASDAQ up 28,917, a 512-point rally. Wow. Big numbers coming up here on the screen today. But we have more big numbers coming up here next because there's the one and only, the big Jefe himself, TP Tom Preston, live trading here on Tasty Live.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade. You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us. We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Good afternoon, everybody. I'm Tom Preston, and it is 1 p.m. on Monday afternoon, and market is rallying today. So let's get into some trading now. Okay, so our S&Ps are up $112. That's well, whatever. I'm short, so I sold 9 Condor, 0 DTEs, as I always do. My short strike is the 75.80, so I need a 20-point drop, 22-point drop in the S&Ps. If I get that, that'd be my max. I'd actually have a max profit. I usually take those things off at 50% profit. But and I have a working order in to buy it back. But I don't know. I need to sell off in the next half hour or the next 2 hours. Excuse me. The big name. Well, actually, you know what? Let's do that later. Let's take a look at the big one this afternoon. Earnings today. A bunch of names coming out with earnings. We're going to take a look at a few of them. Some are just a lot of the names. I was looking at. I don't know. There's just a lot of little stocks that have earnings that just the markets stink. They're not worth trading. We'll look at a few that might be. Palantir is the big one coming out this afternoon. And here are the options: 133% overall vol in the 4 days. And so the issue with the earnings coming out tonight or tomorrow morning is most of these stocks only have options with 4 days. So no 0 DTEs, no 1, 2 days, that sort of thing. So you can hang on to this with the 4 days as if 4 days actually gives you any duration in a trade, but whatever. We take what we can get. So Palantir has been doing what? Kind of going nowhere. I guess, this one of the stories we talked about this, or I just read, and I don't really follow the news, but there's going to be this. Apparently, they want to start building out some more missiles and stuff from, going to Lockheed Martin, which we could take a look at, Grumman, to build up some of the missile defenses and stuff that we've been shooting all this stuff over in the Strait of Hormuz and Iran and stuff. And Palantir is. I always think is one of those companies. They build a lot of stuff for the U.S. government, both data, and they integrate that data and integrating that data into weapon systems, things like that. We've traded it before with varying degrees of success. I sold some put spreads, looking at a chart around here. Lost money on them. Let's go. There's nothing like revenge in trading. You gotta love it. So. And last week's earnings stunk for me. I was, short Microsoft, long Amazon. Those just hammered me. Looking at Palantir, stocks at 125.71, in between 125 and 126. Let's take a look at which way the skew is pointing. So let's say down $3 because it's a volatile stock. Down $3 down to the 22 puts, 523 up $3 to the 29s, 580. So the skew is pointed towards the upside. If we were bullish on Palantir, and I don't know, by the way, I have Hockey Roku Dizzy, and we keep climbing. Yes, of course. That's because crude oil, which we'll take a look at, crude oil is selling off. Everybody thinks everything is fine, nothing to worry about. VIX is getting crushed. SPOOs are up. And what are we going to do? Yeah, let's try a bullish trade in Palantir. The expected move for these 4 days, and by the way, I keep just to emphasize to everybody, this brown line is the current stock price, 125.65 plus and minus this expected move number here, this plus minus 13.88. This 13.88 is a weighted average of the at the money straddle and first two out of the money strangles. So it's a weighted average of that stuff. And if you go down here, well, let's say, these things have an 80% probability of expiring worthless. I don't want to take the risk of a naked short option. And the margin requirement, making hers, actually, her $62 versus $111 of buying power isn't bad. But let's see what we get for 2-point put spread. 38 cents, not enough. We got to pull this thing up. Expected move be damned. I want to drag this up until I get about 2/3 of the width of the strike, 60 cents. So that's what it is. Let's look at the metrics on this thing. 70% probability of expiring worthless. The P50 number, like I said in last week, a couple of shows, is the P50 number is based on a simulation of 1,000 potential price paths for the stock over the next, in this case, 4 days. It doesn't really work well, especially if you factor in 133% volatility. So P50, yeah, it's probably 36% according to the calculation. The numbers don't lie, but I'm going to rely on this pop number. Theta 633 versus, so I'm taking $140 worth of risk in this trade for a 60. Let's say if I'll take this off for 30 cents. If I sell it at 60 and can buy it back for 30 cents tomorrow morning, I will do so. I'm not going to hang on to Palantir. Made that mistake before. So let's route this. 60 cents. I bet I get filled. I bet somebody plays. Maybe not. So as I was saying, crude oil is down almost 6%, 589. It's come back a little bit. You know, I guess whatever. People are feeling pretty good about what's happening in the oil market, obviously. I guess President Trump is, jumping up and down, yelling at the oil, with the oil producers, or I should say the refiners, to make gas cheaper. Is it going to work? Who knows? Who cares? But they're driving down the price of oil. That's driving up the SPX. Where is that devil now? Yeah, I need an even bigger sell-off now. Thank you very much. And they're crushing the VIX. VIX now is down below the 16 handle. I'm short a put spread in there with 15 days. Let's open it up. Let's just see where I'm short the 16, 17 put spread. Let's do this little trick. I want to see where the futures are trading. So August, I'm selling the 18 calls, buying the 18 puts. That's synthetic short. Future, I go out to the September expiration and I buy the 18 calls, sell the 18 puts, $1.17 debit. So that basis has gone up about almost $1 over the past few days. That's because they're just crushing the front month VIX. That's what it is. So that is, VIX is down, S&P's up, VIX is down. Let's keep going here. I need some trades. Palantir working in their game. Let's take a look at GameStop. Why GameStop? Well, GameStop has had a massive sell-off. Just a huge, this popped up in my standard deviation list. How many standard deviations, and it's like 5, whatever it is. It's this huge sell-off. Why? I don't know. There was some story about GameStop. I don't really care. Let's go in and look at the options. Here I have an Iron Condor loaded up. Let's clear this out. Make sure we know what we're looking at. 1880 is the last price. So in between 18.5 and 19. Is there any directional bias in this thing? You go down half a point. See, the problem is with the stock trading at $19, the option prices themselves have low prices. So I don't want to say cheap, because cheap means, oh, you should buy these things. No, what I mean is they just have low prices. So what we have is stock at 1880, so 18.5. Yeah, I mean, let's just go down to the 18s. The puts are 25 from the 19 to the 20s. There's a little bit of upside bias, maybe. I was looking at, what do you say? Let's see if we could do an Iron Condor in here like I had loaded up. Taking 30 cents for this 1-point Iron Condor. Anyone, and by the way, now I have, whoa, GameStop, that's a blast from the past. No kidding. I think, I could check my trade history. I don't think I've traded GameStop in like 2 years. And, it's not necessarily my favorite thing to trade, but I'm just going to route an Iron Condor in this for 4 days. Collect 31 cents in it. What do I know about GameStop? Nothing, but it's a defined risk trade. Again, if I can make $15 in this stupid thing, if I can make $15 on this for $70 worth of risk, that is a decent return on capital. That's what I'm looking for. Let's route it. See if somebody wants to play filled. Take a fill. By the way, this is a fill. Hand signal for the fills. Let's go into the watch list. LMT, that's what we're talking. What I was talking about a little bit earlier. Lockheed Martin, they came up as a stock that the government would call on to build some of these weapons systems. Is that going to be bullish for LMT? Presumably. Another one is Northrop Grumman, or I just call them Grumman. NOC, I think it is. Yeah, NOC. Up a little bit, or down. Yeah, it's up a little bit today. So here's the issue. If you look at Northrop Grumman options, even going out 46 days, the liquidity is pitiful. So even if you had a hunch about NOC, what's the better things to trade? Even 18 days, because I was looking at this earlier. $2.50, and yes, it is a $545 stock. Yeah, okay, fine. So I don't necessarily have any interest in trading that. LMT's earnings are coming out on September 1st. Ivy rank 39%. The chart, as we said, has been the LMT maybe up or down a little bit, actually. They don't like LMT. They don't like the news today. Let's see what we get. These markets stink with 4 days. Now, these stink. You can't trade this thing. Let's go open up 18 days and see if anybody wants to play. Not really. I mean, there's, not bad open interest. I mean, what's compared to tens of thousands in the S&Ps, this stinks. But for a stock, it's not bad. I don't know. Any opinion about LMT? Bullish, bearish? I'm going to the crowd. I can see your chats on the YouTube channel right now. So if you want to put a bet in, want me to place a bet in LMT over the next, let's say 25 days, even ahead of earnings. No, the market's stinking here. I hope you don't. Well, anything? Yeah, N1C3 boy. Yeah, Google, Rocket Lab, ASML, NVIDIA, Oklo. Yeah, NVIDIA, I'm short a put spread in NVIDIA. Finally profitable. Oklo too. So yeah, I've got some winners offsetting my SPX losers. Let me go to another one. ON has earnings. Let's clear this out. ON has earnings coming out tonight on semiconductor. And what I did on ON, it's up 0.5% today. Not a big deal. So it's been drifting down. Let's check the skew and see if there's anything here. If I go in and I already have this loaded up. If I have $82 to get down $3 to they're at 360, up $3 to 85, 360, they're even. So the markets in here, when you get a little bit close to the at the money, they widen out because they have more deltas. Just to show you the point of this. Again, the higher the delta, a little bit more risk in the option. They widen out the markets. And I understand that. I would do that as a market maker too. So if we go outside the expected move, which is this brown line, right on the edge here, this is 78. Let's go out a little further on the call side. Let's go out here. So 67 cents, 66 probability profit, $66 of max profit on this versus $133 of max risk. Let's ship it. Let's see. Let's just try a market neutral trade in ON. So one of the questions, before we do this, remember it's the 70, 72, 93, 95. Let's just do selling the 93 calls and the 72 puts. The issue with that is, because I was looking at this, it's $821. We could do this. It's not a huge margin requirement if you have a smallish account. If you have a, sub $10,000, yeah, it's probably a little bit high. It's a little bit high. So maybe just so, so everybody can reference this, I'm just going to turn it into an iron condor and go from 800 and change of buying power requirement to 131 bucks. It makes it more manageable. Let's ship it at, let's try 69 cents. See if somebody plays. Nothing done yet. Let's go to the activity. Nothing. Filled in GameStop, sold at 31. Nice. Working. Let's go back to the watch list. LMT, the Intel is something I have wanted to trade. I was taking a look at it, didn't get it. I don't think we got a chance to talk about it last week. INTC has been beaten up over the past, couple of months. What do they make stuff, internet stuff? I don't know. It's all part of that AI chip world. A little bit more, I guess, maybe on the manufacturing side, maybe, Intel inside. But hey, speaking of Intel inside, how's Apple doing? I don't know if Apple uses them anymore. Apple's up a little bit today after getting crushed. I'm short some put spreads in Apple, still not showing me any love. Let's go into INTC. Let's do how about a 0 DTE in Intel? Can we get any premium in here for this? No, not really. I mean, it's not bad. I don't like that though. 0 DTEs isn't enough in there. Let's try till Friday. What are we getting? Let's take a look at this queue. 91.32, right in between here. 91 and 91.5 down. Let's say $2, 267 on the 89 puts. What do they do? Up $2. They screw up the strike prices. Yeah, it's pointed to the upside a little bit. Let's go outside the expected move. What do we get? 71 cents again. Not bad. This is the sort of stuff, and again, just to see what the naked strangle would be, 99 versus 99 calls, 84 puts, $1,900, so $2,000. That's too much for a modest size account. That's too much money if you're right, you can make 10% on your capital, but I don't think it's worth it. If it crashes either way, you get creamed. Crashes up, crashes down, you get hosed. So 82s, by the 82s, we turn this into an iron condor. You get 71 cents for it. Third of the width of strikes, even better than that. Third of the width of strikes, let's send it, ship it, see if we get filled. Let's see what else. Are there any other symbols you want me to check on? I thought on sold shoes. Yeah, well, I think it might have been one of those SPAC. What do they call those SPAC things? I don't know. They probably changed their business. Let's see. You know what? Let's go into SPX. It's coming back a little bit. You guys are good luck for me. Let's go to the 0 to shoot. You want to try again, bullish, bearish on into the close, bullish or bearish on SPX. And we can do one of those unbalanced butterflies that have not worked. AMD, filled on my Palantir. Does AMD come out tonight? Well, they come out tomorrow. I don't know if they're before the open or after the close, but I was thinking we could apple strangle. You want to do an apple strangle? An apple strangle. Again, $305. And I don't know if you're talking about a 0 DTEs, but why not? Why not? $31. Let's do it. 50 cents. If Apple just stays in between 305 and 307.5 for the next hour and a half, could make, I don't know, maybe $40 in this trade. Let's do it. Oops, shoot, I erased it. Sorry, first day with the new hands, folks. First day with the new hands. Let's ship it. 53 cents. Let's trade. Anybody bullish, bearish? Thank you, Frank, for posting that, putting that up. Frank Walsh manning the chat. What am I seeing? How do I show the... I don't know the poll. I don't know how to do it. Bullish. Okay, bearish, 67%. People are liking the bearish on the SPX. Let's do it. Let us do it before I run out of time here. So let's do the unbalanced butterfly. Let's buy the 7600s, sell two. And this is how I start. Sell two of these. Quantity. Buy one of these. Drag this down, 5 cent credit. That's not enough. Let's take it down to here. Let's do this. No, I'm not getting it. Let's do a 10-point wide and 20. Oh, God, I'm not getting it. Oh, boy. You know what? Let's do this instead. Let's just buy a 10-point butterfly. $1.60. How about if we buy a butterfly in both directions? You want to do that? Let's go down to these. Let's drag it down here. Drag it down here. Drag it down here. Then buy this. Sell two of these. I can't do more than 4 legs. Darn it. I'm not getting the credits I need for the unbalanced. I'm not getting it. Let's just sell a call spread. Now let's buy a put spread. Let's buy a put spread. 76,705. Boom. $6, $6.65. I can make $300 on it. Ship it. Fill. Take a fill. So that is how I. So Hikarosu Dezu is a broken wing butterfly to the downside. Yeah, right. I love the 0 DTEs, SPXs, even though I'm getting killed today. I still have an hour and a half left. The problem with the broken wing butterflies on the SPX is the very low VIX. It is inflating the value of the butterflies and deflating the value of the embedded short verticals. Okay, that's the problem. So you're paying up for the butterfly, not getting enough credit for the embedded vertical, and all I could see was debits or little credits, and it wasn't worth it. What I do, depending on the width of the strikes, with the 0 DTE SPXs, I'll do, let's say, a 5-point butterfly, and then go down 5 points to do the vertical, and I'll try to get maybe a 25 or a 30 cent credit for that. If I do wider 10, maybe I'll get 45, 50, 60 cents for that, maybe, depending on how much time I do it for. 1:30 in the afternoon, they're harder to find. If I did this in the morning, you can get some decent credits.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
It's time to trade smart, post PDT rule elimination. And Tasty Trade has the tools traders need. The Active Trader tab's comprehensive market data is designed for rapid order placement in a single click, while bracket orders let traders set entry, profit target, and stop loss all in one ticket. From the Positions tab, you can monitor positions, roll trades, close positions, and create conditional orders. Now, traders of all account sizes have more flexibility than ever before to engage in the markets. Smart tools for smart traders. Tasty.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
How many trades must a man roll down before you say that he's afraid? How many times must we be stopped out before our portfolio's decayed? Yes, and how many times will our positions get too big before our minds can be forever swayed? The answer, my friends, is found at Tasty Trade. The answer is here at Tasty Trade. Yes, and how many days to expiration is best? And do I have the right chart? What's the right number of trades to put on to make my probabilities be smart? Yes, and how many episodes will it take before I know where do I start? The answer, my friends, is found at Tasty Trade. The answer is here at Tasty Trade.
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast, man. Welcome to the Monday edition of what it is that we are trying to do. You guys got cut short from a little TP and Moose Boosh edition of what it is that we are trying to do. But I'm so glad that you guys are here, because it is only because of you all that we can do what we do. It is only because of you all that I can do what I do. So thank you guys so very much. If you are watching over on the Tasty Live Network, then I would actually bounce on over to YouTube, because you can join the conversation and join the discussion and communicate with your brethren who are also watching the show. Man, you can celebrate if you are a bull. You can commiserate if you are a bear, because we won the U.S.-Iran war for the 33rd time. So Laura, Matt, you guys are both on the something today. So send me into the market. Somebody get me into this thing, man. EME S&P's up 108. Man, was there ever a doubt? I mean, it looked a little dicey there for a couple of seconds. EME S&P's up 108. Got the risk-free instrument, also known as the NASDAQ futures, up 490. Got the boomers up 600 on their way to 55,000. Get me a hat. Get me a shirt, get me a keychain. Man, get me something. Russell 3000 back on its way to 3,000, up 49. Got bonds up a little bit. You got notes up a little bit. You got oil down about $4. You got UB40 up a little bit. You got the shifties out there. They're struggling a little bit to start the week, but they're kind of like some late risers into the week. Usually Tuesday, Wednesday, Thursday is when they tend to really shine. You got gold down 13. You got the Hunt Brothers. Hunt Brothers, SIL, up 31 cents. Okay, so silver actually up to over 58, up 30 cents on the day. You got the British pound is down. You got the euro is down. You got volatility is down. You got the Bitcoin bros, man, guys, your local neighborhood Bitcoin bro, you got to check on them. You got to check on her. Like, I don't know how they're doing. It's been a tough go. It's been a tough go for the Bitcoin bros and bro sets, but Bitcoin up 1,100. Up to over 63,000. All that made up internet money. There it is. Got Ethereum up 16. Everybody's excited. And then spot volatility, the old VIX. That guy's down 23 cents, all the way down to 15. Now, again, I don't know if we have to go over this. We're going to because your boy needs that watch time. But take a look at the VIX. So this is it, guys. This is why we do what we do. This is why we do what we do. So look at the chart. Look at it. What? That was a little aggressive. What you see, but you do need to look at it. So if you happen to be listening to the audio only version of the show, you got to come back into the archives later and look at this VIX chart. You see volatility go up, and then what does it do? It goes down. You see volatility go up, and then what does it do? It goes down. You see volatility go up, and then what does it do? It goes down. Now, you might be thinking, Jim, that's obvious. Everything does that. All the assets kind of do that, blah, 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 blah. And I don't necessarily disagree. I still think this, stocks do that, equities and individual stocks and indexes and what have you. But it's a little bit different with, equities and positive risk premiums. There does definitely tend to be a positive slope over time where we're not reverting back to some kind of, static central value of, VIX at 15, 16, 17 over time. But again, it's so reliable. It's so reliable. Now, is it guaranteed to happen? Of course not. Is this the holy grail foolproof iPod touch system? It is not. And so we have to understand it's still a probabilities game at the end of the day. Like, there is no guarantee. There is no lock, stock, and barrel. Like, this guy is going to be, my ticket to wherever I'm trying to go. Ticket to paradise, maybe? Ticket to St. Pete? Yeah, potentially. Ticket to Fenway for a Red Sox game? Potentially. Oh, I need to know. Hold on. Guys, in the chat, and I'm serious, let me know in the chat. Did we get Adley Rushmison or whatever his name is? Adley Rush something. Did we get the Orioles catcher? I couldn't figure it out. Before the show, I'm like trying to figure out, did we get him? Is it still a rumor? Are we waiting on medical exams? I couldn't piece it together. So I need you guys to tell me in the chat. Do our Boston Red Sox, my Boston Red Sox and your Boston Red Sox, do we now have the Orioles catcher Adley, whatever his last name is? Do we have this guy on the roster? You better give me real information. Any fake news, any fake information, immediate block. You have been warned. I need the real deal Holyfield. But when it comes to volatility, I digress. And so if you look at volatility, selling high volatility, guys, this is just, we can go back even further in time because, again, the content's not going to create itself. You just see the same thing over and over again, right? Here it is. Now, again, it's not like a perfect thing. It's not like a guaranteed thing. Oh, that doesn't even belong there. But it's we can never know with certainty. We can never know with this absolute certainty. We know this is going to happen. But man, when volatility spikes up to 19, 20, 21, just like it did, look at it right over here. Again, if you need a benchmark, if you need an anchor, just use the long run historical average of somewhere around 16 to 17. So that means when it gets up to 18, 19, 20, that's your time. That's your time to jump out of the bushes and sell some premium. Now, why were you in the bushes in the first place? That's a separate discussion for another time. But still, get your premium working for you. That's when you want to have your capital to lay out into the market. When I feel like, that's a good time. That's a good time to do it. So anyway, I definitely want to bring that guy up because it's very fitting. It's very, very fitting. Okay, so now what I want to do is if you have any Banana Natty left, man, take an extra couple sips. These victory laps, they're going to be something. So take a look at MES, take a look at MNQ. I don't really know that we need to belabor the point here. I don't really know that there's anything other to say other than the greatness of the DNS. I'm going to find 6-7 minutes of commentary, that's for sure. But this all comes back to the DNS. Again, guys, they laughed at us. They mocked us. They jeered us, right? But again, the DNS strategy with something like a short put, it is a perfect, perfect marriage. It is a perfect, perfect matrimony. The short put and the DNS, they belong together. They belong together like peanut butter and oatmeal, like buys and tries, like obviously quads and hams. Like they need to be together. And so with an MNQ strategy here, we've got our 2 short puts on. We've got the first one that was on this was a from theory to practice holdover. And then we've got the second one. This was an inside the trade new addition. And so I kind of think we're going to clear them both up today. Like, I don't really think there's a strong case to be made to keep these trades on any longer. It's like, man, they've already done what we have politely asked them to do, especially, the 28,400 put. I mean, that guy is right at around or just about 50% of max profit. And so I'm really thinking we take them both off. Let's take them both off. I mean, I can't even count how many BEUs that is. I mean, can you guys do that kind of math quickly? I certainly can't. I mean, I'm no Julius Spina. It's a lot of BEUs, whatever the number is. But it's like, man, I didn't know we were going to be on a bonefish bender for the whole week. But apparently, it is written. So I think MNQ, we take this guy, we take both these guys off. And it's pretty amazing. If you look at MNQ, if we just extend the victory lap a wee little bit longer. So we did these trades. Let me bring up my chains here really quick. We did these trades so we did the first one on July 2nd. So here's the first one. This was a from theory to practice trade, which you can tell by the timestamp. So now I'm keeping you guys on your toes, man. You got to look at timestamps, right? It used to be all Dr. Jim's trades from theory to practice afternoon, like easy peasy lemon squeezy. But now you're like squinting at the screen like Tom Sosnoff. You're like, wait, is that a morning trade from a Dr. J? Man, I didn't think homeboy was up before noon, but there's a 10:15 timestamp on that MNQ short put, and that is correct. And so we did this first guy on from theory to practice. We did the second guy on inside the trade, and it appears that both of them are coming home to roost today. They're both coming home like the prodigal son, and all is right in the world. And so I really think we close this guy down. But I do want to see July 2nd and July 27th. Before we close it down, we're rounding about second base, I'd say, at this point. If I look at a chart, so we did the first one on July 2nd. Hang on. Let's do, so July 2nd, let me grab, here we go. So July 2nd, my first trade was right there, approximately. It doesn't have to be exact. My second trade was here. Oh, I've got Laura's back from vacation. She's surprising and delighting me. And I didn't put I got to move my team stuff over. That's okay. Laura, we'll figure it out. You keep coming with the surprises and delights. It's so amazing. So 727 is right around here. Okay, so we did our 2 trades. We did our first trade there, right? And you can see we hit a little bit of turbulence, I would say. We did the second trade here. We hit a little bit more turbulence, I would say again. And so now with the rebound, the last couple of days, and then obviously today, both of these puts are in a pretty good spot. And it does also speak to, we sold our first put with the NASDAQ. Let me grab, we'll grab a little magenta here. You can see that we sold our first put with the NASDAQ way up there, right? And here's what's interesting. Look at where the NASDAQ is now. I mean, look at that, right? You're not going to find technical analysis like this anywhere else on the internet, by the way. Anywhere else in the world of finance, this is second to none. This is second to none. That's for sure. But if you look at where we sold the put, where the NASDAQ was and where it is now, I mean, that's like 800-point differential. That's like a 900-point differential. Not in our favor, against us. But again, what came home to roost? All that distance you have between the stock price and the strike price. All that buffer that is built into a short put. All that wiggle room. All that, insulation. All that padding around the edges. There's just so much that you can do with that. And it turned out we needed it this time. A lot of times when you sell a put, you don't even need it. A lot of times you sell a put, everything works. Like you wish you had bought the stock. Like that happens a lot of the time, of course. You wish you had loaded up on some leaps or whatever. But again, you don't know what's going to happen. I don't know what's going to happen. Nobody knows what's going to happen. And so because of that, having that room to be wrong can be really, really helpful and powerful. And so for us here, man, we needed it. We needed all of it. Now, we didn't need as much on the second trade from inside the trade, but that's just because the market was in a different state at that time, and we were able to enter that put at a much lower index value. And so now, I think the time has come. Let's go ahead and close both of these guys down. So we close down MNQ. Let's see if we can get a decent fill. And do I see any Adley updates here? Hang on. Do I have an Adley update? I don't think I do. Oh, Wolf Wolf says Johnny Pools 47 says Rushman to the Sox. Yeah, that's not reliable, man. That's not reliable. I like what you've done there. I really, really do. But I need some legitimate news here. I don't see nobody's giving me information. Guys, I need information. I can't look it up on my own because otherwise I'll just be sitting here and that won't be good for anybody. And so let me know. I need info. Is Rushman to the Sox? Has it been confirmed? I need a Jeff Passan tweet. Just screenshot it and put it in the deal, and then I'll know that it's legit. So, all right, so let's go ahead and close. All right, so we're out of M&Q, the first trade. Second trade, let's get out of this guy too. We're not quite at 50% of max profit, but again, I'm super pumped today about these trades. I'm super pumped about, the Orioles catcher deal. I'm like, man, we're about to win the World Series. Like, I thought it was over. Like, I thought this was the worst team to ever be constructed, and now we just swept the Dodgers? Swept the Dodgers? I mean, come on, man. That's crazy stuff. And so, all right, so we're out at 401. Beautiful. So we're out of both M&Q trades. They're over. They're done with. It's like that never happened, other than the fact then we now have a plethora of BEUs that we can now work through for the next, 3 to 5 weeks. And so other than that, we've got, MES, we're actually beyond 50% of max profit here. And so this is going to be a very similar thing with the EMI S&P's up 111 now. And so, are we back to all-time highs? Wow, look at that, man. That's pretty. Oh, this is another one of those things, man. I mean, I understand why it has to be done, but it just feels wrong to me. So if you go back, right? So look at the high. So look at the high on MES, right? And you see that the high was 76.94, almost 7,700. I'm pretty sure that on that actual day, you see I have it resting on the screen, June 2nd. I'm pretty sure on June 2nd, we didn't trade up to 76.94 because we were trading the June contract as the front month at that time. Now, obviously, we're all trading September because June has, since long expired. But 76.94, we never actually got there. But when you roll forward, you kind of have to go back and retroactively backfit the previous contracts when you're looking at a continuous stream on the chart to make all the numbers make sense. And I totally understand why you have to do that from a mathematical retroactive fitting type of way. But I don't love the fact that there's something just a little disingenuous about thinking, wait a minute, I was trading in June. We didn't trade up to almost 7,700. It was 7,650 or 7,660. And so that's why it's I look at a print like this one and I'm like, okay, that's 7,632 or whatever. And by or whatever, I mean, that is the actual price right now. 76.32, it's that's really close to all-time highs. But then you go back and you look at the retrofitting and you see, no, we're still 1% off of all-time highs. And I'm like, are we though? Because we're really kind of not. And so anyway, it's a futures phenomenon, and there's no other solution, I don't think, but it kind of irks me a little bit. And so if you're out there, if you're a grad student out there, I have so many master students that reach out to me and have reached out to me over the years, and PhD students reach out to me and all those things. And people ask me for thesis ideas and dissertation ideas and all that kind of stuff, because I went down that road, and it's a lonely road, man. It's a lonely road. It's a hard road. All your ideas are terrible. All your ideas are garbage. And I'm just saying that because that's basically the way that it works, writ large in all doctoral and even master's programs, where it's no, you got to come up with something that's really solid and really strong. I'm still shocked they let your boy out because it wasn't solid or strong. But if you're thinking of an idea, I would think of a better way to do this. There's got to be a better way to do this. There's got to be a better way to do the continuous contract that somehow allows for the actual prints that we saw from yesteryear to be true to form. But anyway, I digress. And so MES, we're somewhere near all-time highs. We might be close, we might be far. I actually don't really know what to believe anymore. So let's close out of MES, and let's just be done with this guy. So 35.25. Boom, there you go. So there's MES over and done with. It's like it never happened, other than the fact that, I mean, the BEUs are coming in so quickly, I can't even count them. I do kind of feel like, Scrooge McDuck from DuckTales, right? I'm just tossing them in the vault, man. Just tossing all the BEUs in the vault. I mean, Autumn didn't think it was going to be a bonefish month. She didn't think it was going to be bonefish August, but apparently it is. I don't make the rules. So MES over and done with. And then everything else, what else is going on? Let me see here. Hang on, let me check. How many surprises and delights does Laura have for me? I'm going to get surprised and delighted for the surprises and delights. And so I don't know how many she's got. I'm just curious. I got to see what I'm up against. Well, it looks like I have 3. It looks like I have 3 surprises and delights waiting for me in the hopper. And so I will get to those guys in a second. And so awesome. Okay. And then, of course, I will surprise and delight at least one of you on my own accord. But other than that, obviously tomorrow we've got SpaceX earnings. That's going to be their first earnings, I think, right? SPCX. And so we already have a trade on. We have 2 trades on in SpaceX, actually. We have, our strangle on. That's inside of 21 days to go. So I'll look to roll that guy, but I'll just wait and do it tomorrow because I got to give you guys a reason to come back, of course. And then the vertical spread in SpaceX. Yeah, this guy is not looking good. I mean, it's just so funny, man. It's so funny. I know that I've already talked about this before, but it's too funny. It's too funny to not bring up again. Do you guys remember when SpaceX first came out? When I was like 3 weeks ago or whatever, right? SpaceX IPOs and it shoots up through the moon. Like I think it IPO'd like 135 or 150. It was something like that. And it was like 160, 170, 175. I'm not sure how high it got. We could look at it, but it doesn't even matter. I just remember like just reading on the internet, everybody was certain. They were certain, man. We got lockup periods. We got, people who can't short. We got people who can't sell. Like this thing is going to 300. Like this thing is going to 450. Like this thing is 575 by the end of the week minimum. And that was literally the top tick. Like that was literally the worst possible time that you could buy. It's just too funny to me that it's literally the same thing over and over and over again. Like literally. Now, I've said literally like 8 or 9 times, but it really is literally the exact same thing over and over and over again. It happened with oil. It happened with silver. It happened with gold. It happened with SpaceX. What's going to be next? I mean, I don't know. You don't know, but it's going to happen again. I can tell you it's going to happen again 100%. It could be McDonald's. It could be Pepsi. I mean, nobody knows, but it's just the same thing, man. It's the same thing. It's just human emotions, human behaviors. It's just the same thing. It's so funny to me. But anyway, SpaceX earnings, we'll do it tomorrow. Might even do a trade for inside the trade tomorrow morning. I might wait and do SpaceX from theory to practice. You just have to wait and see. You've got to tune into both to find out. And so, all right, let's see. Okay, hold on. I got Fred S. JF5 coming up clutch, saying the MLB network confirms Rushman to the Sox. That's what I like to hear. That is what I like to hear. World Series 2026. I can't believe it. I thought they should be, excommunicated from the league about 11 days ago. And so I'm excited. You're excited. Ash fan Jeff Passan reports Adley to Boston. That's what I like to hear, Ash. This is what I like to hear. These are my people, man. These are my people. And so, all right, let's see. Let's see. Daniel Perkins. Hold on. I see a quick surprise and delight because he even called out the surprise and delight. He put it in abbreviation form as S&D, and I was very confused because everyone knows in the world of finance or economics, right? S&D is supply and demand. But are we making some waves? Like, are we making some change, some lasting change to where now you see S&D just out in the wild? You can't be 100% sure that means supply and demand. Like you can be 80% sure, you can be 90% sure, you can be 95% sure. But man, there's a 5 or 10 delta that could be surprise and delight. Like I'm going to need some context. Like I'm going to need to understand like what's going on with the old situation there. But Daniel Perkins says, Doc, when is Tasty going to add more expirations in the micro futures options? This needs to be addressed. Mike Butler coming up clutch with a Rushman to the Red Sox. There it is, man. I appreciate y'all, man. Man, I appreciate y'all so much. The micro, I mean, don't they have? I mean, if I go to MES, okay, yeah. So you've got basically just weeklies, right? Whereas you go to like ES, like the big dogs, you're going to have intra-week, right? Or daily even with ES, obviously. NQ is going to be similar. I would imagine it's going to be soon, right? Because, I mean, obviously, if it's a sandbox everybody's playing in, we want to make it available to you. We want to make it available to ourselves, right? And so, I mean, if there's an opportunity there, it's not going to be too far behind. And so I would email support at Tasty Trade because, I mean, we listen to you guys. Like, they listen to you guys. And so 100%, I would shoot an email. And so thank you there, Daniel Perkins, with the surprise and delight. Did Laura added a 4th surprise and delight? Man, we gotta cut you off there, Laura, at some point. Okay, so here we go. Surprise and delight number 1 from Laura. This is from Paul D. What's going on, Paulie D? Is this GTL Paulie D? Man, that's some good stuff. What are your thoughts on Palantir tonight? Put credit spreads. Palantir tonight? PLTR. So let's take a look at this. And for the record, Jersey Shore, not exactly a family show, so I wouldn't necessarily recommend it, but I'd also be lying if I said I hadn't seen it before. And so Palantir, it is tonight. Wow, I don't know there, Paulie D. I'm kind of thinking, I think we got to do a little something. I mean, my own personal glow stick supply is getting a little bit low. Maybe yours is too. So it's like, let's get a little something. We got Palantir up a couple bucks, and put credit spread. We're playing it to the upside. Big brother Palantir. 124, 120, 124, 119. Yeah, that's actually not too bad. I mean, you could do a 122. Yeah, I'll tell you what, Paulie D, I kind of like it, man. I like it. So I'm thinking 122, 117, and it's a short put spread. And so that is good. Of course, we've got our risk is defined. It's a defined risk strategy, which is the same thing as saying your risk is defined. 122. But if you're brand new, I mean, the repetition, I truly believe, especially after having spent so many years in the classroom, that repetition really is the key to mastery, which works out well for me because I've been saying the same 6 things for over 10 years now. Right? I mean, there's only so many ways you can describe a short put. I mean, we've essentially exhausted all of them, but there's only so many ways. But when you're just learning, though, I mean, the repetition is welcome. Like the repetition and the over and the over and the over again is definitely a positive thing. But I kind of think, Paulie D, I think I like it, man. We're risking 3 to make 2. My pop is 60%. My P50 is only 30%. That's where sometimes the P50s are weird around earnings because I don't think that's right. I would imagine it's maybe around the pop. I mean, it's kind of, maybe it's trying to reconcile the binary nature of, the earnings event. And so P50, this is either going to work or it's not going to work, which is kind of a silly thing to say because that's always true, of course. But this is not like a 45 to 21 type of trade or like a 30 to 14 type of trade. This is like, hey, we're taking our shot tonight. If it works, it works. If it doesn't, it doesn't. And so I kind of like it there, Paulie D. I kind of like it a lot. So let's go ahead and let's try it for $2. All right, we got filled immediately for $2 there on the Paulie D Palantir trade. Man, there we go. Okay, so thank you there, Paulie D. I appreciate you very, very much. Surprise and delight number 2. Man, what's going on? Point B. Can you advise? Well, I can't give you any advice because I'm not a professional. I'm just a random guy on the internet. But I can offer up some things we can wax poetic on. Sure. Can you not advise on how to manage the calendar spread post earnings? I have UNH August 21, September 18, long at 500. I can take a look at it. Sure. UNH. Okay. Yeah. I mean, the stock is down to 415. So this is, when you miss the mark so badly on a calendar spread, I mean, you have puts, right? You didn't say. It doesn't really matter, but so generally speaking, when it comes to calendar spreads, when things go awry, like your situation here, awry just means it's really far away from where you need it to be. The thing that I come back to with a calendar spread is there is a lot of things that you could potentially do because you have the multiple expiration cycles. But I personally, and I'm sure other traders do, of course, have this, but I don't have the command of the subtleties and the nuances of a calendar spread to the point where I can kind of start getting super creative and super innovative with the adjustments of that strategy to try to turn what's likely going to be a maximum loser into something other than a maximum loser without potentially putting myself in a spot where I have no idea what's going on. Without potentially putting myself in a spot where it's like, man, how did I even end up in this position? We've all been there. I know a lot of you have been there. I've been there myself. We've all been there. And so I try to avoid being in that type of spot just as kind of like a daily goal, generally speaking. And so when it comes to calendar spreads, if I miss the mark wildly there at point B, I just shut it down. So whatever you paid for the calendar spread, $5, $7, whatever it is, you're probably going to lose your $5 or your $7. And I would just be done with it. And so now, I mean, you're August 21, September 18. I mean, right now you're going to have, a lot of your options are in the money. I mean, one thing you could do if you want to keep it, you know, if you want to keep it on until September, you can just take your August, where you have a 500. Yeah, you have a 500 strike. You could just buy back your 500 put. This is probably, actually, this is not even going to be worth it. I was going to say you could buy back your 500 put in August and then sell it out in September and pick up a little bit of that extrinsic value differential, which the spreads are so wide, it's not even going to be worth it. And so this is where I would probably just be like, just shut it down. Just shut it down. You know, it missed, it didn't work. And I would leave the creativity and the innovation for undefined risk positions, in my opinion. And so, yeah, those are my thoughts on the on your calendar spread situation. Boulette's in the house. What's going on there, Boulette's? Doc, what's the earnings play for Wolf tomorrow? Not Wolf. Also not Wolf, but Wolf. So we've got Wolf tonight. Oh, you said it was tomorrow? Hold on, let me look. It's Wolf, right? Not Wolf. So if I look at Wolf. Okay, so Wolf is tomorrow. Wolf is another time. So Wolf is tomorrow. But if you look at Wolf, that's actually the next day. So there's no way they didn't plan this. There's no way they didn't plan this, right? Because tomorrow night, you're going to be able to trade Wolf earnings. And then Wednesday morning, you're going to wake up and you're going to tell your friends, I'm going to trade Wolf earnings today. And they're going to say, you already traded Wolf earnings. Like, no, I'm trading Wolf earnings, not Wolf earnings. Wolf is tonight. We had Wolf last night. And so there's no way they didn't plan this, man. There's just no way. There's absolutely unequivocally no way. It's too funny. It's just too funny. So anyway, we'll talk about Wolf tomorrow, and then we'll talk about Wolf the next day. And so, I mean, I couldn't write a better script. There's no way. It's too funny. And then lastly, what is the advantage of selling options on futures versus an index? Okay, so MNQ versus QQQ. Okay, so yeah, you're talking about futures options, MNQ versus equity options like QQQ or NDX if you want to go with the big ones, whatever. And so basically it comes down to buying power. And so generally speaking with MNQ, with the futures options, the buying power is going to be even more favorable. And I think they're taxed differently. There might be some preferential tax treatment on those guys too. But I let the pros deal with that stuff, man. I'm just a poor trader in the pits, man. I let all the true experts deal with the tax implications of various things. I should probably be better at that than I actually am, but you got to, you can't trade the market that you want. You have to trade the market that you have. And so MNQ, like if I want to sell a put in MNQ, like I'll show you here really quick there. This is from Zerlich. What's going on there, Zerlich? If I go to 45 days out, September 18th, and I sell like a 40 delta, you're going to see here really quick, my buying power is $2,800. So that's really favorable, right? And that's the beta weighted delta on an MNQ short put is about, let's say 85 or 90. If I go to QQQ and I go to the September cycle and I go to sell a 40 delta put, it's going to be a lot more than that. So now it's about $12,000. So you're going to see it's about 4x the size, or almost 4.5x the size. And so generally speaking, when it comes to index exposure, I love the futures options if you have a modest account size, which, I mean, for this context, it can be anything that's like 50,000 or less, right? Because I mean, if you're going to sell a put in QQQ at 12 grand, I mean, you need 6 figures minimum to be able to do that the right way. In my opinion, at least. I mean, you have to make up your own mind and blaze your own trail, but I would say 125,000 minimum. 150, 175 would be a lot better to do something in the QQQ. But MNQ, you basically get the same exposure. There's a little bit differentials because, I mean, QQQs is kind of a spot price, a current price. Futures price is obviously a futures price by definition. And so there is going to be some slight variation between the two. And there's liquidity differentials. I mean, MNQ is not nearly as liquid as QQQ. So that's not completely insignificant. Like, it's something that will add up over time to something that may cost you a BEU or two over the course of, a quarter or half a year or whatever. And so that's the biggest difference, though. It's the same exposure, essentially, same product, same overall broad market-based, kind of bias or what have you. But you just get a lot of buying power savings with the futures options. And so hopefully that helps a little bit. But let me go back to the beginning. Man, all the way back to the beginning. Wow. Show's almost over. That's crazy. Man, wow. And look at Laura is in the chat, pumping the algo. Man, I love it. I absolutely love it. All right, let's go back. Let's go back to the beginning. Ashvin is in the house. I see Sam L in the house. The amuse bouche before Dr. J. Man, I appreciate you, my friend. Ashvin is here. What is up? Wolf is here. What is up? Sam L. Palantir earnings tonight. Be careful what you say. Palantir probably already knows whether we're buying their dip before we do. That's true. That's true. We're playing to the upside. Again, this was a Pauly D special, I think. So thank you there, Pauly D. And then Sam L. goes on to say, Doc, I can't believe that Miss Autumn used to be a smoker. I know. Besides Banana Natty, what was Rebel Doc like back in the day? Yeah, we'll leave that for another time, maybe. We'll leave that for another time, maybe even a completely different venue. But oh yeah, I tweeted about this over the weekend. Oh my gosh, it was just so funny. So just in case you don't follow me on Twitter, which you should, of course, it's a crime if you don't. Right, I am at JSchultzF3. But Sunday morning, I'm sitting on the back patio with my wife Autumn, and the kids aren't awake yet. It's like 7 or 7:30 in the morning. We got up early to have coffee and just kind of hang out, which is very rare to do with 3 small kids, right? So we have to really be creative with our time. And so we get up early a lot of times on the weekends to just hang out. So we're talking, and she's on her phone filling out some paperwork for a doctor's appointment that she's going to after the show, actually. And so she's filling out her paperwork, and she's like, hey, what year did we meet? And I said, she said, we met in 2006, right? I said, yeah, right. I said, why do you ask? She said, I'm filling out this paperwork for my doctor's appointment on Monday. I need to remember when I quit smoking. When I quit smoking. I was sitting there and I was like, excuse me? I was like, what now? Which, I mean, if you smoke, it's fine. It's all good. But I'm like, this is new information to me. Like, 17 years, man. Wow. I'll tell you what, this is why you trade with a stop loss, people. This is why it is dangerous stuff to be out there with no stops, right? Because, man, had I had a stop in place, we could have been having a very, very different discussion. But yeah, pretty crazy stuff, man. BBB, fine. Let's go, Dr. Jim. TP didn't pay his internet bill, so you are up. Yes, I am, my friend. I saw that at the very end. I've been there many, many times. It's not fun. You know, technology is a wonderful thing when it works, and when it doesn't, it's not so wonderful. And so let's see. Orgenu, hello, Dr. Jim. I think there are a lot of BEUs in the portfolio. Bang, bang, shrimps all around. I agree, my friend. I agree. I mean, I'm allergic to shellfish, so I'm going to let y'all enjoy that, but I'll live vicariously through y'all. Samuel, Doc, check out our Novartis position. Yeah, look at this Novartis, man. We're back. It looks like it's finally time to free up some buying power. Yeah, we almost got a BEU out of this guy, and so I'm going to sit tight for now. Let's try to get a little bit more than that. But yeah, Novartis, we've got our 100 shares, and that is that. So we'll sit tight, and we'll do nothing for that guy. Point B, happy Monday, happy trading Monday, Doc. I couldn't understand much of your trading lab write-up, which is my fun little project that you can sign up for also on my Twitter. And my AI Claude gave up trying to summarize. Yeah, that's kind of funny. I gotta be honest. Let's see, Hawk Roku Dezu. Here comes that 90-minute to close unwind. You might be right. I mean, there could be a little squeeze action going into the close. Maybe some shorts got caught. You get some shorts that got caught, selling them into the hole, and now all of a sudden it's a pretty painful unwind. That's why I really, really, really do not like selling them in the hole. Man, that's a tough trade to make. I mean, there's a lot of tough trades to make, but if you're gonna trade them short, in my opinion, it's a much easier trade. Nothing is an easy trade, of course. So this is a bit of a misnomer, but it's a much easier trade to sell them on the way up and sell highs than sell them in the hole. Selling them in the hole, like you're just asking for just your eyeballs to get melted off your face. Like you're just asking for it. Now, if you sell highs, you're still going to get peppered by a lot of green days and green sprays, day after day. Like you're going to get crushed either way. But at least selling the highs, at least you can pretend like you got a chance. At least you can leg it out for a couple of days. But when you sell them in the hole and, you get that one tweet out of the administration, it's over, man. It is OV. Griffin Jones, crowd closing yours. Crowd. Look at that. Griffin Jones. Thank you, my friend. I didn't even see it. There's so many things happening in here that I can't even keep up. And so crowd strike, I think so. And so we close this position at about $1.05 debit. Yeah, sure. I think so. $1.05 debit. That looks like $1.07. No takers there. Let's try maybe $1.09. All right, these cross strike pits there, Griffin Jones. I don't know, man. They don't look that bad. That's what's crazy. Like if you look at the actual markets, I mean, they're not amazing. Don't get me wrong. These don't belong in a textbook. or a museum or anything like that, but they're still not that bad. Like, I'm really surprised we're not getting filled around the mid price here. I'll try 111, but I'm not going higher than that. There's no reason to. All right, we got filled at 111. Okay, so we're out of CrowdStrike. Good trade there, my friend. I appreciate you. Luminous bid is in the house. Core position and assemble. That's correct. Rank and file. Point B. Point B. There's the calendar spread question. We got back to one of the surprises and delights, and so that's always good. Ryan LP is here. What is up, my friend? Live from Vienna. Maybe we should give TP a satellite dish from SpaceX. That might work. Point B. Welcome back to Laura. Yes, welcome back to Laura. I hope she had a great vacation. Sergio is here. What is up there, my friend? Sam L. Doc, the algo doesn't fade stocks anymore. It just waits for your bloop analysis, takes notes, and says challenge accepted. That's correct. Send location. Right? That's what the algo is saying when I put my trades on, and it's getting ready to fire up its own portfolio. Joel James in the house. What's going on there, Joel James? I did see your email come through. I owe you a response, and I appreciate you, my friend. Thank you so very much. I hope you enjoy your time away there. Let's see. Hachi Roku Desu in the house. What's going on there, Doc? What is going on there, my friend? Point B is here. Rhett's Apple stinks. Yeah, maybe a little bit. We did a little Apple trade this morning for Inside the Trade, and so we'll see how that guy pans out. Ranch in the house. What is up? Joel James, Meta worked. I followed you on that one, which is always risky, but you have been hot lately, so I imagine this week will be a train wreck. That's correct, right? There's some Dr. J mean reversion coming your way. It is coming to a market near you. It is coming to a From Theory to Practice episode near you. And so stay tuned, starting with SpaceX tomorrow. And so MP5850, what is going on there, my friend? I appreciate you, my friend. Sam L is here. Shout out to our favorite moderator team, keeping the chat under control while the Doc, the Open P&L bros, and the Algo all compete for attention. Yes, they all are competing. There's no question about that. And the Algo will win. The Algo will 100% win. There's Paulie D, surprise and delight. We made it back. There's Shawshank Redemption. Dr. J, time to close the EEM strangle and head over to Bonefish on a Monday. I think they're closed on Mondays. Just from kind of a short stabbing situation. If we go to, yeah, look, I mean, we got another winner. That's crazy. I totally forgot about this one too. And so 206, 72 cents. And man, I like it. I like it a lot. And so, I mean, we're almost done with the show. I'd like to get to a few more comments. And so I think we're good, right? Nothing more to really say about this. We got beyond 50% of max profit, which is good. And we sold this guy for 206. It's marking for 72 cents. I'm no Jacob Perlman. I'm no Julia Spina. I'm not even an Anton Kulikov for my OGs that might be watching the show. But I think that this might be a little bit more than 50% of max profit. And so I think we can go ahead and take it off. I think we can be done with this guy. And I mean, I can see if Bonefish is open, but like I said, Mondays, I don't think so, man. They struggle to stay open on the weekends. And so let's go ahead and let's buy let's buy this guy back. 77 cents, maybe. Man, what is going on with these markets? I feel like the mid price is not even, it's like not even in like an indication of what the market is these days. 79 cents. Okay, there we go. Okay, let's see here. And then we've got let's see. Oh, Boulettes. Oh, yeah. Wolf and Wolf. That's too funny, man. It's too funny. And so CA Paris is here, only a rumor so far. Hachi Roku Desu, still a rumor. Oh, about the Rushman thing. Thank you guys. I appreciate that. Just to sell tickets, that's probably right. Daniel Perkins, if NQ could chill a bit, I'd be grateful. I'm sure you're not alone. And so, I mean, markets moving, things change, man. Markets moving, things change. N1C is here. What is going on? Griffin Jones, be inclined to sell premium when volatility is high. Be inclined to buy it back when the VIX is low. That really is it, man. Like, that really is it. And so, and it can feel hard to do a lot of the time because when volatility is up, like, it can feel like you're stepping in front of a train. Like, it can feel like you're stepping right onto the tracks. And it's like, man, what am I doing? But again, using the empirics, using kind of the, the volatility, the mean reverting volatility baseline, I think can just be such a powerful, powerful thing that, I mean, I like it, man. I really, really like it. N1C domain name system for the win. That is correct. Sam L, I guess VIX HQ is officially on vacation. I don't think so, man, because VIX HQ has been tweeting back and forth with me like for the last week or two. And so, I mean, VIX HQ, it's all over Twitter now. And so I'm like friends. I'm besties with VIX HQ. So I got the inside scoop. I will let you guys know. Ash Finn is here for the algo. N1C is here for the DNS. Yeah, there's Wolf Johnny Post 47 says Rushman to the Sox. And so Griffin Jones, the DNS, don't care if they laugh. I mean, that's how you got to play it, right? I mean, we said it earlier. It's like they laugh, they mock, they jeer, but it's like, man, I mean, doing nothing is such a powerful setting. It is such a powerful setting. Small enough on entry to where you can do nothing if you want to. Man, that is an amazing combination. Like, that is an incredible combo pack of greatness that is really, really difficult to match. And so I see East Coast Enduro is here, taking short options off before earnings tomorrow. I mean, I like it, just generally speaking. If you have a position on, it's going into earnings, and you don't want to deal with the binary risk, I mean, I think taking the trade-off can make a ton of sense. If it's defined risk, it's not nearly as much kind of on the line. But if you have an undefined risk trade or undefined risk position that you want to take off going into earnings, that can make a ton of sense. And so yeah. But Laura just gave me the cut over to the full screen. That appears to be my time, and so I guess I have to go. But I appreciate you guys so very much. If I can ever help you guys in any way, please shoot me an email. I am jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with Trading the Charts. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Investopedia says we're the best for options trading. Stockbrokers.com says we're #1. And Broker Chooser raves about us too. So what else can we say other than trade like a trader? Tasty Trade.
Hello everybody, Tim Knight. It is a new month and it is a very bleak day for any bears out there. And I've got to tell you, looking at the charts, things have not looked this bad for the bears in months. Things have changed today. It's not all completely bad news, but it's mostly bad news. The thing that kind of saved me today is that I came into the day light. I believe I mentioned on Friday that I was deliberately lightening up. Things are looking a little bit fishy, and we've all become acquainted with the taco phenomena that happened again. And so I came into the day quite light, like at 45% or something. I've continued to trim that down, maybe 35% exposure now. There is still some hope in the tech world for a reversal. But as we're going to see in a moment, things are looking a little scary if there's one or two surviving bears out there. So let's dive in and let me talk to the charts instead of just to the air. Here is the diamond. We are not at lifetime highs, but boy, are we close. It's looking like a lifetime high close is on the way. On an intraday basis, we haven't quite bested the peak we saw back here on July 7, I guess that was. But yeah, the diamonds continue to push higher. If we do push to lifetime highs, the last little zone of resistance would be the underbelly of that trend line, which is a ways away. You know, we could easily lift up many hundreds more points before we tap that. But that's where things are configured right now. I mean, for myself, I don't have any, nor did I enter the day with any big ETF positions. The spider, and this is the scary one. The spider is still range bound, but it is getting close to the top of its range. This is a big green bar we're dealing with here. We are up about 1.5% on the SPY. And if we're close to a lifetime high close, we may well push a lifetime high close, but it's this rectangle that I'm focused on. If we can push above that, that's going to really give the bulls some gasoline to fly things higher, because a couple of reasons. One, lifetime highs tend to beget new lifetime highs. And secondly, all that pent up energy from all of May and all of June and all of July will get released in that excitement. So that it could happen tomorrow. Probably won't happen before we're closed today, but it could absolutely happen tomorrow. Why might it happen? Well, if we're just going to speculate, you know, time and again we've been through this. We're talking about peace with Iran thing, and it's, you know, 3 days later the bombs start dropping again. But what if this time the entire retinue of Iranians delegation comes forward on TV with the president said he's right, it's a done deal? Well, something like that would do the trick. I think it's vanishingly unlikely something like that would happen, but just throwing an idea out there of what could make it happen. There are a smattering of interesting earnings coming out that may also compel things a little higher. These aren't huge names, but like Palantir, AMD, Caterpillar, these are all coming out in the next day or two. But yeah, this is, things looked fantastic on Wednesday's close, looking a little iffy on Thursday, worse on Friday, today just plain bad. So it's a shame. Things are really cooking at the end of Wednesday, but we got a V-turn right there. Now, crude oil. Now, this is an interesting one. Crude oil is down, obviously. And one might think that, wow, cheap gas is coming. I don't think so. This actually may look like a buying opportunity because first of all, we're in this right triangle pattern. We've pushed above it briefly here and that got repelled. But as I mentioned this morning, we seem to be finding some support around about 77 or so. And let's just say that things get ugly with Iran again. I could easily see this flying above the highs we saw last week and turning this into a really bullish setup. It's gotten beaten down on Friday before the latest taco and then today, but we're not collapsing. It's actually a little different than it's been for the past couple of weeks, which is sort of extraordinary because you would think this is really big news, which is going on. But it's we're trading now where we were trading just a few days ago, before taco time. So just saying, you can also see this illustrated by way of XLE, which is a big energy ETF. This is certainly not a bearish setup, and it may well be getting ready to spring above that briefly broken trend line. It's definitely testing it, pushed above it here, it's pushing above it here. Energy could be in for a new bull run if things really fall apart. But as it is now, yet again, they are talking for all the good talking's done. I've lost track of how many months this war's been going on, but there we have it. South Korea, EWI, is relatively stable compared to what it did in July. We've all heard about Leopold Aschenbrenner's blow up in his fund, 67% wipeout. The narrative going around seems to be that, well, that's cleared things out. Now we can really start pushing higher. I don't know. I mean, having one fund blow up doesn't seem like an amazing sign to me, but it did get bought pretty much for all its public assets. And the South Korea semiconductor memory chip wipeout was, of course, the driving force of that, because it was very heavily margined in the fund. But we are up on this as well, about the same as the cubes, really. And the topping pattern is still in place, but we'll see if that line holds or not. My kind of main options position now, as I've been mentioning, continues to be China. I'm relieved that this isn't springing higher. It's actually down a little bit, but this is a longer term trade. These are March 2027 puts at $37. So the wiggles and waggles of the past few hours, I don't care. I'm looking for a nice reversal lower. As we look at the entirety of this data set, it's not the cleanest pattern in the world. It's more of a, looks like a seismograph like this. There's no real clear pattern, but there is a dividing line, it seems to me, which suggests at these levels resistance. And it had an exceptionally strong July. And I would really appreciate it if we would weaken in the weeks and the months forward. So FXI, for the moment, is down a bit. Let's go back to the 1 year chart on that, just so it doesn't take so long to load. The cubes are, okay, so let me just, I've painted like a big scary, oh, all the bears are going to die, picture here. Let me put an asterisk next to that. Tech stocks still have a fighting chance of reversing away. Why is that? Because they have way more, they're not near lifetime highs at all. The NQ, even after these past several days, it's thousands of points below its high. It has a tremendous amount of overhead supply. And so looking at the cubes here, there's plenty of bearish perspective. You're below a broken symmetric triangle. You are approaching but have not violated a price gap. So yeah, all is not lost. And this morning, when, for a while there, I was having a very profitable day, even though we've been super green all day because semiconductors are really weak. That reversed. As you can see, we did get strength in the cube. So I was ready to have a really defiant day here because in spite of the market rallying, my shorts are doing just dandy. They stopped being dandy. So we are up on the cubes now, almost 2%, but we are approaching that gap, and that gap is worth watching. But as a good example of why I'm relieved to have covered some stuff, Meta is a great example. You remember last week Meta reported. I was short up here, and it worked its way down. They had earnings, and it just plunged down here. I covered at the open, way down here. It rallied on Thursday. It rallied on Friday, and boy, is it rallying today. It may start to tire of this because now we're into this thicket of trading. But if it just keeps stomping ahead, I'm watching that. The closer you get to that resistance, the more that price gap, the more interesting it becomes to re-enter the position. But unfortunately, in this trendless market, you got to be nimble, and part of that nimbleness, for example, was getting the devil out of that meta short, down here when it was way, way, way below where it is right now. But I will be cheerfully get back into it at the right price. SMH, as I said, was providing me some comfort today. It's up, but it's up about half as much as the cubes in general. So it's relatively weak. The topping pattern is still very much in place, and it would take a violation of Friday's high to call that into question. So not all hope is lost. I still have my SMH puts. But we'll see how that all turns out. The past few hours have not been great for semi-bears. But like I said, not only did I come into the daylight, but I lightened up along the way. Not getting aggressive in this murky environment of ours because, some individual positions, which I have no position in. But for example, AXT, which was a favorite of short of mine when it was like getting this business going on, this is up almost 16% right now. The hyperscalers, CoreWeave, here we have about a 20% rise today. Here we have Nebius, competitor of theirs, up over 15% and completely negating this topping pattern. So a lot of ugliness going on for any hyperscaler bears out there. I did say that there's a smattering of earnings. The one I think that'll try far and away the most attention this week is SpaceX. And that's going to be tomorrow after the close. SpaceX, incredibly, had another lifetime low today on an intraday basis. I mean, even on a day like this, it can't manage to, not do that. But at the moment, it's up a little, about the same as it's not even up as much as the spiders. So I guess it's up because everything else is up, so it can't help itself. But Wednesday will be the tell. After the earnings are done, after people have digested the conference call, Wednesday should be very interesting. I said it before, I'll say it again. I want this stock to thrive and go up, but it's probably going to fall. And I fully expect this thing to be in the double digits on Wednesday, as much as I don't want that to happen. So it has been a stinker of a stock for almost its entire lifetime. We're down, 55, 56%? I've lost track. It's worth well less than half of what it was, but that is coming in about 25 hours. All eyes will be on SpaceX. It could turn out like this, though. I mean, this is Cerberus. This IPO'd not that long ago, and it's stabilizing. And it's got a 10% gain today, and as you can see, it's kind of bottomed out. It's got a subtle series of higher lows, and it seems to be, kind of finding a base here. So could happen. That'd be nice. Over in Michael Saylor land, he sold billions more of Bitcoin, and that seems to be not hurting him at the moment. STRC, their big dividend, big yield way to draw cash in for strategy, that is up. And MSTR itself is also up, roughly as much as Bitcoin, which is no surprise. But generally speaking, over the past month, it's really gone nowhere fast. It's still kind of hanging out there. But Bitcoin itself, it was really the only market to watch this weekend in terms of any kind of indication of what the market thought of this Iran thing. At the moment, IBIT is up a little. But on the whole, it's been a pretty dull run for crypto for about the past month or so. Just really nothing to drive it up or down substantially. So this evening, here's Palantir, PLTR. No strong feelings about this. It's one could make a pretty good argument for a topping pattern here, but this is a very robust creature. We've had this and this and this and this. There are definitely robust rallies along the way to fight back. I was short. I covered earlier today for a tiny profit. I just don't want the risk. I'm a little too shell-shocked right now to just hang on to this one. But that's going to be the big one this evening. Tomorrow morning, there's Caterpillar CAT. Still a nice setup here. I've reduced my risk in this one in as much as I sold my put position for a good profit, and I just have a simple, plain old boring short on it right now. Not particularly big either. So we'll see how that goes, but that'll be tomorrow before the opening bell. But just to close out with the NQ, we continue to push higher here. This was an enormous rally, not so much today, but still positive. The next meaningful level of resistance is this blue line up here. But as I said, we've got a nice blob of overhead supply to slow things down. So I think, simply stated, the bears out there, you've got a much better chance with the cubes and those components than you do with the spiders and the diamonds. All right, good luck, everybody. I'll see you tomorrow. Take care. Bye-bye.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. visualize potential profit and loss with risk analysis tools, and place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call.
We are back. You're watching Tasty Live. This is the final 30 minutes of the trading day. I'm Chris Vecchio. He's Tom Preston. TP, you're watching Last Call. Tom, how are you?
Not well, Chris.
No?
No, I'm coming down with, short delta fever here. So I'm getting crushed in my iron condors in the SPX today. It happens. I get it. I can take the loss fine. It stinks. But you know what? I'm going to be back at it tomorrow. I skated by with some small winners last week. And actually, some okay winners. I'll take that back. And today, I'm just paying the piper. This rally is unbelievable. I need about a $25 sell off from here.
$25 sell off.
Yeah, I need $25 lower, which we could get. I mean, they're up $118 right now, the SPX. The killing the VIX. My poor little put spreads in the VIX are crying. It's like the market is twisting my little put spreads elbows behind their backs. What's interesting though, Chris, is the decent volume now in the ES again. 1.14 million contracts traded in ES. Volume, again, you and I have talked about this before over the past month or so, the pitiful volume in ES. Maybe August is going to start picking up a little bit.
Maybe. I mean, current volumes today across the board are pretty light. I was doing my scan today to look for some opportunities, maybe some dip buying opportunities in this market. I have some maybe some earnings, for example. Novo Nordisk is coming up August 5th, this Thursday. Volatility here is only a 30.8 IVR, but IVX, the raw volatility here in the right-hand column, TP, it's still in the 50s. So just poking around here, 43.44, 50.51, 36 cents a credit, the expected move for the week. That's more than a third of the width of the strike.
The markets are pretty tight. When do they come out? They come out when?
Thursday.
Or Wednesday.
Or no, is it Wednesday? Did I have that date wrong?
Yeah, August 5th is Wednesday.
Oh, well, so, what do I know?
But no, that's all right. Hey, it's another day, Chris. One day is as good as another.
It's still this week.
The markets in NVO are pretty tight. I didn't look at them today because I was mostly focused on Palantir. I would look at maybe Novo Nordisk tomorrow as we actually go into the number the next day. I want to see if it's before the open or after the close, whatever it is there. Palantir, I'll tell you what I did in Palantir.
Let's hop there.
I sold the 14-16 put spread for 60 cents with 4 days to go. So we're going to see. I did really poorly last week in the earnings calls. Got killed on a short call spread in Microsoft, killed on a short put spread in Amazon. Hey, these things happen. I get it. I'm going back to the well, sold a put spread in Palantir. I've been bullish in Palantir a bunch of times, have lost pretty consistently in Palantir. Palantir is one of my worst performing symbols in the for the year. But Chris, there's nothing like spite. Nothing like trading from spite. Like, you people taking my money away in Palantir, I'm going to get some back. So I sold a 2-point put spread in Palantir. That's as much risk as I'm going to take. What else did I do? Working an iron condor in ON. I'm not filled on that. That's coming out this afternoon too. I'm going to adjust that down just to play. I'm selling let me see if I can find it. There it is. The 93.90, the 70.72, 93.95. I was at 69 cents. Their mid price is 64. Let me see if I can get in there. The markets are kind of wide. They're kind of wide. Not horrible, but they're kind of wide. I'm going to take this down to, let's do 60. Let's do 66. See if somebody wants to play. I'll take out 3 cents on that.
You know, you mentioned on it being a semiconductor, and one of these names that's had a nice little jump here. Actually, Gus and I were talking about this. Like so much of the semiconductor space, it has had a bit of a come down from its highs that we've had in recent weeks and months. But the underlying fundamentals of so many of these businesses just haven't changed. It's a lot of doubt, a lot of FUD, fear, uncertainty, and doubt over the cyclicality of the semiconductor cycle, which, you know, granted, what idiots were out there in May saying maybe the semiconductor cycle is done? Oh, wait, that was May. So let's just say it's not. Let's just say it's not. Let's just say it's not done, and this is all about leverage and nonsense of the system, and this company is going to have good numbers. I don't want to just be, short a put spread. I want the Super Bowl. I also want to reach for a little bit of a call spread here too, TP.
Yeah, I mean that's fine. That's fine. If you want the extra deltas, that's fine. You sell the put spread, buy the call spread, fine. Or you could just sell 2 put spreads or buy 2 call spreads. I mean, it depends on what you want to do. Either way, they have decent probabilities of making money. One of the things I saw later this afternoon, I was looking at some news, is the rally in nuclear energy stocks as money is flowing into those from the big AI companies that need energy, need electricity. And so I have a little watch list I created. I call it the creatively named nuclear watch list. So they're all up. So Lightbridge, SMR, Nanonuclear, Oklo, Centrus. What's UUUU, Energy something or other, EUC, NXE, NextGen, GE Vernova. You and I have talked about GE before. Cameco. I closed a short put spread today in CCJ. They're all up. The biggest winners today are NNE, which is nanonuclear, up 9.96%. SMR up 7.6. Oklo up 7.11. And of those, SMR has decent liquidity. NXE has decent liquidity. I know CCJ does. I trade CCJ. So I don't know. Is it too late to buy these things?
No. I don't think so.
Yeah.
I mean, these are really... TP, can I just give a little candlestick there?
Please do.
You got that low through April. Move below Friday's low, closing above today's high. Bullish piercing candle, bullish engulfing, right? We fully engulf the prior day's candle. Usually a bullish continuation sign. We're doing that today to get us above the 1 week and the 1 month and getting through a former pivot low here. You have piqued my interest, sir. You have really piqued my interest.
Chris, that's my job. That's my job. Job description for Tom Preston, pique Chris Vecchio's interest.
That is part of it.
I'm happy to do it. And what I want to do, if you want to talk about SMR, and just looking at the options, and of course, Chris, at $9 a share. If you said, TP, I just want to buy 100 shares, okay, fine.
Right.
It's because the problem is, and as I've said before, the linear relationship between the stock price and the option prices, it means that a $9 stock price really, even with a very high implied volatility, the options are relatively cheap. I'm going to go in, and I know it's inside the expected move, but I'm going to sell the 8.5 put with 4 days. The skew is pointed towards the upside. If I take that,
tight markets.
Yeah, 32, 35. I'm going to get filled at 33. I'm going to sell at 33. And these come out at some point in the next couple of days. So unlike in Novo Nordisk, I'm going to get in on SMR, submit, filled at 33. Now they're 33, bid at 35. So you could probably get it at 34. To diversify, what's Oklo?
I mean, on TP, SMR is you can buy the $10 call expiring in 4 days for 28 cents.
Yeah, but I don't do that sort of thing. Yeah, if you get a massive rally, it's Well, let's put it this way. Here's the way you evaluate that, Chris. If you look at SMR, so this is the old market maker trick. So the stock's at $9. If I buy that 10 call for let's say 28 cents, if the stock rallies $2 from 9 to 11, that 10 call is going to look like the 7 calls do now. So they're offered at 221. Right. So you say, okay, I'm going to go from $28 to 28 cents to 221. Great. That's a, $200 profit. So that's what you're betting on. If it goes up $2, and yeah, you can hit a home run. Personally, I like my little short put. I just get the probabilities on my side. I get theta on my side. If nothing happens, Chris, I'm going to make a couple of bucks. If nothing happens on the long call, you're going to lose. Those things aren't going to be worthless. After earnings, you might be able to get out of them for 15 cents or something like that if the market just sits here. But I like the short put in this case.
I hear you, TP. It's a very small stock, but there's some encouraging things. And you say going out there when you're looking at a $10 stock, difference in owning the shares outright, might as well buy 100 shares yourself.
The other thing too, Chris, look at the open interest on those on the call side. It's huge. It is huge for SMR. 2,600 calls, 5,049 on the 9 calls, 3,087 on the 3,800 on the 10 calls, 2,400 on the 10.5 puts, much higher than on the put side. So if there's any pinning or any gamma risk, that looks like it would be on the upside.
Right, particularly at that $11 strike. You have what's the volume today? 13.8 thousand. Some downside volume, but yeah, most of it is on the upside here today, TP. All right. Well, I mean, there's probably one more stock that catches people's attention. I saw it in the message boards earlier. Message boards, is that what we call Reddit? Snapchat. They have earnings here today. This is a deeply liquid stock, right? 49 million shares have traded today, TP. It has its earnings here after hours today. It's a $5 stock, though, right? And it's curious that we went to SMR as a small price stock because I intend to go into Snap last and asking you, how do you place trades? You're going 50 cents wide on a stock where you get 50 cents. That's a 10% decline. So what do you do here in a name like this that are so low?
I mean, I would just buy the stock. I would just buy the stock. This is, at $5, the stock is an option. Okay. I don't know what the percentage is, Chris, but I don't know how many SPX options are worth more than the actual price of Snap is right now. In other words, there were, $100 options in the SPX. Snap, yeah, maybe just buy the shares. I mean, you could sell the 4.5 puts you'd get 16 cents for it. I don't know. I mean, yeah, great. You'd get 16 cents for $234 of buying power. It's not bad, but I don't know. I think there's too much risk. With 193% overall volatility, there's too much risk in Snap. You're just not getting rewarded selling premium in here. I just don't see it.
No, you're not. I mean, it's one of these. Usually when we talk about tickers on here, like that sweet spot's kind of like $200. It feels like $100 to $200. When you get into the SanDisk territory, when it's trading at $2,400 or ASML right now, it's a little bit heavy. When you go on the other end, you get Snap, right? You're looking at SMR. You're right. It's a little much.
So yeah,
or not enough.
Yeah, and so you take your pick. That's why trading. This is Chris. This is the work of trading. Right, this is what you do. This is what I do all day long. Snap. Let's take a look at Snap. And now you and I can talk about it, but really, it takes us about 10 seconds to decide whether or not we trade Snap or not, or at least Snap options. You may want to do some analysis or whatever, and that's awesome. Whatever bullish or bearish bias you get to with Snap. But as far as trading it, I just don't see the premium. I just don't see it. One of the things, you're looking at the ES, Chris, is
I feeling very lucky looking at ES because I now have a position that after, I know I've been complaining about this a lot, but top ticked at July 6th, got in at 7,600.75. I've spent a month in hell being long. Today we're making money.
Well, see, that's just it. And if you give trades a little time. So right now, of the S&P 500, and I took a snapshot of this about 20 minutes ago, 333 of the 500 stocks were up today, just up. Not talking about how much, they were just simple up. In the NASDAQ, 69% were up. So roughly the same percentage. So about 66% of the stocks in the S&P, 69% of the stocks in the NASDAQ 100. It's a fairly broad-based rally. I don't think I'm going to get my sell-off at the close. Maybe. I don't know. But right now in the NASDAQ, well, let's look at the S&Ps. Where's my screenshot of the S&Ps? Here it is. So NVIDIA, Google, Amazon, Microsoft, Tesla, those are leading the way for the S&Ps right now. And some other in the SPX. Those are the stocks that are driving most of the rally. But it's fairly broad-based. Can
we talk about this a little bit, though? You're talking about this being a broad-based rally, but I'm looking at the NASDAQ. It's up 1.7%. S&P's up around 1.5%. The VIX is only down to 1571.
Only?
Even as only down to 15. Well, it's a 29-cent decline, right?
Yeah, right.
I mean, what does it tell you? Is the index calm because risk is actually falling? Hedging demand is migrating into single names, skew, correlation, and shorter dated options. It just feels like there's a little bit of a disconnect. I personally would have thought we'd seen a steeper decline in vol on a day like today.
I guess. I mean, you'd have to, you look at a chart, and I'm not a big chart guy, as you know, but if you match up, so right now we're basically at all-time highs in the SPX, and you type in SPX, we were at this price in on the 1st of June. In other words, we've returned to the 1st of June. That's when volatility was. The VIX at June 1st was about 16. It was about 16. So it's not really, I wouldn't necessarily expect it to be that much lower. It's, in other words, SPX at this level translates into VIX at some level, right? And of course, the market dynamics change, and you could hit an all-time high, and the VIX would go up, maybe, right? But for now, really, I'm not surprised it hasn't dropped more. I'm not surprised.
Not surprised that it hasn't dropped more. Okay, all right, I'll take you up there.
It could go. Like I said, Chris, it doesn't have to drop much more to kill my short put spreads. So, I'm already long the VIX, small. I don't trade the VIX huge, but I do trade it. And yeah, I need the market to sell off a little bit.
Hey, TP, I wanted to bring two things to your attention that came across the desk here today. First was some trades in AMD, which we covered on Signal versus Noise, so you're going to get the full video out on our YouTube page in a little bit. The second one, though, is going to be a question that we got from Confirm and Send. It actually relates to the P50 here, but let's go to AMD first. AMD reports tomorrow, right? The weekly move is now priced for about 9.66%, which is up about 1% from when I recorded that video an hour and a half ago. It's about 1.4 times, 1.35 times. It's 20 event average of 7.1%. But the recent moves have been really, they've been big. The last two realized moves were 18.6 and 17.3%. So the market's still pricing a little bit than recent history here. I saw some call buyers out on the tape today at the 467.5 right when the market opened. So this is obviously clear in the money. A second leg 7 days out at 522.5. Seems to be the same trader because they were executed at the same exact time. Was pushed through. Smaller position, only about a little less than 400,000 a premium at the 522.5 strikes. I'm curious, when we see this kind of not that you pay much attention to the options tape like the way I do here, particularly for the content side of this thing, but when we focus on these type of volumes heading into earnings, do you ever look at those type of outsized trades around an earnings report and find any information to glean there in terms of strikes to look around, pricing to examine, maybe not saying that you're going to follow the trade, but maybe start considering different avenues for a ticker that maybe hasn't piqued your interest in previous cycles?
Absolutely, Chris, absolutely. So it's, one of the things I do is look at the CBOE's unusual option activity, or whatever the page is called, to see things exactly like this, these individual stocks, options that have higher than average volume, I should say. So the reason I'd look at the open interest, just so like I was looking at the open interest in SMR, is I'm not a firm believer in stocks pinning to certain strike prices. Sometimes they do, sometimes they don't. Certain stocks do. I remember 10 plus years ago, Amazon used to pin at strike prices a lot of times. Doesn't seem to anymore. And so what happens is, and you understand this very well, Chris, is you talk about the gamma risk. Right. So if I see a lot of open interest on the call side in AMD, what does it mean? Well, somebody's short those options. Somebody is. And if AMD starts to creep higher, the delta on those AMD calls is going to start to go up. They're going to need more and more long stock to hedge those short calls. It doesn't matter what the papers, in other words, what the outside trade was. It only matters that somebody is short those options and has risk. And that as the stock goes up, you need to buy a little bit more stock, goes up further, deltas increase that much more. Suddenly you're chasing the stock. And it's that short, why is it called short gamma or gamma risk? Because when you short gamma, it manufactures deltas the wrong way. Okay. So if I'm short the calls, my short delta starts to get shorter as the stock rallies because of the short gamma. It can put upward and downward pressure on a stock. Does it always happen? No, but I like to see it, and I do factor that in.
So when I'm looking at 4 days to expiration here, I notice that a lot of the big open interest prints are around some of the round numbers. No surprise there, 490, 500, 510. But it's fairly consistent. There isn't anything that jumps out to me. There's no 13,000 open interest here. So if you're someone who's looking out to AMD, right, it's not coming up today, but it's a trade that's going to be on the board for some earnings traders the next few days. How do you weigh this scale of risk right now? Do you see this heavy interest to the upside and think, oh, maybe I should go fishing up there? Or do you go, you know what? I'm just going to treat this like any other options trade. What's the math? What's the expected move? Can I get good VIG? Et cetera, et cetera.
Chris, that's basically it. So just knowing nothing else about AMD. Go down and you want to trade 4-day options, awesome. So go down to the expected move, the 435 puts. I sell those. Holy smokes, I need $9,500 to do that short put. I don't want to spend that much money on an AMD trade. So what do? I'll buy the 432 halves. What do I get? 52 cents? Not quite enough. What does that work out? 2.5 divided by 3 is approximately 8. So I'll pull those up, pull my short put spread up until I get about 80 cents for that trade. That's it. And I'm looking at now doing that. I get I'm getting 72s all up and down here. I might just be happy with the 445 buying the 445 put, selling the 447 and a half puts in there. That's it. The markets aren't great, but there's probably enough trading around those options that I could get filled. I'm going to try it at 80 cents.
You know what the kids on Reddit call AMD, TP?
No.
Always minting dollars.
Really?
Yeah, which means the only thing appropriate for me to do around the earnings would be the double bowl, the Super Bowl.
Yeah, I mean, that's fine. And so the point is, we've seen, stocks beat earnings, making all sorts of money, and then drop, right? Great. Okay. So, yeah, always minting dollars. Who knows how that's actually going to be, how the number's actually going to be taken by the broader market. And yeah, you can get all the Reddit people buying AMD or whatever. The market's much bigger than it. Traded 19.5 million shares today. That's some big size going on in an expensive stock, $483 a share. So I'm working that at 80 cents. See if I get filled in a little bit of a sell-off.
TP,
I'm not dying to buy AMD here. I'm not like, oh my God, I gotta get in this. I just am not.
I hear you. TP, we only have a few minutes left here. Let's get to that confirm and send question from this morning. It was posed to Liz and I in the morning confirm and send segment. Thanks for putting it back up on the screen, production. Here it is. If a trade has a 70% chance of making at least a small profit, but only a 40% chance of reaching my 50% profit target, which probability should I actually use when deciding whether the trade is worth taking? Liz and I were working through this, and we both felt like this question had to come in from someone who was thinking about this from the long call perspective. But you, as one of the aficionados, the proprietor of the P50, we figured this would be something better suited for you to answer.
And so just really quickly, so I built both those numbers, all the probability numbers, so I know the formulas. You're asking the right person. So the 70% chance is the probability of profit, meaning that at expiration, do I have at least a penny of profit on that trade? The 40%, and that is a closed form solution based on the normal distribution of stock returns. Okay, it's a relatively simple formula. The P50 number runs out, 1,000 potential price paths between now and expiration, and however many price paths of the stock make an option 50% more valuable, or if you're buying the call, or it's 50% less valuable if you're selling the call, it counts those occurrences, and that's your probability. Divides by 1,000, that's your probability. So that's how the numbers work. In that, if you're dealing with anything less than a week, I would rely on pop. Okay, the P50 number, it is correct, but it can look kind of screwy with very short-term expirations, like AMD with 4 days. Okay, if you're looking at 45 days, 30 days, that sort of stuff, you're pushing it out a little bit, look at that P50 number. Use that P50 number. And as Chris just pointed out, leading into with the question, it is strategy dependent. When you have a low P50 number and a high pop, I don't necessarily think it's probably an in the money call or something like that, or an in the money put. They're buying because you're not going to get a 70% pop on a buying an out of money option generally. It is strategy dependent.
Never seen it.
But I would say just really quickly, you don't want, I would rely on pop under 5 days. P50 be outside of 5 days. Did I say that correctly? Pop under 5 days, P50 outside of 5 days.
There you have it. Sometimes it's better to go to the source itself. It's like one of the debates that's been raising, is it GIF or GIF about those online things that you see? So you go to the founder, and the founder says it's GIF.
You know what, Chris? They're formulas, okay? And they are one part of the trading process. Chris, you and I talked about the open interest and how that can help you steer a trade. Do I want to be bullish, bearish, whatever, blah, 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 blah. What's volatility? It's all, this little pile of information. And the probability numbers are just a piece of that. Are they the only thing I look at? No. I look at some other stuff, but they're big parts for me,
TP, that's the closing bell, 76.28, 109-point gain here for the S&P 500. NASDAQ up 488, 28,891. Oil does come off the lows here. It's back above $80. It was down near 78.40, but it's still a 5.4% decline. Bonds are able to bounce back. TP, it was another interesting day. We have Palantir earnings coming up after hours here. We also have a new run of the show here on Monday. Monday's moving forward. Instead of overtime, myself, Gus Downing, and Jem Karsan are going to be getting together. Tasty Crumbs coming up next. Deeper dive into the options world with one of the industry's best. TP, we'll see you later. Everyone else, see you in a few minutes on the other side of a quick break. You're watching Tasty Live.
Mike, what does it mean to be assigned?
When you are assigned, you are ultimately short an option that's in the money, and the counterparty has the ability to exercise that option. So if you are assigned, it means your option, against your will, ultimately has turned into 100 shares of long or short stock.
What does a green scratch mean?
Ooh, a green scratch refers to stubbornness getting the best of you. And when I say you, I mean me. Green scratch refers to rolling a position, defending a position, and instead of just closing it for less than loss that you're seeing, or maybe a $100 loss, $50 loss, a green scratch is when you close it for maybe a 5-cent winner, 10-cent winner, 15-cent winner. Just the ability to see that green number on your screen and get out in a profitable way as opposed to a loss.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade. You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
So you're an active trader, looking to increase your return, decrease your risk, or quite possibly both. Sure, you've heard of the Greeks. You know, your deltas, your thetas, your vegas, your charms, your vamas, etc. And you're wondering, hey, how do I use these guys to improve my risk-return relationship? Well, join me for a 10-episode crash course, and I'll show you exactly how to do it with all the gimmies and gotchas, one Greek at a time. We'll see you there.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Step into the futures arena with Tasty Trade's active trader. Multiple ladders, hundreds of indicators, precision control. From micro gold to NASDAQ, all CME one click.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
We are back. You're watching Tasty Live. This is a new segment, no longer overtime here on Mondays. We have a special guest, actually part of the network now. You'll see him as a recurring guest here on Mondays with myself and Gus Downing. This is Tasty Crumbs. He's Jem Karsan. Jem, welcome to the network.
Good to be here. Excited for what we're doing.
We're glad to have you back. You've been such an important voice within the industry, within markets over the past years, and so it's great to have you on in a more consistent capacity moving forward. You and I both kind of found our way here the same way. I was a guest on Victor Jones' show all those years ago. You and I talked on Victor Jones' show all those years ago, and now here we are working together. So small world, time goes by. But Gus, I mean, we have Palantir earnings that just came out, I believe, here after hours. So before we get into our conversation, for the viewers that are listening in at home, it is a 132 print after hours after being 125.98 or so at the close. Do I have that right? 41 cents in EPS versus 35 cents expected. They beat it on the revs too, 1.935 versus 1.81 expected. So we'll keep an eye on that in the corner here now. But let's talk about this broader market conditions today, Jam. You know, the NASDAQ rallies 1.75% or so. The VIX falls about 25, 30 cents going into the close. I don't know. I felt like it was kind of a bit of a strange read here. Risk appetite improves, but underneath volatility is not collapsing or compressing perhaps in a way that many traders thought it would. What does this tell you right now? Is the index calm because risk is actually falling, or because hedging is migrating into single names, skew correlation, shorter dated options?
So as we get to the end of summer, we get to a point where implied volatility itself starts to generally expand. Why does that happen? Because volatility in structured products are always a structural supply to the market at the index level, but the flows that come around it begin to expand as we get out of the summer months. And basically the effects of those structured product flows and the things that compress volatility are much more dominant in the summer. And so we've said this before, but as you get to August OPEX, which we're about 3 weeks, 2.5 weeks away, you would expect a significant increase to vol, particularly on a fixed strike level. When I talk about vol, people that know me will understand that we don't really refer to the VIX. The VIX is actually a flawed structure in terms of talking about what's happening to volatility. Underneath the hood, you have skew in options, right? So if markets go down, naturally you slide to a higher implied vol of where things are priced. So just because you see the VIX go up on the way down or go down on the way up, that doesn't tell you exactly what's happening. It's relative to the skewness of the index that you should be looking at. In other words, fixed strike vol. What's happening to the strikes in the implied vol that we're moving to? And what you're finding right now is this is actually at 30 days plus is actually hanging in there, as you mentioned, and if anything, going up. And you're going to start seeing more and more of that after these next 2 weeks. Now, going into August OPEX, it'll be relatively well compressed. Don't go buying kind of VIX futures today. But I'm telling you, 2-3 weeks from here, you're going to start seeing a meaningful uptick. This is why we start to see problems in the fall generally. It's very tied to this dynamic, right? Summers are slow. You would think that they're a liquid. Why aren't we moving all over the place if they're a liquid? It's slow, but that means vol compression. Those vol factors drive compression because the other things aren't as relevant anymore. And so, again, as volume increases, we start to get more vol. So expect realized vol and implied vol to increase. That's from a flows perspective. Then we have the macro behind it, right? Which itself is deteriorating. And this is what leads to in the summer, like weird macro things happening that should be really bad. Like, Iran's not resolved, right? Like the macro realities are getting worse, yet nothing's happening. This is why. But what happens as you start to now expand that vol, stop the compression of vol? Well, now fundamentals can start to have a greater effect. So this is the big picture. This is why vol's hanging in. I'd expect that into a rally as we slide to higher and higher in the market, and implied volatility itself slides to a lower vol that we find a bid. So calendar call spreads, things that where you can own longer dated vol, maybe shorter dated vol, tend to work very well in these environments. But we'll start there. That's kind of from the vol perspective. But why are we getting such a steep rally? Partially because this momentum trade, which had been a big part of the big picture that was stressing kind of the market underneath the hood from a rotation perspective, has seen a little bit of a relief, right? And that's driving kind of a vol compression in that part of the market and a drive back. But we'll get more to that. There's a lot to cover today. This is kind of the first time. But yeah, this is classic summer of George action. A lot of pinball back and forth. But in the index, have we gone anywhere? No. A lot of rotation underneath the hood, and exactly kind of what we would expect.
Yeah, I mean, Gus, when we're looking at this volatility today, it does come in. I know that you're looking for the market perhaps to calm down a little bit here. At least that's how you're positioned right now. I'm kind of with Jem. I mean, I can't remember a professional year in my lifetime where September, October has gone swimmingly. And so when I start to see these 15 prints in the VIX and looking at the expiration calendar in a few weeks, I can't help but think that maybe with stocks getting near the top of their ranges and vol getting to where it's going, put protection's cheap. That's not where you're positioned right now, but how are you thinking about the vol in this market today?
Yeah, the most likely outcome here is a lower realized vol for a couple weeks. With higher and increasing implied vol, with a lot of people scratching their head, like what the heck is happening? This is what happens at the end of summer. In general, generally predates any actual realized vol on the other side. And so what that looks like is, like I was saying, calendars really start to expand. You start to see 60-day vol and 90-day vol, which don't have much decay, that don't have much tie really to that realized vol that's happening right now, start to expand, and the stuff in the short term start to really continue to compress or decay away. But that's really as you get to late summer, a really, really desirable trade. Tends to work. These seasonality effects that are driven by these flows are more consistent than ever. And they're more consistent than ever because the things that drive them, these vol effects, are bigger than ever. And so Gus and I have very different views. I think the three of us have different views of how we all approach this market here. But Gus, you're a more short-term guy. So you hear what Jem's saying here about maybe extending in these calendar calls and knowing how you're positioned right now. How does that affect, your thinking on this market?
Yeah, I mean, I don't know. It's sort of a loaded question. Yeah, I am a relatively short-term thinker, I would say, and not in a macro sense, but with my trades, I'm more privy to what's coming in the next 30 or 60 days. So for me, I don't know. I mean, in a very lower vol environment like the one that we're in right now, it's tempting just to sit on my hands. It's hard to find the spots as this compression comes through, and especially as Jem so acutely pointed out, when we know that there is more vol to come. Obviously, nothing is ever guaranteed in this market, but it feels like a foregone conclusion at this time that we will get some more vol into the end of the year, especially with the administration that we have currently. So for me, it's just about kind of waiting for some attractive premium to present itself, taking some directional plays as I feel that they present themselves, but just not getting overeager and trusting that there is going to be more vol, more opportunity to come.
I mean, you mentioned the Iran war there, Jem, and it feels like some days I feel like I'm taking crazy pills when I look at the headlines. The Strait's open, oil's down 6%, Iran laughs, oil goes back up. There's also like this bullwhip effect that's making its way through the entire commodity market. Diesel prices are still up. The crack spread is still through the roof. So even if oil prices come in, it feels like there's a lot of inflation there. Why is the market so calm right now and ignoring effectively all of the volatility in oil? I mean, is it really Scott Bessent sitting there at his computer at night putting his thumb on oil futures?
So as I highlighted, there's a three-legged stool. There's flows, which matter in the very short term, meaning months, maybe even a quarter, right? There is macro, which tends to be a year type timeline, maybe multi-quarter. And then there is the administration, right? And how it's trying to affect these two things and drive markets. You really need to be cognizant of all three. In the summer, as I was highlighting, the flows are very, very dominant, right? And they're vol compressing. And even if you get stress, the stress doesn't get too big because there's so much vol compression and hedging, implied vol insurance to take in that the whole thing is very stable. The administration, as that other leg of the tool, we know, it's pretty clear, is trying to put their thumb on the scale and doing everything they can to get the narrative machine and the flows and use them to their advantage. You better believe Bessent et al. Know the flows as well. So using that to their advantage. Meanwhile, the third leg of the stool, the macro, is clearly deteriorating in lots of ways, whether it's the long end of the curve breaking out, whether it's the yen-dollar carry trade issues, whether it's the actual demand underlying the market and GDP and whatever metric you look at, it's no bueno, right? And it's deteriorating, to be clear. And it will continue to deteriorate for the reasons you mentioned. but there's still two legs of the stool, which are very, very supportive. And so it's going to, this market is going to continue to do the types of things it's doing, which is macro bad, things start to break down, people freak out, and the administration comes in and the flows are supportive, and it comes back. So the question is, when do the other two legs of the stool start to have issues where the macro, which by the way is continuing to get worse, eventually that deteriorating leg is really gonna completely collapse. We already know that it's happening. And unless, when we can get to the Iran part, unless Iran is truly resolved, which I have a strong opinion we can get into, which it's not going to be. And I've been saying to everybody that everybody's kind of looked at me like I'm on crazy pills, but this is a multi-year pill.
Everyone I talk to, it's like, this is obviously going past the midterms.
Now they are. But were they saying that in March to you is the question, right? In April? No. My point is I've been saying this all along. The memorandum of understanding I've been saying is nothing. Now people see it. It's clear. But the point here is that leg of the stool is kicked out. The flows, and this is the important part, really, really come off the table as supportive as we get into late August and September. And that's important because now it's just the administration sitting there doing whatever they can. And they'll be there till the midterms, you better believe it. And they're prepared, for that other leg getting kicked out. But they're still gonna have a very hard time at the end of the day because the flows will no longer be supportive and the macro is getting worse. And that's what you have to understand. And so I think this is going to get more volatile. It is going to get pretty wild in the fall, you better believe, as vol expands. The vol is also going to expand because we have don't forget, a midterm election where the implied volatility is in rare supply. So not only do we have less of the summer vol, now you start to have demand for hedging given all the risks and everything as we get towards the midterms. And that midterm is, by the way, way more important than most midterms. Because they lose the Senate, they lose control, and that leg of the stool really gets kicked out for years, right? And so you have to realize we're going to get much more volatile with an administration who is going to be more and more aggressive, doing whatever they can, whatever it takes, candidly, because they know they have to keep the markets levitating till the midterm. Okay, so this is the kind of model I would walk through. We'll be here every Monday, and we'll kind of think through each one of these three parts because they're very critical to the outcome. But for now, for another 3 weeks or so, really expect that flow piece is still very well managed. They're getting more and more proactive and aggressive with the FX intervention, all the things that you're seeing from the administration's perspective. So expect that to continue, but the macro is going to get worse and the flows are going to fall off here before too long, and just be prepared for that. So start with the vol, the longer vol part. Not yet. 2-3 weeks, it's coming. And if you're buying it, you can start buying it now, but buy it far out so you're not worried about the next 2-3 weeks compressed realized vol. Right? Don't go buy zero DTE for the next 2 weeks, or you're probably gonna have a problem if you do that. Now that we've rallied, so this is the way to think about it. And again, what does that mean? Well, that means more volatility, more risk. I'm talking about like 10% type pullbacks, meaningful volatility as we get in the fall. And then, but probably, more and more intervention, more and more two-sided action. And then come the midterms, that third leg of the stool really gets kicked out because the administration really has very little incentive to keep this thing levitating, early next year. If anything, I'd argue they want to take it down and take it up again to get this thing squeezing and moving in the right direction for 2028. And there's a lot of things we've talked about, which we'll dive into macro over the weeks ahead, that really likely mean something really big early next year. Yes, you're not on crazy pills. Actually, I think if you're thinking it only macro's all that matters, you're on crazy pills, because that's not how the market works. But absolutely, the two begin to diverge significantly, particularly in the summer.
Guys, he's talking about a lot of chop here through the summer, which, I feel like when I look at the market, I'm looking at my heat map right now, and I'm seeing some sectors and some segments of sectors up 5, 6, 7, 8%. I look at ES, it's up 1.5. This really has been the story of the summer, though, right? Large moves under the surface. The indexes are pinned here. From your view, thinking about the risk map moving forward, does it start to worry you if we're looking at a period where volatility could be rising around the corner, that maybe all these little bets that you think are moving idiosyncratically, asynchronously, they actually could start to move asynchronously rather, which would become the problem? How do you adjust your time horizon around this particular information?
Yeah, I mean, I think it remains important to, I don't know, just keep your hedges in place. As you said, put hedges are very cheap, especially right now. And as I've harped on a number of times over the last few weeks, and in much less eloquent terms than Jem, it does feel like we are in this holding pattern. I'd be interested to hear your input as well, Jem. But I've been saying this just feels exactly like October of last year to March of this year. We test the same level over and over. It was 7,000 in that window. It's 7,600 this time. But it's just, we just don't seem to have enough momentum to really break through the surface. As it pertains to your question specifically, Chris, if we are expecting vol expansion in the coming weeks, I do think that would worry me. Maybe not even due to the asynchronous nature of things, but we are in, I mean, today is sort of a perfect example of what happens if we're in the perfect environment where vol is completely compressed, where it feels like we're ripping higher and higher. And I must say, I feel very strongly that we come right back down tomorrow. The momentum just doesn't seem to be there, doesn't seem to be sustained enough for us to put in additional legs to the upside. We're seeing the capital rotation happen now. The macro environment continues to weaken, or trust continues to deteriorate in the news in this administration. I do think that paints something of a scary picture, and it's something that everybody should certainly be prepared for. There's obviously no such thing as infinite growth, but in this administration, it's tough to feel like we can have even continuous growth for more than a 2-month insane rally to the new level before we stagnate and start to hold these levels.
Chris, I want to add something here. So the dispersion that you're talking about is a feature. It's not a bug, right? When you have index vol compression, the index itself is pinned, and you have plenty of implied volatility. Structured products are just selling vol to dealers. That compression at the index level, by definition, and most people don't understand this, is very, very important. It forces, because there's idiosyncratic risk, right? Some new news comes out, Palantir's up. If the index can't move, let's just say we lock the index because of index vol compression. By definition, that means something else has to go down. And so what you've seen, if you go look through 2017 and you look at 100 years of history, correlation is in a very tight band. But starting in 2017, you see correlation break out to records and just keep going. At first, people were like, oh, this is a one-time thing. This summer, for example, is the highest dispersion we've ever seen in 125 years of history.
Right, yeah.
That is not a coincidence. That people try and have a fundamental perspective. They always start with fundamentals. So they say, oh, it's because all these crazy macro changes are happening, and that's driving different outcomes for different stuff. No, that's not the reason. The reason is because compression's happening at the index level, and that forces actually a higher realized vol at the single list constituent level. By definition, by arbitrage constraints, if I hold the index in place, you're going to have higher correlation break. You're going to have higher volatility, the constituents. This is counterintuitive for most. Most are like, well, the vol's compressed. Look at what's happening. This is crazy. It's not crazy. It's actually because vol is compressed. And to such an extent, we were in May vocally, aggressively talking about how expect the biggest dispersion ever this summer because of the vol compression before it happened. And not just that, we said expect the crazy move in momentum to turn, and that to be the primary, entity that gets hurt in this rotation we're going to see this summer. People are like, how did you call that? It's not because of macro. It's not because of anything really changed at the momentum, at the memory level or whatever. People will put a narrative on it. But it's because all the call positioning in that momentum area you had record call positioning, record implied vols. It had just run 50%. The bar at which that would have to keep running in order to make those calls, work for those customers was not likely to be there. And guess what? All the dealers are short those calls and long stock or things that look like stock against it. And as the index compresses, right, and it has the opposite positioning, short put, long call for dealers, right, at the index level, that part started to get selling pressure. We know this is also the driving force because as you went into June OPEX, as you went into July OPEX, you start to see the greatest weakness in those areas, right? And the greatest relative vol pinning at the index level. So we were able to really map out what was the likely probability of these outcomes just as a function of the summer flows and the positioning in the market. And now these things can reflexively start to have bigger effects, right? Because what happens if momentum keeps going, right? Then it can, as vol becomes uncompressed to the index level, now it can cause greater stress and greater issues. But my point here is the dispersion that you're talking about, the kind of scratching of head, why are these things moving in such a crazy way while the index doesn't move, are actually a feature of the whole vol compression. You know, it is not, it seems extraordinary. It's actually what one should expect once you take a lens of positioning and options, vol in the market.
Water always finds a level, right, Gus? I mean, let's go to one final topic here, because we obviously got to cover a lot over the next few weeks and months, but you've alluded to this elsewhere. You've certainly mentioned it here on air to a certain degree. You've talked about owning 45, 60, and maybe 90-day volatility. I'm seeing 45 and 60 runs through that August VIX expiration, August OPEX, and the September FOMC meeting. The 60-day window also carries you through quarter end. The 90-day window runs through November 1st, which captures the October FOMC and ends just 2 days before the midterm election. So, I mean, do you still want to own these types of vol structures, 45, 60, 90-day? Which one do you think is the cleanest, just conceptually? Which one do you like the most?
I'd really
right
like
now
to own
after-
post-midterm, candidly. Like, it's really the 90-day plus. Why? I think the midterm vol is underpriced. We've seen this before in 2024 with the presidential election. That vol usually at this point starts to really climb independently. Like the event vol of that event is underpriced. And so outside of just the regular vol pricing, there's an event vol for that event, and that event vol should have a tailwind to it. And anything behind it will capture that. So I think that's critical in what we're buying right now. People are historically looking at midterms and saying, okay, this midterm maybe should have XYZ vol. I think because of the placidity in the summer, there's also expectations that that period will also carry some type of relationship to what we're having now. And what we've seen now is once we come out of the summer, all of a sudden those expectations can fly. Often people can begin to realize, well, wait a second, maybe this is as important as a presidential election, which I actually believe it is, maybe even more so because of all of the things, because of where the market is from a fundamental perspective, not just in terms of how elevated valuations are, but how fragile and tied to one thing it is in terms of the market itself, and the capex that's coming out of it is so critical. So we have a kind of a fragile
administration.
Market. Yeah,
it's been all of its chips on AI too, right?
And that's
So
because that
if
leg
you
of
get
the stool, that administration, right? We laid out is so important. Sorry to cut you off, Chris.
No, go. It's like an important point. Like if you get a change in government, does this federal government's policy, which has been hand over fist, whatever AI in the entire industry needs, does that disappear? Because who's going to write those checks now moving forward?
It
A
used
Democratic
to be
Congress?
macro and flows with the side of administration. The administration's actions are everything here, and we know that because it's driving that capex growth and the support in that part of the market, which is driving the whole growth itself. So point is, once you start to look at what's driving the positive kind of action, and you realize how dependent it is on this administration, what now happens when you have an election that determines how much control that administration has? Is that important? Is that maybe more important than the last presidential election? Probably, right? And so it's just not being priced that way. So my point is, if you're going to own vol, further out is better anyway, because I do think the next week or two that we're not going to get probably any, because of vol compression at the index level, any incredible fireworks yet. But it is going to come, an implied vol, like I said, even throughout that low realized vol could start to really expand. So I think there's an opportunity there, and particularly with maybe funded a little bit, as I was highlighting before, with some of that shorter term vol.
Gus, Shem Gerstley gave us a lot to chew on here tomorrow when we're on the network. We're going to have to break things down with Errol. We don't have Mike and Jamal tomorrow, so it's going to be you, me, Liz, TP. But this is a fascinating conversation. Gus, you get the final word here. Last thoughts.
Yeah, last thoughts. I mean, I think there's a lot of great substance here. 2028 midterm, very important thing. The importance of it is dawning on me a little bit now. I love the three-legged stool analogy, because if a three-legged stool loses one, you could balance on those other two for just a few minutes, but it's gonna fall apart on you. So yeah, this was wonderful, Jem. Thank you so much for joining us.
Wonderful being here. Looking forward to every week.
All I got.
Excellent. This has been the new Tasty Crumbs. It's going to be here on Mondays, 4 Eastern, 3 Central, in place of overtime. Jem Karsan, myself, Gus Downing. Be sure to join us. Set your reminder. If you're on YouTube, like and subscribe. What are you doing? Follow Jem. He's on social media. He's everywhere, and he's going to be here on Tasty Live now on Mondays. Thanks for tuning in. We'll be back with some commercials and then more Tasty Live. See you later.
What's up, Tasty Nation? Welcome to the show and welcome to August. It's Monday, August 3rd. My name is Mike Butler. I'm here with Errol Coleman, and we've got an interesting week of stuff going on for you in the market.